Good morning, Tasty Nation. Welcome to the show. It is Tuesday, July 28th, and we've got yet another day to wait until the big tech stocks report earnings, but we've already got some earnings to talk about. We got a little choppy market right now. My name is Mike Butler. I'm here with Jermal Chandler. And Jermal, I hear you had some leftover now calls that you happily woke up to.
Yesterday. Yeah, when the names were moving, as soon as we left here, the live show, going through looking around at some of my positions, and well, we noticed immediately yesterday chips were down, which obviously means that the software names are up and consumer staples names are up yesterday. And NOW had earnings the prior week. Came in yesterday. That was one of the software names that was up. That was pretty nice. So I had the 110 calls. Stock ended up trading like 108 and change yesterday. You know what, Mike? I would not be surprised if today is going to be a similar feel. So far, we started this morning. We got the chips down. It was a big sell-off in Asia last night, specifically in Korea and South Korea, where a lot of these chip names, are kind of domiciled, and that's a big industry there. We've heard all the news about that area, and the Kospi was down. It's down. I'm looking at it right now. So something just came across the screen. Kospi's down 34% from all-time highs. It was down another 9% overnight. Had another circuit breaker. It's the 9th circuit breaker of 2026. And so there's a lot of volatility that's been going on over there, and it sometimes bleeds into here. If you look at SanDisk right now, if you look at Micron, those names are all down this morning, and I would not be surprised if that ends up being we get a day two of what we got yesterday. Those names down, software up, consumer staples are up. But that's why we wait until the bell and we see what actually happens.
Yeah, I mean, you nailed it. Microsoft's up from 389 to 395 pre-market. SanDisk is down 100 points pre-market, and this thing was trading at 1,500 yesterday, and now it's going to open at 1,182, or at least right now. Micron, similar story, down to 841. That's down 60 points. That's given up almost 200 points in 3 days. It's nuts.
What's the expected move on the week in these names? I wouldn't count on this the rest of the week, though. You know what I mean?
Yeah, 90 points. So we're basically, we're at the expected move pre-market now in Micron. And then SanDisk, similar story, by a couple hundred points. But yeah, big volatility for the rest of the week here. 200 points in SanDisk, almost exactly. SMH going to open down 15 points here. Trading at 533 pre-market, closed at 548 yesterday, and it was trading at 580 2 days ago. So just insanity in the chip space.
Well, it's July 28th, so month to date. I'm looking at some numbers here. WDC is down 22%. SanDisk is down 43%. Micron's down 22%. Intel's down 34%. Marvell's down 36%. To be honest with you, I think this is a good thing. I mean, look, I know those numbers sound ugly, but all we've been talking about was, God, the run in these names. And by the way, I think, something like SanDisk is still up like 300% year to date. So this is, sure, it's right now, looks like blood in the streets, but I mean, we needed a pullback, dude. Like, what do you want me to say?
This doesn't last forever. Like, the higher the angle of the chart, the more you should expect to see a velocity move to the downside. You saw it in literally anything I can pull up here. Crude oil, same story. Gold, same story. Silver, same story. Like these are all like you cannot expect a vertical bar to just continue higher. And that goes for SanDisk, that goes for Micron, that goes for SMH. You might be like, well, SMH is an ETF; it should hold on to its gains. Well, SMH is made up of all the chip stocks,
right?
So no. But yeah, I think you just have to, at a certain point, you have to realize like these runs are generational runs and they don't last forever. That doesn't mean they can't reach highs again.
Right.
I think they will over time.
Yeah.
That's how these markets work, and markets work in general. You'll have passive flows into these names for time to come, but right now, just not looking great.
I mean, the great thing about this, I feel, is now, when these things have earnings and earnings are out the way, some of these names, Intel is kind of one of them. I already have a play in it, and I put it on last week on the trade of the day, ratio 1/2. But now I think at some point vol is going to start to, if they calm down a little bit as far as the selling, I don't know, like I'm sure, and I wouldn't blame them. And again, this is another situation where I can't wait to get Tim's thoughts today, because Tim, again, he's been short a lot of these names. That's probably worked out really well for him. And when you're short like that, at some point you're starting to think when to cover, or is there more blood in the streets? And so this is that pivotal time, I would say, right now for a lot of these names in this space.
Yeah, for sure. Join us on the YouTube channel. If you haven't already, we're streaming live on tastylive. You can throw in your trade ideas and questions on the right-hand side chat. I know there's going to be questions about a Super Bowl, Super Bear. I don't know. I feel like I don't have a pulse on today's market, which direction we're going to go. But maybe Chris Vecchio does. We have him on the line. Chris, how you doing this morning?
Good. Actually not good. My son is teething or something again, which is fantastic because we're very proud of his progress. But he was up from about 1:30 until about 4:30 last night.
Yeah, I remember those days. Yeah, I've been there.
Yeah. So we started off the day with not one, but two of Celsius. We're not branded or sponsored, but I'd be happy to sponsor Cherry Cola Celsius.
Hey, man, I remember those days. Yeah, there's another side. Don't worry. There is another side you're looking at. This is the other side. You know what I mean? And one kid's out of college. One kid's on his way to high school. The last one is. You're 50. Which one do you want to be, Chris? You decide. You decide.
I'm on the Brian Johnson life path, so God. I'm never going to be 50.
Oh, man.
I don't know what you're
I don't even know who
that documentary is so wild. Brian Johnson, I think he created Braintree and sold it to, right?
That sounds
created Braintree, sold it to PayPal.
Oh, did he? No kidding. I remember Braintree, sort of. I don't know.
So, yeah, now he's on this path to, not die. That's his thing. So there's a documentary of him taking 600 pills a day and doing all these blood tests, and
I do remember
down his aging process to the lowest on record.
I do remember hearing something about this. Yeah, kind of.
But now he has some stomach issue.
Yeah, well, speaking of. But
yeah, he went as far.
I already got that. Ulcers are here. Yeah. We're longtime friends.
Oh, jeez.
Brian's son actually goes to DePaul. I'm pretty sure he's in the city somewhere.
Wow.
I went on a deep dive after I watched that documentary. I was like, what is happening?
It happens sometimes.
The dude took his son's blood to transfuse into his.
Oh, he's a nut job.
He's a vampire.
I was gonna make a Dinochrome Blood Boy joke, and you just totally took that from me.
You can still say it. Just launch it.
Next time.
But yeah, Celsius sitting at lows. So it could be a nice investment time. But
we need Dr. J pumping it. He's pumping every other energy drink on the market on his Twitter page, except for Celsius. This is a conspiracy.
There he is.
You guys been talking about Celsius a lot recently. I saw that in the chat. You guys had a little energy drink discussion going on. I popped in. I was like, what the hell is going on? I was like, you know what? I'm out.
I mean, Celsius is Zappia. It's 200 milligrams of caffeine.
I used to have a Red Bull regularly every day for a while.
Red Bull's only 80.
Yeah.
This stuff.
Well, you only need a certain amount.
Yeah, this stuff now is through the roof.
Yeah, Red Bull gives you wings. Celsius gives you a rocket.
Yeah.
Okay.
That is true.
Any of these earnings that you traded overnight? I mean, some of them were kind of boring. PayPal, Boeing. I don't know what else. We had another one too. At least three that were. Oh, GLW. That worked out for me, by the way. Trade of the day. I'm on a heater, man. Look, I'm gonna put it out there. Look, we do a lot of work putting these trade of the days together, okay? And so I'm just gonna say, I'm gonna say when they're working out. I learned a long time ago, if they're working out, you say when they're working out. When they're not, that way, because when they're not, you're gonna hear about it anyway. So those have worked out. I've had a couple of those working out, okay? The oil trades worked out. Intel's worked out to some degree. Still verdict on that one. And GLW, told you guys to sell calls yesterday. We sold call spread, excuse me. Sold call spread, worked out well. Inside to down, that's what we've been saying on a lot of these names. This is probably a little more than outside of move, I think. I think the expected move was 15, but it's down. And that is not a surprise at all. We've seen these tech names on earnings more recently. Same deal.
Yeah.
It is such a clear dichotomy. It's like if there's two baskets here. There's AI related and there's everything else. And the AI related stuff just seems to be consistently going outside of their expected move. The non-AI stuff simply seems to be going through the vol crush. So, I mean, I was trading Coca-Cola, GLW, UPS, So it looks like all those will work out. Boeing, I couldn't get filled on. I tried getting filled on. I'm now going to go into something for Visa. I was looking for something in GSK. But when you look at their earnings this morning, PayPal, UPS, Coca-Cola give you pretty strong reads on the consumer, on transportation, on pricing margins. No one cares, because the index concentration is in the tech stocks right now. So the news about ASML, for example, China, a Chinese state-backed company, is standing up a DUV process. It's different than EUV lithography, but it's still an important part of the chip-making chain here. And so it's just another, question now that we have in this long list of questions about the tech sector, which is to say, is the entire supply chain becoming less predictable? Is it becoming less profitable along the way? Because we know when China stands up a manufacturing industry, it tends to bring prices down dramatically. So what happens to the margins of these companies? What happens to their residual equity value? That's clearly more important than whether or not Coca-Cola is able to, continue to turn a profit despite the world being turned off from sugary soft drinks. And for the foreseeable future, right, that's going to be the big issue. So as nice as my Coca-Cola trade is, my ASML position is probably taken a little bit of a beating here this morning. And so, Procter & Gamble, Kimberly-Clark, I really like doing this earnings cycle, the directionally neutral vol crest trades through the non-AI stuff. That's where it seems to be working for me.
Well, it does seem like we're going to have another day where chips are going to be down and software is going to be up and maybe consumer staples, but we'll see how the day goes.
Yeah. It's kind of funny that Coca-Cola is going to open at all-time highs and
hell yeah,
everyone's off the sugary drinks. Kind of
absolutely.
It's
well, these companies have been investing in those type of things, right? The Celsius of the all, and I don't know. I mean, obviously Celsius is its own company, but they have been going to. I don't know. I grabbed some little drink the other day in Target, Bloom. Some Bloom drink or whatever, and
Bloom
like
Energy,
Poppy,
yeah.
right? No, not Bloom. Yeah, I know, right? I almost said that. Yeah. There's all these little drinks, right? Like Poppy is the one. Isn't Poppy the one that got bought out by somebody, maybe Coke or Pepsi, right? And so there's
Pepsi.
And so now everybody's creating one of these drinks. Pepsi is Poppy, and so every one of these drinks that they're creating now, whether they have influencers and they're trying to get them to be the next billion, because they have to buy these, dude. Like people aren't drinking. Well, I shouldn't say that. People are definitely still drinking Coke and Diet Coke and all that. But they still have to get some type of investment in something else.
Yeah. And really, like, the social media has allowed these companies to launch and get acquired by these other companies. Like there's no way that these companies would exist without social media. A lot of these companies, I would say.
I have a buddy who did the brand design for both Olipop and Poppy. And so when one got acquired and the other didn't, he was like, I come on top either way.
See, there's trading all the time, right? You buy two things, you see which one plays out. Speaking of, how do you feel about these names right now? We talked about it, and we mentioned it before the show, but I mentioned it during the show. I mentioned it again. WDC month to date down 22%, SanDisk down 43%, Micron down 22%, Intel 34%. I mean, is this like a correction that needed to happen, or is this going to get more blood in the streets? How do you feel? How do you feel about it right now?
I mean, a few weeks back, guys, we were flagging the stories about South Korean retirees liquidating their funds in order to invest in 3 times levered semiconductor funds, right? And the line that I said a bunch back then, I didn't monetize this view considerably. Ilya certainly did. Tim Knight certainly did. But it's like, we don't know when this ends, but we know how this ends. And it always ends the same exact way. And so is this still the bust? Yes. And now it's a bust of an over-leveraged trade that's now being fed a lot of negative catalysts along the way to help spark the pullback. Have the underlying business conditions changed? Maybe. If you're going to see a legitimate increase in a chip supply over the next year or two, if you're going to have Chinese competition on the market, that could change the equation here for the semiconductor companies. If you're an American company and you're, say, a Meta, and you now have an alternative, and you can get chips that, can we see the Trump administration stepping in here and banning these cheaper chips at some point? For sure. But if you're a hyperscaler right now and there's more alternatives coming into the market, all of a sudden, maybe your free cash flow doesn't look so bad anymore because you don't have to spend $1 to get what you need. You can spend 75 cents. And that can be a little bit of relief there for the Mag 7 name. But enough relief to counteract the run-up in the semis, obviously not enough. The NASDAQ is still down 1%. You can look at the S&P 500. It's basically flat today. Last time I checked before I came on air. So stay away. Tech is just the albatross right now. And I don't know how you'd want to jump in front of that with all the hyperscaler earnings coming up the next 48 hours.
saw a big commercial about Meta last night. Basically planting their flag with AI.
Bro, do you know how cooked we are that Meta why are they sending Zuckerberg out there? Okay, to be the guy to be like, yeah, AI is really good. It's really helpful. Jensen Huang just got a Twitter account. I mean, guys, that's how down bad things are right now.
Yeah. Hearing it
he
from
hasn't
the
needed to
horse's
have
mouth.
he hasn't needed to have a public presence to promote things.
I know, right?
Ever.
Yeah.
And now all of a sudden, Zuckerberg's on X, Jensen's on X. They're both talking about the bona fides of AI.
Really? I didn't know this. Hey,
Well, you're not terminally online like I am. Get a life, Jermal.
Oh no, I am. I just I filter it a whole lot. I filter it a lot for that reason. It's it's a rough time. Like we said, these stocks are down pretty big. I choose to see this as the opportunity of they're down pretty big. Everybody's talking about them more and more once again. Like you said, we saw the headlines a few weeks ago. We've been waking up. We just had the 9th circuit breaker of 2026 in the Kospi into these names. And I feel like, volatility had kind of quieted down a couple of weeks back in these names. Now it's ratcheting up again. I feel like it's an opportunity, to be honest with you. Well,
it might be. One of the things that technicians look for on charts, and we're going to have a great conversation later on air with Helene Meisler at noon Eastern, 11 Central time. So be sure to come back and tune in for that. But one of the things that technicians, like she points out, and I'm looking forward to discussing this with her, is when you see these big volume spikes, right? When you see these excessive moves of participation, one way or the other. When you get those big volume spikes, they typically mark local highs or lows. Yesterday was the biggest volume day in SMH ever, a capitulation day if there ever was one. So yes, there's obviously a little bit more weakness overnight. If you're looking at CLAC or WDC or pick a name out of the hat, STX, Micron, Samsung, right? They're all down bad. But when you see those type of volume figures, it does make you think that maybe folks are kind of like throwing it in and they're giving up on the trade. And so it's worth noting. And just as an example for this, TP and I were talking about this Liz and I were talking about this with IBM after their 26% drawdown or so a few weeks back. And we were looking at what the forward returns were after you saw such a volume spike, because historically speaking, those type of volume spikes don't appear that often. It was 8 times the average monthly volume the day that IBM declined like that. When you looked out 1, 2, 3, or 4 days, yeah, you saw continued declines. But once you went out a week or 2 weeks or 3 weeks, you saw that the market had stabilized here. Mm-hmm. And so using that information, right, do I want to trade 0 DTEs or 4 DTEs, right, depending upon where you are in the cycle for a name like IBM? Probably not. But in terms of maybe looking at it 30, 45 or so and taking a swing, it could be worthwhile. And sure enough, it was. So listen, this could be a process here, but let's keep an eye on the volume, and folks should definitely tune back in today at noon Eastern, 11 Central, when we talk about that volume implication with Helene Meisler, which we know is a favorite. I mean, those YouTube videos for Trading Trends get more likes, more views than anything else we've done.
I always like to blend some form of what I learned professionally with what I've learned here at Tasty and together. And I've told Mike this a couple times. Actually, you met the guy recently, one of the biggest vol sellers I know. Every single time you have the big move down, or usually with the big move down, sometimes with the big move up. But after there was a huge move and the vol spiked, that's when he was stepping to sell vol. I'm like, what? Are you crazy? Like, because it's just the recency bias of the huge move. You're like, another one's got to be coming. And sure, sometimes another one did, but more often than not, you'd reap those benefits of the vol spike. And that's kind of how he played things.
Yeah, the vol, I have the volume on the bottom of the chart here, but yeah, SMH, huge volume here and greater than any bar you can see over the last handful of years here. And yeah, that was massive. Same with IBM, same story. This is even greater.
Yeah, I didn't know about that.
Getting higher and higher as I go further out in time.
Holy cow, 38 mil.
So yeah, insane. Hopefully that's the case, and we get a rally in NDX up to 28,000, so I can make $20,000.
Yeah, be sick. I am not touching that thing. We'll see what happens. But by the way, they've been buying this market a little bit since we've been here talking some, and the Dow is up almost 1% today. Must be related to Boeing in some way, right? Some of the other names, maybe UNH is up again, which I will gladly accept if it is.
That's one of the odder. That's really, this is one of the odder wrinkles of this entire market right now. If you were to open up RSP, gentlemen, on your chart, that's the equal weighted S&P 500. It's about to open up at a level where if it closed there, it would be an all-time closing high. So money is not leaving the marketplace right now. And I think that's that's such an important distinction now for traders. I see a lot of the bears. Some bears are winning in some cases because they're in the right pocket of the market. So if you've been shorting the NASDAQ or short semis, you feel like a genius. But when you look across the tape, when the equal-weighted S&P 500 and the Russell 2000 are holding up at the way that they are, it speaks more to capital rotation within the index. And so we are at the end of July here. I want to take a step back. It's now June 30th, we'll call it. June 30th was a Friday, I think, right? Nope, it was a Tuesday. June 30th was a Tuesday. So actually, a month ago, perfectly, 4 weeks back. And we were talking about July seasonality. And yes, we were mentioning, 11 for the NASDAQ. This thing never goes down in July. What's the problem? One of the wrinkles there to it was one of the tendencies that investors have shown over the past 10, 15, 20, 25 years is that while July does produce a rally, it also does produce a churn. The winners in the first half tend to be sold down. The momentum names get hit hard. It's all of the value crap that tends to rally as people are looking for better opportunity and taking some winners and locking in some gains. And I have to say, it feels like that's what we've done this July so far. Because you look to your consumer staples names, they're doing pretty well. You look to your retail names, they're doing pretty well. You look to the leaders in the first half, tech, semis, they're getting clobbered. And yet RSP is sitting right near all-time high. So capital has not left this market. It has simply rotated out of the crowded spaces. Yeah,
there has definitely been a lot of cash still being deployed. As a matter of fact, we have a chart for it. Showing that cash on the sidelines is at a record low. I mean, it really is. There's a lot of money still being deployed in this market, and every day, like I said, I come in, you can see the money's rotating out of one area into another, whether it's in the chips or whether it's in the consumer staples. But we've seen like this. There's a lot of money still out there in the market. It's just being pushed around quite a bit. So, yeah, I mean, this kind of shows you there's a lot of cash that is out there still being moved around. And that's the interesting thing about it. I feel like, speaking of, today is going to be another day where we see these chips kind of down and we see the consumer staples and we see the software names up. Now, as we roll into the end of the day, who knows where we'll end, if it's still going to be that case, or if somebody says, you know what, not somebody, but the market says, you know what, it's time to buy these chips down here and we're going to reverse this a little bit. I think that's the interesting look for today, all while we obviously got a big Wednesday coming up.
Yeah. And a lot of these companies that are reporting, Apple, Amazon, Microsoft, Meta, they're all up today. Apple's up 3 points pre-market. Amazon is up a couple points pre-market. Microsoft is up 7 or 8 points pre-market. Meta up 6 points pre-market. So maybe you see the Mag 7 start to lift this thing.
Semis down, hyperscalers up.
Right.
Yeah.
Right?
Yeah.
If it's going to be cheaper to buy chips in the future, that's less dollars going out of their pockets. And that means free cash flow can be restored. This is the single most important story of the earnings season. Yes, you're spending a lot of money. Are you monetizing it? And when are we going to get our money back? So stop adding more capex onto the bill, because it means you're making our waiting time longer to achieve our returns that we require.
Yeah, let's start putting up these. We got a couple of earnings things here from the names that went overnight. Let's start putting some of these up. Take a quick read through on some of these. The Boeings, the PayPals of the world. Oh, Boeing. Oh, boy. Remember when this stock was really struggling? It seems like it's kind of been on the way back.
Yeah, it's up a couple points. Just rallied a couple more points pre-market here, up to 214. I threw on a call diagonal spread yesterday. Mm-hmm. So I've got this 215 long call for September, then a 225 for this week. So the 225 will likely go to zero today or close to it, and the 215 should hold or gain some value. So we'll see what it opens at, but it could be a couple $100 winner.
Could be.
Sure.
Yeah, I did call calendar $200 for those 225, 230, 235. It's not going to really play out, but who knows?
The 225 could hold.
Good.
See.
Good. PayPal, what is that doing?
PayPal up $2.
Yeah, PayPal was the one that was rumored buyout not long ago, right? Yeah, we see the big jump there.
Yeah. That was the vol crush that Chris was referring to.
Mm-hmm.
Either you're getting hammered or you're crushing ball.
Yeah, and it's like, are you an AI infrastructure company or not? And that, I would say the high degree of certitude. This company had an inside move. It probably wasn't AI related. This company blew out earnings and fell below the expected move. Probably AI related. And I don't want to overthink it right now.
Mm-hmm. Mm-hmm. Visa had earnings. Is it still everywhere you want to be? Am I just aging myself there with those commercials? Those commercials were really cool back in the day. It made it look like really interesting.
Yeah.
You know?
Yeah, those Visa Bucks cards, I remember seeing commercials for those, and I was like, oh, Mom, Dad, like, I need a Visa Bucks card. Like, don't you trust your son? Like, teach me financial responsibility. Give me a little bit of money. Let me spend it. Let me show people how I know what I'm doing.
Oh, my God. Can you imagine having this dude as a kid? I bet you said exactly like that.
And like, let's just say high school. Like, what is it? Similar but different, or what were you doing in high school?
No, remember, I mean, like, middle school, very rotund, short, fat, nickname Meatball. So go into high school, start rowing, grow 4 inches one summer. My personality completely changed. Chris gets out of the friend zone, becomes more of a popular guy, you know? And so.
I like it.
That's great. Oh, man. No, I feel you. A lot of people think like I was always just talkative and gregarious. No, I was quiet as hell, man. I was really quiet. But I moved around a lot, too, as part of it.
I remember this one kid tried getting the nickname Spaghetti to stick around because I was like, oh, you're so tall and skinny now. It's like, no one's calling me Spaghetti, man. Get over this.
Yeah, really.
That was from 6th grade. We're in 9th grade now. That was a 6th grade thing, okay?
I love it. Hey,
oh, man.
Glow up. The glow up is real.
It's real. It's real for sure.
Well, Chris, thank you for your insights. Appreciate your time. We'll let you go, and we'll see you a little bit later.
Yeah, man.
See you in a little bit.
Sounds good. E-minis up 10 now. NASDAQ down 170. So, yeah, definitely a sell-off here in a lot of these chip stocks. Micron, SanDisk, you name it. ASML, all down big. SMH set to open down 15, 16 points from yesterday's close. But to Chris's point, RSP about to open at all-time highs or reach all-time highs if we can keep chugging along here. So, yeah, money not leaving the market, but that very specific sector is getting decimated. But again, it should not surprise anyone. You can't expect this to go up forever, and the liquidity being zapped from the other products continuously flowing into chip stocks. It doesn't. It won't hold forever. So.
And again, the thing here is that a lot of people expected this move. A lot of people predicted this move. But a lot of people thought that when this move was happening, the stock market was going to be burning down and we were going to be on fire. And I think we said this a lot over the last couple of months. It didn't appear that was going to be the way this went down because you would see these rotations that we've been seeing and we've been talking about for weeks on end now. And that's been the thing that's, actually, I love seeing that. Particularly because I'm positioned such, and it's worked out well. If you've been long, not only chips somehow, but if you've been long consumer staples, if you've been long software, you've seen that rotation every single day, and we're going to see it again today. Yeah,
and there's always opportunities out there. If you were long the chips going up, that's an amazing trade. But hopefully you realize it's not gonna continue. These stocks are up 5-6x like from just this year. Some of them. So. But I think it's a good sign that we're seeing products like IBM catch a bid, Microsoft catch a bid, Apple, Amazon, Meta, like all the Mag 7 stocks where you'd expect to be at highs in a market like this when RSP's near all-time highs, I think is still a long-term bullish signal that we're getting just for the fact that like these products are going to eventually get back to highs. Microsoft, Meta, Amazon, Apple, they're just so big that it would be shocking to me if they ever could not get back to 550 in Microsoft, for example. It's just not something I foresee. So what does that mean? I think that just means you have E-minis at 8,000 eventually. You've got the NASDAQ well above 30K. Don't know when that's going to happen, but it's the writing on the wall.
Yeah, I think we have another April/May type of run from Microsoft in it.
Yeah. But yeah, craziness across the board. We are going to take a quick break in a few seconds here. But again, join us on the YouTube channel if you haven't already. Throw in your trade ideas, questions in the chat, and we'll get to them shortly. But yeah, we'll be back on the other side of this break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got some morning movers right now. E-minis chopping around, up 6. NASDAQ down bad, down 200 points. I got Jermal in the house. We got Gus in the house. Welcome back, Gus. How you doing?
Doing good. Yeah, I leave for 3 days, and the bottom just falls out of the chips. The chips, the memory, all of it. We're falling apart.
You were the memory
We're
holder.
done with AI.
Yeah.
What's the new thing? What are we excited about now?
Coca-Cola.
Okay.
Yeah.
Okay.
All-time highs.
You know what?
And energy drinks.
It always circles back to Coca-Cola.
Yeah.
They had it figured out in what? Well, when did Coca-Cola start? 1850s? I don't know.
Yeah,
It's been around a long time.
Yeah,
They've had it figured out for
cocaine in their
150 years.
Yeah. That was original.
Maybe they'd sell more of them if they kept doing that now. But no, yeah, I'm doing great. Happy to be back, and we got some fun stories even outside of the broader chip memory drawdown that we're seeing. My leading story for today, which I suppose this isn't maybe the story that's going to move the market the most today, but I think it just adds to our this dystopia that we continue to form around us. Apple has rolled out a partnership with Klarna. The partnership is called Upgrade. They are now going to lease iPhones for as low as $17.99 a month. So the iPhones, this is all Apple devices are a part of this Upgrade program. iPhones, Mac, iPad, Apple Watch, whatever. iPhone, iPad, Apple Watch, you can choose a 1 or 2 year lease to own arrangement. The Macs, you can choose a 2 or 3 year lease to own arrangement. They're doing all of this to combat their increasing prices due to the increasing cost of memory and chips and everything else going into their devices. We've seen some Mac models go up by as much as $1,000 in the last year. So Apple's trying to combat that by letting you pay just a little bit a month. I will say, you've been able to finance iPhones through AT&T or whatever, your cellular service provider forever. When you sign up for a plan, often they'll give you a free upgrade or give you an upgrade and just kind of let you amortize that down baked into your monthly cell phone plan. So this isn't exactly a new concept, but it is the first time that Apple is trying it directly. You now no longer need that third party to lease an iPhone if you don't want to. So lease to own, financing, very similar terms, but biggest deal is for Klarna here, who has really been hurting over the past couple of years. Finally gets a big name to take a swing at him.
Interesting. Love it. But this is the dilemma here. Expensive stuff. Nobody has money to buy it outright. Got to finance it.
Financing subscription model. Subscription model continues to win, and now they're involving another partner. And you'll just be paying for iPhones forever in a day, and you'll just forget about it. Yep. That's the way it's going to go.
You will own nothing and be happy.
I will say there's a really good opportunity here for marketing. I feel like it's called Upgrade.
Upgrade is the plan.
I mean, I just hear the Beyonce Upgrade song playing in my head. You just got to do a commercial with that. It's probably going to cost them a lot more money to get that song from Beyonce than, whatever else, but they have the money.
Yeah, Apple's marketing team is really strong. These ideas, I'm shocked if nobody's thrown this around in an Apple boardroom already. That we gotta work Beyonce. Get Beyonce herself.
No doubt.
Yeah, let's just have her.
It.
Yeah. If anybody can do it, Apple can do it.
Yeah, Apple's up $3 pre-market, likely in line with this story here, but also all these other Mag 7 stocks catching a little bit here. But good for Apple, branching out.
It's been the beneficiary of these chip names falling down.
Yeah, for sure.
Yeah, and I mean, and it is. I see the appeal of this. You get into an iPhone, $0 down, $18 a month. It doesn't sound that bad. Is that cheaper than Netflix now? That might be cheaper than Netflix now.
I think so.
Anyway, second story for today. I know you guys already briefly touched on this earlier, but Boeing had a bad earnings miss. I know, we threw this graphic up earlier, but I thought the reason for this Boeing earnings miss was very interesting. They cited Air Force One aircraft development as the reason that they missed earnings so bad and so beyond expectations. They took a $280 million loss on the 2 new Air Force One aircraft that they are building, which they still do expect to deliver in 2028. There's one of them in the facility before receiving paint, is what you're seeing on screen there. But yeah, they specifically cited these Air Force One aircraft as the reason for being so far behind the ball. Analysts, I suppose, just didn't consider that this big of a hit was going to come through on these aircraft in this specific quarter. So that's why the estimates were so far off. That's why we're seeing Boeing quickly try to readjust into this morning. But yeah, I guess it's not a I don't know what the government pays for these things, but I suppose it's not enough. I guess Boeing didn't ask for enough money, which is silly because if you've ever seen War Dogs, just ask the government for however much money you want. They'll give it to you. So, yeah, this is an interesting spot for Boeing to be in. Interesting to be the Air Force One builder in general and decide to take these losses. It's obviously there's prestige that's given to your business by being the manufacturer of this aircraft. For those unaware as well, Air Force One, not one aircraft. It is whatever aircraft the president is on actively is Air Force One. So there is a few aircraft in that rotation. But yeah, interesting spot for Boeing. Air Force One causing a big hit on their balance sheet.
I'm confused. I thought we got Air Force One planes from the Saudis now. I really didn't.
We have the one, and that's kind of what I'm thinking. Why do we got Boeing taking a $280 million loss? Is that thing to sit in a warehouse somewhere?
Yeah, right.
Let's slap some USA, decor on the outside and send it to the skies.
Yeah, Boeing's up a little bit pre-market, even with the miss. So I think the market is brushing it off as just another silly little situation. But yeah, Boeing up $2 here. The expected move wasn't anything crazy, but this is well inside the expected move, considering we had at least a 5% implied move, which is pretty typical. So we'll see. We will see.
That we will. Last thing I have on the docket for today pertains to SpaceX and also pertains to our fine and honorable members of government. There has been lots and lots of SpaceX purchasing within Congress. Lots of it happened within 6 days of the IPO. Let me be very clear up front. None of this purchasing was illegal. Everybody went through the correct process, but particularly, and I'm not going to rattle off a bunch of names for the sake of time, but there are 6 members of Congress who bought roughly $150,000 to $250,000 of SpaceX shares, who are all serve on committees whose work intersects with SpaceX's work. So there is insider concerns happening, though, as anybody would know if you've been keeping up, if you bought SpaceX shares within 6 days of IPO, you're hurting right now. So it doesn't seem like any insider information was present, and if it is, it certainly has not manifested yet. But just, growing concerns. We have all this, there's lots of talk about polymarket, lots of talk about keeping members of Congress from trading altogether, which is something I would advocate for, quite frankly. So it's just another bit of fuel to that fire that we have people working on committees who give SpaceX approval for things, buying shares of SpaceX.
Yeah, this thing cannot catch a bid. Cannot catch a bid. It's about to open another 4 points to the downside pre-market on basically no news. It's a liquidation event.
Yeah, I mean, this is a great example of every time that they buy stock, every time it hits the wires that people in Congress are making purchases, et cetera, they don't always know. They just know about the name probably before we do, and they have access, but access doesn't automatically make it that you make money. And this is one of those examples. I think you see it more often than not on sort of little to unknown names, right? Biotech is not exactly an example, but say some little to unknown mining company that that's usually how it works. But in this, there was such a big name, and IPOs for big names sometimes have not gone well. We've detailed that a whole lot. This is an example where, they traded, they had it ahead of time, but it is not working out.
Yeah, these are the big 6 on screen here that all work on committees that give approval to SpaceX. I think production just threw this together, unless they already had this. I did not provide these names to anybody, so shout out to our wonderful production team for managing to put this together so quickly. But yeah, you can see the full list here. Bipartisan action here as well, not a partisan.
Sure. I'm looking at that. South Carolina, Virginia.
Slight Republican skew, but we got Cisneros in there.
Doesn't matter if you're blue or red, you still like green.
Yeah,
see what I'm saying?
Exactly.
Like that. I can't put that on flat too.
You put them together, they make green.
Right.
But yeah, so I don't know. Like I said, I don't think it's an insider thing. And also, this is SpaceX. This whole situation is just the greatest example of why we emphasize how you need to be contrarian all the time. Like most hyped IPO in history, $1.75 trillion. It's this giant thing. Everybody knows about it. Who is out here saying, I think this thing's going to test 100? It's like you never think that these things can come to fruition, but tail risk is always present on both sides. And that's what we're seeing play out with SpaceX in the macro here.
Tim Knight did say that, actually.
Oh, did he?
Yep.
There you go. We're doing it. We're doing it right here.
Yeah, it's been wild, but I think this will be another story. Meta's the example that Tim brings up all the time of it had a really bad start, but now it's 6 million times more expensive than the IPO price. So we'll see. But right now, it is not looking good for SpaceX. But the implied volatility is still sky high. Lots of premium selling opportunity or trades like a Super Bowl. I have a Super Bowl in here, and I'll just hold it for 2 years because that's the timeline. So we'll see. Gus, appreciate you.
Yeah, man.
Great stuff this morning. Boeing, we will close that winner if we open higher, hopefully. Apple ripping higher as well, and SpaceX. We if you liked it at 170 or 150, you probably like it now. Maybe not. Maybe you want to wait a little longer. But yeah, we will. We'll catch you later. Good to see you. E-minis up 7. NASDAQ down 190, and we've got lots to talk about the rest of the day. So join us on the YouTube chat. But we're going to take a quick 90-second break. We'll see you on the other side. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Jermal. We got Liz Dierke on the line and taking a look at some overnight moves. With that
first things first, Jermal, you are looking great in Kentucky blue. Great in Kentucky blue.
Thanks.
Thank you for representing where all of my money is going next year. All of it. I appreciate it.
What is the cost of tuition these days?
Oh, God.
Mike, you don't even want to know.
You really don't want to know. It's not going to go down.
Inflation finds its way into all facets of life.
Yeah.
That it does. So thank you for representing. Inflation does find its way. That's a good way to bring it back.
Yeah, so it's just best to not know what a price was before you had to pay for it.
Yeah.
It's just probably the way.
Best to not know.
Yeah, it's best to not know. It's best to not know. They do give a lot of scholarships these days, which is nice. I use that loosely. Scholarship.
Little 5K discount here, 5K discount there.
Yeah.
I get it.
It all adds up. Okay, what are you guys doing overnight? And how'd your earnings trades plan out?
My only trade that I had was in Boeing, I think, and that should be good. Boeing's up a couple bucks pre-market here, and I have this 215, 225 call diagonal. The 225 will probably open worthless, and the 215 will probably hold on to value, maybe gain a little bit of value from yesterday, and we'll be good. That's it.
All right.
Yeah.
I had Boeing and Coke. And then today there's not that much on deck.
Yeah. Today is similar to yesterday, just a handful of names that are interesting, but tomorrow and Thursday are going to be the big days in the market. But yeah, let's see what we got today. We got Bloom Energy. Okay, that works.
Yeah, Bloom Energy have to close. Seagate, STX, Enphase, ENPH, Visa, Clack. I guess, if you care about Ford, that's another one. There's a few. Actually, oh, wow. I just noticed this. SK Hynix has earnings day after the close.
They're new.
Yeah.
They have earnings?
Well, they're new, but they did have, it's not like they were private. They were already public. They just became public here. So, I didn't realize that.
That's an interesting one.
Ooh.
And after the close, what time will that be? Because, sometimes they say after the close, but it could be like 6 p.m.
I know. With that one, yeah, I don't know.
Yeah.
Yeah, I'm seeing that right? Yeah.
Yeah, I think.
Yeah, it does.
Bloom Energy
unspecified Eastern time is what I'm seeing.
Yeah, Bloom Energy, Enphase, those would be interesting. Huge implied volatilities. Bloom Energy has a 43-point implied move on a $170 stock. It's like a biotech.
Okay.
And then Enphase, $5.37.
My question to you two is Bloom Energy. So stay right here.
Okay.
What I need your expert advice. Okay. And I hope you guys give me two different options. I have stock that I've been holding until earnings. I actually sold out of my options yesterday. Shame on me because now it's down. I sold my calls that I had against it yesterday thinking I would do something in it. If you were long stock in Bloom Energy, what would you do against it with earnings?
Well, I would probably do a collar. Are you trying to protect your stock?
It's a good call.
Yes, I don't want to sell it. So this is one where I just keep forever, and I've made so much in it that I don't want to sell it. It's in an account where I'd have to pay taxes on it. Not that that matters, but
yeah. So I think the collar is where I'd land because the collar you absolutely have call skew in here. Without even looking, I can tell you have call skew in here. 165. Let's go. we close at 188. So let's go to 167, 20 points out of the money. Let's go to 207, 20 points out of the money. And the calls are trading for more than the puts. So that tells you that if you did a collar, you could have more upside profit potential by selling a call than you would have in terms of risk to the downside by buying the put. So you could buy the 170 for $13 and sell the 212 or 210 and just collect a small credit and basically verticalize your risk in the shares, but still have way more upside profit potential. And then you could just sell out of the put. If you do get a down move, sell out of the put, buy back the call, reset your basis from the previous day, or at least your P&L from the previous day, not your actual basis. But yeah, that's where I'd land.
Yeah, I like that idea.
These stocks are so parabolic. I mean, I bought this, and when I say bought, I was selling puts until I got put the stock years ago when Vanetta brought it up at like 10. So that's another reason why when you're looking at stuff like this, I've been shifting and moving with Bloom Energy for a very long time.
Yeah, that's what I kind of recently resigned myself to in a couple of names like that I'm down in and short puts in, and I've just been rolling them out. Oklo and Iran, like those type of names. Similar deal.
Yeah.
Yeah. But yeah, this is, if you routed this for $1 credit, you keep that dollar in the middle, of course. And then what's interesting is you're not, like you are capped out. If it goes up to like 250, yeah, your 210 call is going to be in the money and it's going to be the end of the trade basically. But if it only goes up to like 198 or 200, you could just buy back the 210 call, roll it out to August or September, and you can move that thing way further up. So like if you swap this for 210, the 210 strike, and let's just say it's trading for the same amount, you could go to August or September, buy it back and move it up significantly. You can move this from, oh no, I have the 170 still here. Get rid of that. So yeah, you buy this back for $1,300, and let's just say you wanted to go to September. Well, you can move this up to the 300 strike.
Look at that.
For a credit.
This has been the story of my life in Bloom Energy for a while. Out and up.
And out. Yeah, out and up and out and up and out and up.
Out and up.
But yeah, that's the offensive roll with covered calls, and it works really well when you have call skew because you have just so much premium on these tail options. So yeah, I would go collar, and then if you get a rally to the upside, get rid of the short call in the near term and move it out to September and just move it up as high as you can. And then if you get there, then you have an incredible trade with a basis of 10 all the way up to 300.
You get a gold star because I'm going to do, I don't know, I might do a downside ratio spread instead of the put. So if I get longer, I get longer, but I am going to do a downside ratio spread and sell the call.
I like it.
So if it goes down, I'll capture some premium. But yes,
I mean, that's the other thing you can do, right? Upside ratio spread.
Yeah, you can do an upside ratio. You can. A lot of times I will do ratio spread on both just to capture it because that moves my break even. But for every gimme, there's a gotcha, right? So if I do the ratio spreads, I'm not capturing anything if it doesn't move.
Yeah.
I guess you're not capturing anything with a collar either.
No.
Yeah,
the collar is just pure protection versus cost basis improvement. But yeah, I like the ratio too.
Did you guys do anything in SPX this morning?
No,
because there hasn't really been the big move, and I am pretty sure we still have. I have one. Maybe it was only me. I put on after the Super Bear that we were put on yesterday morning. We were able to sell out of that. I put on a Super Bowl, and I'm in between strikes right now. I'm kind of hoping it would be awesome if we just make a move up early on, and then I would like to put on a Super Bear for tomorrow, but.
So we've moved up a little bit from this. Has this helped your Super Bowl? You did it yesterday.
Yeah, I did it yesterday. Yeah, I mean, as Mike is showing you here, my strikes. My upside strike is 74.75, and downside is 73.75. I mean, I'm not exactly sure where we are right now.
We'll open at like 74.20.
Right? Yeah, that's what I thought. Something like that. I knew it was in between.
So you're right there. But yeah, the Super Bear yesterday was a home run.
Heck yeah.
We put it on when the market was up 60. Sitting at 74.60, and then we watched the whole thing reverse, and I closed mine right when we went flat on the day.
As did I.
And that was a $500 winner with the 7,500, 7,505. That was only a 5-point wide call
within
spread.
15 cents of each other in SPX. How about that?
Do that.
Look at that.
Look at that.
Look at that.
12, 74, 60. Yeah. Love to see it. But yeah, that was a great trade. And that's why we like to do those trades. Like if you have a directional assumption and you are really right, you can make multiples of if you compare that to just selling a call spread.
And Liz, the closing happened while Tim Knight was, I remember this. Tim was on and he was talking. I hope he didn't think we were ignoring him. We were just like, we just had a 100-handle move. We have to do something here, man.
Yeah.
Like,
He knows the drill.
That's it.
And he's used to just talking because he's typically by himself. So you can ignore me.
What about end phase after the close today?
So
yeah, it's the energy name, right? It's the solar name, right?
Yes, Enphase Energy. So Bloom Energy,
Guess we
Enphase
could sell a
Energy,
pudding here.
are they all going to kind of go together?
Good question.
No. I mean, they're different, right? Like this is solar. Unless all of a sudden they've changed and said something about AI. They look like Oracle right now is what they look like. The chart looks like Oracle.
Yeah.
Yeah, end phase is going to it's the same kind of idea where you have just massive implied volatility. Still, it's less than BE, but still, $5 expected move on a $38 stock is nothing to scoff at. Normally, you'll see 5 to 10% of the stock price.
That's a lot for a $37 product.
Yeah.
So this would be a little bit more enticing for people to play because it is less expensive than some of those ones out there.
Sure. This one I think is actually interesting for like a put ratio.
Yeah, it is.
Especially for smaller accounts, like selling the 37 for $2 and then buying 2 of the 35s or 34 halves for small credit. And then
you know what you were doing, but flip what you said. You're buying one, selling 2.
Did I say that?
I mean, it's fine. You know what you're doing. You put it in.
Well, you know what? I like where you're going with this. I want to help you out because I know how busy our days are and what we're doing. Are you going to do this trade? And do you want to use this trade somewhere else at some point today?
That's a leading question.
But I certainly could.
You know,
Maybe
I actually like it. I might do something here myself, but it's your idea. I think it's gonna be a good one for you.
Yeah,
that's a very leading question.
Yeah, it's just the IV is so high. You got to have some kind of premium selling component, and it's a small stock where I don't mind taking the shares at a basis of 32.5.
Or when solar all of a sudden becomes a big deal again.
Yeah, 32.5 is like where the low point of April.
Yep.
In terms of the recent trading sessions here.
I think you got.
Would you ever do a bat trade in this, or does that chart scare you too much?
Yeah, I personally don't like taking upside risk in earnings. I'd rather take downside. I'm just more comfortable with downside risk anyways, because I just believe if the stock doesn't go out of business, it'll come back. But yeah, you could certainly do it.
No, I'm 100%. I agree with you 100%. I like to take one side over the other, but I just was thinking as I looked at that, because you could easily, because there is call skew, which is helpful to do that trade.
Yep. 100%.
KLAC also has earnings. I don't know how you play this to the upside. I really don't. I mean, you know, its peers are HAMAT and ASML and LCRX. Like, how do you possibly play this to the upside? This might be, it's also one that's, I think, a little wide, but I don't see how you do anything other than sell a call spread in here or not trade at all. These options are pretty wide, actually. No weeklies neither.
Which stock are you looking at?
KLAC. Semi-name.
I mean, but to your point, if you open it up and there's no weeklies in there, a lot of times I'll close it right back up because that means there's no liquidity in it.
Yep.
Yeah, we typically avoid the non-weekly stocks. What else is there after the close today? We just
Ford.
oh yeah.
Ford. What did GM do? Didn't GM do something on earnings? I can't remember exactly.
Ford's at 14.5, huh?
Seems like it's always at 14.5.
I have 100 shares of this thing. From like 7,000 years ago. Where do I need it?
GM went up on earnings, didn't it?
I think you needed it at like 26. I think you're.
I think I'm okay.
I feel like Ford has been at like 14.5 for like 5 years.
I sold an 18 put for $1.50, so my basis is at 16.5. So I'm almost there.
Oh, look
give
at
us
you!
Give us a good earnings report. Can I sell something against this?
Probably.
At 16.5.
It is so, there's no premium. Every time you open up Ford, what are you going to sell it for? 10 cents?
No. Right, exactly.
No, I didn't need to pray. Just got to pray that it goes up to 16.5 and then close it.
Speaking of cars, Avis has earnings, CAR. Remember that stock? Remember that meme activity?
Avis, by the way.
It's a great what?
That's a good ticker for Avis. How they scooped that one up?
Remember this?
I don't know. Yeah. Yeah.
Insane.
That was April.
Yeah.
Damn. Are you serious?
There's the bell. E-minis flat. Nasdaq selling off. Here we go. Off to the races. Okay.
What's it going to be? What are we going to do
first.
today?
Up $4.
What are we going to do today, Brian? The same thing we do every day, Pinky. Try and take over the world.
Ooh, 145. Yeah, I'm gonna put this in for like. Yeah, this has gotta be a bigger winner than
and even higher. That's nice. It was trading like 213 a little bit ago.
Yeah, but you know what though, Mike? You have wide markets on the open. Take a look at that. Some of those I'm seeing 13 at 16, 15 at 19. You got to wait till the markets tighten up a little bit.
Yeah, I put the order in well above the market. So let's see if it comes to me here. I put in an order to close for a $200 winner. We're chopping around there right now. It'll probably get filled unless we sell off immediately, which is also possible and it's currently happening.
Okay, Liz, to your end about your point about trading in the open, you obviously see today we're doing a little something. Like today, I'm gonna buy this SMH callback that's way out of the money. We're just gonna bet on a bounce at some point now.
Mm-hmm. IBM up $5.
Ayo.
Interesting. Microsoft up $5. Love to see
and
it.
Microsoft is
heck
Thursday,
yeah.
right?
Wait, is this what I want to do?
Actually, tomorrow. So the M's are tomorrow. The A's are Thursday. So Microsoft and Meta tomorrow. Apple and Amazon Thursday.
Gotcha. So the M's, if we're going to call them that, are playing with fire because that's got the Fed meeting in it.
Forgot about that Fed meeting.
Yep. Yeah, the M's are playing with fire to the point where you can play him pre-market, but I don't know. And then he talks, things can just go awry just because.
That's fair. Yeah, Meta and Microsoft, I think maybe you wait until literally 2:30 p.m. if you're trading earnings, if it still looks good for what you want to do.
Right.
Because the Fed meeting will be at 1 o'clock tomorrow. Do we know what the probabilities are? Have we taken a look?
So I can pull up my Fed watch real quick. With yesterday, they were not looking good. I mean, not understanding. It wasn't a very clear-cut answer.
Yeah. Yeah, yesterday was like 70-30.
We've got 60.5, 31.5.
Okay.
So I'm actively trying to get a couple of super bears and some software names, CRM and Adobe. And why not? The way that these names have run recently, let's just see if it's really over. Still got the Microsoft. I mean, I got a lot of Microsoft stuff, so I kind of want to do these against the Microsofts. Oh, come on, get me filled. CRM might get filled soon, actually, because these names have been running.
Yeah, Salesforce is just one of those crazy stocks, but you get the two-sided action. That's all you can really ask for.
Mm-hmm.
Same with Microsoft, trying to catch a bid, but selling off. The market is just. It feels like any rally is just sold off immediately on the open.
Yep.
Boeing catching a bid here. We need to get filled. Give me 50 more cents. Come on. Yeah, these markets are flying around. So I'm just going to leave that in there. We'll see if we catch a bid the rest of the day.
That's what I was going to say. Is a lot of times on the open. So sometimes I'll have an order in on the open because with the wide market, sometimes you can get hit on a ridiculous price point. So I'll put it in for a profit to have it in there with these ridiculous price points. But if you're seeing it, sometimes it's a loss than a win. Those are too wide of markets and they're whipping around.
Yep. In this 3-day cycle, I could get filled just from the decay of this 3-day cycle. Like the 225, the fact that the 225 is still trading for basically what I sold it for on an inside move up doesn't feel right. I would imagine this has a pretty wide bid-ask spread.
I'm sure it does. Let's kind of show. So 225. Well, it's not that bad.
Not too bad. But this thing's bouncing around. This was dropped to $1. This is still at $1.48. So we'll see. But yeah, give me $2 more in Boeing and a little decay in the short, and we'll get filled for a $200 winner.
Don't you think that short should have had more decay built in, given the fact that you're 10 away from it?
Yeah, that's what I'm saying. I'm surprised that it's holding on to value, and I don't think it won't hold on to value for much longer here. So we'll see.
GLW, we're trying to buy our short call spreads back from the earnings play. That was the trade of the day. Closing
Corning glass.
Corning. Good old Corning. Down 20 points.
Corning, again, former glass company, and now it's all about fiber optics related to AI data centers, and it's trading like an AI company. So we're treating it like an AI company.
Hey, at least they know when to swerve, right?
Yeah.
Glass? Enough of this glass.
Enough of this glass.
Get into chips.
We talking about glass?
Do you guys, are you guys junkies enough where everything you do, you talk in ticker symbols like Coke is KO and, you know, all this stuff? Because I was driving in Northwest Indiana on Sunday, and I saw Cliffs Natural Resources, and I was like, oh, CLF. And then I saw USS, US Steel. I saw all these things, and I was like, X. So I'm thinking in ticker symbols whenever I see the stock name.
First of all, when you say those, you are definitely in Indiana somewhere. There's no doubt about that.
I was on my way over Michigan City. I stopped in Whiting, Indiana at the Pierogi Festival. Yes.
Incredible. Yeah, we
cool. We're out our GLW.
We definitely do.
Nice.
That is for sure. That is.
I mean, except it's like when it is. You mentioned Coke. That is one where it's like you just say Coke, right? Like KO or, you know, Pepsi. Like you say Pepsi, but. Yeah, I mean, there's plenty of them where you do that for sure. As I'm thinking, right? Like you just I saw this meme recently where it's so true. Like when if you're watching Jeopardy somehow and they have a stock market area, you get so excited.
Oh, I love it.
Look at this sell-off in the NASDAQ 100. This is crazy.
Yeah.
WDC, SanDisk, Micron, AMD, Marvel, Rocket Labs, ARM, AMAT, Palantir. All those stocks I just listed off are down 6% or more right now. ASML.
CRM,
5%.
I just got filled as you were saying that, which means software is pushing higher.
Right, because the SPOOs are only down 5. So with all of those collapsing, the S&Ps aren't really moving.
No. And that was the I think the highlight of the talking point that Chris Vecchio had is that even with the weakness in the chip stocks and all these stocks just getting absolutely decimated, RSP is at all-time highs.
Okay, give me a chip name. We need like a short put or two in some of these names.
Highs right now.
Give me a chip name that's had earnings that already had earnings. Revolve is still high. That's selling off right now. That's what you need.
Already had earnings. I'm trying to think what I don't think names did.
Intel, I already have something on in there. That's one of them. Like if I didn't have in a position right now, I'd sell puts in Intel for sure.
Boeing just jumped $3 if you have any bullish positions in there. I just got filled for a $200 profit. Love to see it.
Thank you for alerting me.
EWY getting smoked. I want to buy this call
17,
back.
yes. Boeing's at 217. I did the 217 calendar because it's upside.
Love to see it. What's your 225 at? It's probably picking up now.
What's that? Me?
225 calendar Boeing?
Oh, yeah. Kind of forgot about that.
You're like, give me a chip name that's already had earnings.
I was just trying to dude, this thing is I feel like they're going to buy these chips at some point. This is the sell-off the way it's happening. They're going to buy them.
Yeah, this is a violent sell-off.
At 225, I'm up.
Did NVIDIA have earnings? The chat is saying NVIDIA already had earnings, and I don't know if that's true.
No, NVIDIA did not have
fake
earnings.
News.
No.
NVIDIA is the Super Bowl, not to be confused with the Super Bowl. The NVIDIA, we have to use a different term. NVIDIA is the all-star game of earnings announcements. It's always at the end, and it's like on an island. It's an isolated event.
You can't say Super Bowl anymore of anything. People get very confused when you say that.
Yeah. We won't say that anymore. We'll say it's the Emmy Awards of the earnings announcements. But yeah, NVIDIA is always at the end and the banks are always at the beginning. So just keep that in mind. But yeah, August 26th, NVIDIA.
Yeah. NOW is up once again. Nice. Yeah. So I got a so I have still have a couple of now calls. I was telling Mike yesterday, left over from the earnings calendar. Got the 115s now. I had the 110s yesterday. I sold those out. Microsoft is Microsofting right now. That's pretty good. I don't think I have it. Do I have a Palantir position anymore? I think I still do. Yeah. Got a Palantir. Palantir is down. That is weird. That is very weird.
Maybe that's a stock. Oh, they have earnings. That doesn't fit your criteria.
Yeah, but that is weird. Yeah, and it's not I want a semi name. Chat, give me a semiconductor name that is already had earnings that is down right now. That's getting sold off.
Do you have an Alexa in the room? Who are you talking to?
I'm talking to our chat.
Talking to the chat.
They'll start pumping names in there.
The YouTube chat will always save us.
Like I have a lot of them already as part of the problem. Like EWI. Like I have plenty of things that don't have earnings per se, but it's getting so. Like I'm short of putting EWI. I'm short in DRAM. I am. I mean, not a whole lot of them though, because I took a lot of them off because they didn't have earnings.
Costco's up big today,
Yes,
up 25 points. The Russell is up 0.5% while the rest of the market's just tanking. When I say the rest of the market, I mean the NASDAQ. I'm turning into E apparently. Always quoting in NASDAQ terms. But yeah, the RSP equal weighted S&P 500. I'm really glad that Chris brought this up, but this thing is at all-time highs.
Yeah, I mean, I'm hanging out with Chris, so I'm long RSP, which I mean, it's helping my portfolio, right?
Exactly.
So you got to have everything on. You can't just be in one sector, or you're gonna get hurt. You'll feel the pain.
What's helping me out today is McDonald's. I might have to take some of this off actually. McDonald's is up. My winners right now: McDonald's, Microsoft, Pepsi, Lowe's, Costco, Walmart, Netflix, even anything that they didn't like.
We can hit all those in a day. Go to Lowe's, go to McDonald's, go to Starbucks.
That's a good day.
Hop into Home Depot and relax with a little Netflix at night.
That's a good day.
Yeah.
STZ, Constellation Energy, Constellation Brands. I always say energy. Duh.
Everything's energy now.
I know.
Energy. Enphase energy.
Procter and Gamble. These are the winners. These are your winners in the market right now. T-Mobile, TMUS, all these things they absolutely obliterated earlier. They love it.
Yeah. And you can see this if you go to, you can filter for NASDAQ 100, Russell 1000, SPX 100, S&P 100, 500. But yeah, if you sort by upside moves, it is exactly what Jermal just rattled off here.
Why is Palantir getting smoked?
T-Mobile, Adobe, like all these stocks, Pepsi, Netflix, Lowe's. Big sector rotation today. This is the biggest sector rotation today.
Mm-hmm.
Yeah, this is a big sector rotation.
Huge.
So what do you guys think? Do you think it's going to continue? I mean, we've gotten such reversals intraday lately that I don't know that this sell-off is going to hold.
Well, the only thing about it is tomorrow, right? Like considering what's coming tomorrow, I actually was I'm planning on the idea that we tank today ahead of tomorrow, or at least kind of inside to down, just because people are have been clearly de-risking a little bit heading into Wednesday, obviously being the bigger day, and then Thursday with the other two earnings. But that's kind of how I feel. So I wouldn't be surprised if this holds, but maybe I'm wrong. I don't know.
It's been such a weird every day we reverse, so you can, that's why in this market, you got to be a little bit nimble. I know you guys have the Super Bowls on, and I love what you said. You had the Super Bear on, and then you put on a Super Bowl just because we were down, you take your profits if we reverse, which we've been seeing. So that's a good way to trade. They can't take it away from you once you close it and it's your profit.
Yeah. I think in the NASDAQ, I would not be surprised to see this thing continue to sell off or stay down here, down 1%. But I think the E-minis, because we're seeing such aggressive sector rotation today with so many names up over 5% in the S&P 100 and so many names down 5%, like it's just I think we'll chop around here in the E-minis.
Mm-hmm.
Maybe it's an iron condor day.
I did in SPX I was doing, I look at the most active in the morning, and the 7350 seems to be the most active in the puts. So I did my downside ratio spreads with my 7350, which is out of the way the expected move. In pre-market, it wasn't, right? But that's the leader in the clubhouse of downside puts. So I did my downside ratio spread with my short at the 7350. So I'm hoping we go down. I mean, that's what I'm playing for right now. I know that I still have the risk because I wasn't able to butterfly it off, but I still think that's a good entry spot for. There's a possibility of us going all the way down to 7350 today.
Mm-hmm.
Yeah. And any of these strikes, there's decent put skew here. You can still route it for credit. 73.75, 73.70. Just depends on how you want to set it up.
I mean, this is SPX, so you have to buy something, right?
Yeah,
I understand you're getting credit for just the ratio spread, but at some point, I can't afford it. That would cause me heart palpitations if I had $100 in risk.
Yeah.
And
Agreed.
I know it's not going to go down that far, but just in case.
Yeah. It's a wild market we've got here, but the Dow doesn't care.
Dow don't care like the honey badger.
But yeah, RSP continuing to trudge higher, selling off a little bit from the intraday session high, but yeah, just keeping our eye on some of these positions here.
Crypto's doing. Those are down too. I just looked at IBIT. I mean, I haven't looked in a while, so I just wanted to see.
Yeah, it's trying to run higher. We hit the lows of sub 60K and then got all the way up to 66.5, sitting at 63. But I think if the rest of the market starts to rip higher and we start to find a footing in the bullishness, I think Bitcoin will eventually recover.
Yeah, I think so at some point. there's many of these names that just have not had earnings yet. And so, wait, Texan had earnings, right? But Texan's not really getting smoked.
Yeah, yesterday I put on a bearish put diagonal spread in QQQ, long the 670 10-day, short the 660 3-day to just encompass all of the earnings announcements and inventory some bearish delta further out in time with a lower implied volatility reading. Seeing a nice move down here today, but I'm going to keep this on. This is just going to be another, like, if all the earnings are terrible, this will work out.
Mm-hmm.
And it's not too far away. If somebody wanted to put it on today, I know you did it yesterday and you're up a little bit of money, but it's not too far away from it.
Yeah, it's right at the money now. Kind of cookie cutter setup. You could do the same exact thing if you moved it down 10 points. Long the 660, short the 650, it'd be a similar price point.
Yep.
E-mini selling off 22, NASDAQ down 480. Liz, appreciate your time. We'll see you later.
Thanks.
Lots of trading.
Likewise.
Lots of trading.
Yeah, lots of trading indeed. Lots of movements in some of these single name stocks. You got RSP at all-time highs, equal weighted S&P 500. So this is very sector driven with the chip names just getting decimated while your Mag 7 stocks are leading the way higher, which is why you're getting kind of a neutral move in the E-minis and a big sell-off in the NASDAQ. But we're going to take a quick break. We will see you on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Welcome back to the show, Tasty Nation. Join us on the YouTube channel if you haven't already. We're streaming live there. Throw in your trade ideas, questions in the chat. We'll get to them shortly. But I'm here with Jermal and, of course, E. I was just caught myself in NASDAQ terms.
The sky's falling, right?
Yeah, I literally said, the market's crashing. Wait, it's just the NASDAQ. Everything else is fine.
He was speaking in NASDAQian.
NASDAQian, yeah. We speak the same language. It's super volatile. It is funny just seeing the different highly correlated assets and how NASDAQ will just feel a lot more bumpy than other assets, which provides a different, I guess, emotional response sometimes. So it is kind of fun to see the shakeup. A lot of volatility to the downside. How are we feeling so far about this? What do we think? I know we got FOMC tomorrow as well. I heard you guys' comments on it. Maybe we get a little bit of a reversal. There's a lot of uncertainty still left for the rest of this week.
I think it's amazing.
Yeah.
I love it.
You love it.
I do.
That's the first word you said when I walked in here.
Yeah.
This volatility is amazing.
I love it. This is fantastic.
Yeah.
Fantastical. Yeah, I think two-sided action just gives everyone an opportunity to get in and out from bullish, bearish, neutral positions. And you're seeing a big, like the continuation of the relationship is crazy, where you have the chip names down, software up, and then consumer staples up with chip names down. Like it's been that way for the last, I don't even, how long? Like months.
Yeah.
And it's been really consistent. So if you have this feeling of that it's going to continue, like you'll have the days where chips are down, maybe you buy some bullish deltas there, and then consumer staples ripping, maybe you short it. Like you can just create so many different trading opportunities with the way that these markets have been moving. And it's really been, I can't tell you how many times I've come onto this morning show and seen the E-minis down, NASDAQ down, and the Dow up.
Yeah.
Like that's
right.
Or the reverse.
Or reversed, yeah. The divergence between those. I got out of my Oracle position today. I just couldn't do it. I was like, you know what? I had it on for like 6 days. I was like, you know what? This is the one position that I sold a naked put in. Got a little bit of directional exposure. We keep sliding to the downside. And I was like, you know what? I'm going to cut my losses pretty early here, maybe reposition if we continue to sell off. But I wasn't very comfortable in that position. So I was like, even if it reverses, I feel better now that I got it out of my system. So Oracle's been a tough one. That's a tough trade, man.
It's a tough trade.
That's a tough trade.
Yeah, it's a tough trade.
There's no trading here.
There's no trading.
It's like SpaceX. It's just straight up selling.
It's, this is a good thing to bring up too, because again, it's been lumped in with the software names, and then we're seeing software run today. But there are some names. This is one of them. Palantir is another. Snow is another. Software names that are actually down. I can't quite figure it out.
Yeah, definitely seen a change of behavior.
What's really we've seen within tech, the whole divergence between chips and software. Now we're seeing within software is the divergence within software. How crazy is that? You got Microsoft flying to the upside, CRM, Adobe running, but then you got, like I just said, Palantir, Snow, and Oracle down. So,
yeah,
I love this market.
It's crazy. It's wild. But
I like a little bit of a shakeup sometimes.
Yeah,
it's kind of nice.
Who doesn't?
It's a little refresh.
Does it?
Yeah.
I like it when there's a pattern and the pattern sticks around for a while.
Yeah,
patterns go away really fast.
Yeah.
Well, Boeing's up $8 now. Look at that.
Keep an eye on this name.
Boeing had earnings. We've been just chopping around, looking at positions to adjust in this morning session here, 20 minutes in to the equity market open. But yeah, I think the market, I'm actually surprised that this is so choppy right now, because tomorrow and Thursday we have so many big earnings announcements.
Yes.
But I think we have, and of course the Fed meeting too. But
yeah,
I think the market is seeing that regardless of the Wednesday and Thursday fireworks that we could see, there's still plenty going on under the hood with a lot of these stocks.
Does this continue for another day? I'm trying to figure out how to reposition, because right now I got all these consumer staple winners that I'm like, should I be taking some of these off? And I think I'm going to have to take some off, but how much?
Yeah.
Does this continue another day, or is this like going to be the new normal to end the month? Is this what's going to August? What's going to be like? I'm curious.
Yeah,
could be.
I don't think I don't remember the last time outside of a big market crash where everything was selling. I don't remember the last time I saw like all these NASDAQ 100 products down 10%. Like this whole page is 5% or more.
Yeah. It's aggressive.
Wait, that's Micron. Yeah, so that's really it. It's keeping like Micron. Looking at names that don't have earnings in here, Micron is the only one, and I already got some on there. And then the other one, that's Intel right there, right? 8603. Yep. And is there any others?
I mean, FOMC and
it stops the list basically ends there.
Yeah,
like
which is ominous.
Down big, yeah.
Because all these are going to have to report earnings.
Yep.
And tell us what their capex is.
They got to exactly. They got to save us.
They got to answer that question.
Enough of everything else. What's your capex? That's like.
Yeah.
They should just lead with that at this point.
Yeah.
Our capex is. Drum roll, please. But yeah, S&P 100, you got a lot of names up over 3%, 2%.
Coke is up 6%, bro.
It's crazy.
What?
All-time highs.
What?
All-time highs, Coca-Cola.
What are we talking about?
Craziness.
Yeah. I just need to know this Diet Coke phenomenon. I mean, I feel like it's got everybody in a chokehold.
The idea of a lot of Diet Coke?
No, just Diet Coke. It's just like one of the most popular sodas.
Right,
it's got to be of all time.
You're right on that.
Look at this move.
Yeah, I mean, that's insane.
Yeah.
This
It looks like a textile.
all-time highs. This is big all-time highs.
That's big Coca-Cola moves right there.
It's crazy.
What did they say on earnings?
They're getting
How about
putting chips in their
They put the Coke back in the Coke.
That's part of the phenomenon.
That's what
they put chips in Diet Coke.
Oh, is that what you just said?
I did bring that up.
That's
That'd be
hilarious.
crazy.
Oh,
They went back to the old formula.
oh my God. Oh, yeah. You think people will stop drinking Diet Coke? I don't think so.
Absolutely not.
I don't think so.
I think we would see some higher highs, to be
I
honest.
don't think they would stop.
Yeah.
Yeah, I think it's wild to see. Who would have thought? I would have thought that the high for Coke would have been in the 90s, like the high price point for Coke. But I mean, it's still a business at the end of the day. They acquire all these other products and they keep the revenue flowing.
Yeah, I mean, there's these names, man. I mean, Kraft is up 4%. Like, what? Mondelez up 4%. This is the market telling you that it's tired of chips for now. It's tired of chips.
You want to go back to reality. You want to go back
Pouring
to the
in
good
money.
stuff. Heinz, Coca-Cola. the legacy markets.
Yeah.
per se.
I love that this is the way that it's happening though, because so many people were like, these chip names are going to get crushed, and we're going to get the 1998 2000 market all over again, and everything's going to tank. No, it's not what happened here. It was a complete rotation into another area of the market that was underserved.
Not yet. No, I'm just kidding. I don't know. I don't know. We'll see how it is.
So I think that is really interesting. Like the doomsday preppers were all just. I think the lens was too focused on chips, and not the rest of the market. And RSP equal weighted S&P would not be at all-time highs if we were really in trouble here. It's literally at all-time highs. So this is purely sector driven, but it's like, again, all these stocks, these chip stocks were up 3, 4, 5x and more. So it's like it can't be like that forever. You got to have some kind of relief, and that's exactly what we're seeing. What do you make of this NASDAQ chart? What levels are you looking at?
Some of the levels that I'm looking at are some of the levels that we're trading at right now, actually. Debating on getting a little bit of long delta on. I just got on a micro long contract at around where we're trading right now.
Oh, yeah?
Yeah, just for a short-term pop.
Yeah.
Sometimes
yeah,
the pop
sure.
will come within 10 minutes, 15, 20.
Is this you with these drawings?
That is definitely me.
Oh, it's you? Yeah, okay, yeah.
Wait,
I've had
that make sense. Wait, what?
You must have been on this computer.
That's
been on it.
hilarious.
Yeah, I noticed that too one time. Yeah.
I didn't even realize. No, that might have been me right there. That's hilarious. But no, I mean, I don't know. This slide is starting to feel a little aggressive here. I mean, whenever we do get the retracement pop, I'm curious to see if that's going to really entail a reversal, or if that's just a short-term pop to where we then get a little bit more downside. Just because we're seeing a little bit of a change in behavior, a little bit of a shift, a rotation. So I mean, I don't know. But in the short term, at least looking for some pops to the upside. Outside of that, I'm just glad I got out of that Oracle position. That kind of makes me feel comfortable to trade NASDAQ a little bit more now that I'm kind of trimming some of the positions that's kind of sitting in the red. So, no, shaky market. I mean, I'm loving the expansion and volatility. That's something nice. I mean, volatility above 20 as option sellers, you got to love it. You never hate that. So,
For sure.
Yeah. NASDAQ's down 1,500 points in the last 4 days. So,
yeah.
Craziness. But looking at the vol structure here.
Still no spikes in volatility. Is that not interesting? Given the two downside moves we've seen over the last couple of days, it's like, what is it really going to take to see a pop in vol if these 2 days, doesn't allow us to pass a 20 VIX? It looks like volatility is starting to cluster a little bit, but what are your thoughts on that? I mean, how do you perceive that? It feels aggressive, but volatility doesn't seem spooked at all.
Well, I would imagine we've seen it in VXN. And again, that's something that Kevin Davitt brought to us a couple weeks back. You look at the difference between VXN, which is the VIX of the NASDAQ, versus VIX.
Yeah.
But this is one of the things when you talk about the VIX, it's from the S&P 500, which is a broad-based index. It's very broad-based.
I mean, is NASDAQ leading the way right now?
With I'm sure of it.
Are they that right?
All-wise, I'm sure VXN is probably, and I can't remember if we have it. Let me talk to them about that. They need to give us that.
Be able to pull it up. It's got to be it.
CGI. Yeah, VXN CGI.
Oh, VXN CGI.
Yeah. That's trading at 30 right now.
Yeah.
So that tells you that's exactly it. You can do a ratio right now to see what it is. I don't know what it is, but whatever. 30 over 20, 1 point something, 1 point, almost 1.5.
Up on the upper end of the range this year for sure. But yeah, I think that's really it. The VIX futures are S&P 500, so it does not surprise me at all that they're not moving.
From now on, this is what you look at. This is all you should ever.
Yeah. VXN : CGI. This is
you stop. Don't you didn't even look at the VIX anymore. You just look at this.
Just the VXN.
Yeah, because the VIX is just confusing.
I'm gonna throw that. I'm gonna take that out the watch list then.
Yeah.
No.
Just throw it away. This is yours.
Yeah.
VXN.
Yeah.
But yeah, the NASDAQ is hyper concentrated, of course, and it is feeling the pain of the chip sector.
It is.
Absolutely.
I mean, but look at the run it's been on. I mean, what are we talking about? That's a crazy run.
Yeah.
That's like an all-time high, almost like 30 consecutive days
100%
in a row, which is wild to see.
And I feel like the NASDAQ is an interesting point because you've got 4 of the Mag 7 stocks reporting over the next 2 days with Apple, Amazon, Microsoft, and Meta.
Crazy stuff.
And they're all up. They all were up earlier today. All 4 of them. Apple's still holding on. Sold off from the recent intraday high. Amazon down now, net down. Microsoft up $3. That had a big sell off from the intraday high from 400 down at 392. And then Meta flat. So all 4 of these opened much higher on the open, but they have sold off into this sell-off here. Nasdaq down 500 points now, almost 2%.
I'm with you though, E. I think we see a bounce soon.
Just a little one. I know we have FOMC tomorrow.
In these names.
Incredible. Well, E, appreciate your time.
Appreciate you guys.
See you later on the show.
Cool. Later, guys.
Awesome. Yeah, E-minis and Nasdaq chopping around, sliding around. We got Dr. Jim in the house. Dr. Jim, how you doing?
Man, what's going on? We're doing it. What are the odds? So what are the odds that me and Jermal have the exact same color blue shirt on today?
I'm talking high five through the screen.
like to the hex code. Like this thing is to the hex code level of precision. Look at that. Look at
the
that.
hex code. I love that, man. I know, man. How about it? I'm
he's
with
looking
you,
down
man.
at you. You see that? Can you high five? You need a high five. High five through the screen, please.
You, Jim?
I mean, it's amazing,
Here you
man.
go.
Like that is like, wow.
We got to work on that.
Man.
We got to get that going. The high five through the screen.
Yeah.
We got to 100% get that going.
Yeah, Dr. Jim, you've got a crazy market on your hands. We'll let you take it away with the next show here.
All right, I appreciate you guys. All right, so we are now inside the trade. Let's go. And man, I'm way more prepared this morning. I got my YouTube chat up. We got the market up. We're in a free fall, whatever. Man, let me know where you guys are at in that chat. Get in there, pump that algo, and let me know what you guys are looking at. Let me know what you guys are trading here this morning. What I want to do first, I've got a new trade queued up for you guys, but let's go ahead. Let's check in on our two little, I don't know. These are some problem children, to say the least, from yesterday. So MNQ and QQQ. We did these two trades yesterday on Inside the Trade. So you can go back into the archives. You can give those guys a look right there. So if I go to QQQ, you can see this guy's down $11 on the day, which is not super amazing, but for every gotcha, there's a gimme to kind of shock the muscle a little bit there. It's defined risk, right? So my risk is defined, so I don't necessarily have to worry about, if I'm completely wrong, if the market keeps going down a lot, then I'll still be okay from the standpoint of I'm going to hit my maximum loss and that's all I'm going to hit. And so that's obviously, a very, very beneficial thing. I would argue that's the most beneficial thing of a defined risk strategy. I mean, we know that defined risk strategies are, they have a lot of adjustment limitations. There's a lot of things that, within a defined risk strategy just aren't as compelling as an undefined risk strategy. And so we already know that. But you get a market like this morning, NASDAQ down 500, it's like, okay. It's like, all right, kind of like the fact that I've got that safety net in place, kind of like the fact that I've got, that worst case scenario known on entry. And so with the QQQ short put spread here, we're fully in the money, as you can see. I mean, you've got the stock at 671 and the spread is 680, 675. And so if it doesn't come back, it doesn't come back. But we still have 52 days to go. That is an eternity. Like that is 100% an eternity when it comes to this market, really any market. I mean, even back in 2017, do you guys remember 2017? Let me know in the chat if you guys were trading in 2017. I would really love to know. The algo is dying to know. 2017, if you've been trading, you know what I'm talking about. If you were not trading then man, this might be news to you. So you look at a market like this and you're like, man, the VIX is 16, the VIX is 17, the VIX is 15, whatever. Why did I get out of bed? Why did I put pants on today? I mean, if you live in St. Petersburg, Florida, you never put pants on. But anywhere else, you may mix it up once in a while and throw some slacks on for the day. But you're like, man, the market's not moving. Nothing's going on. Like, what am I going to do? 2017, the VIX got down to 8. 8. And so if you think 16 or 17 is bad, man, it could be much, much worse. I promise you that. And so for us right here and right now, with this short put spread, 52 days to go is a very, very long time. Whether the VIX is 15, whether the VIX is 8, I mean, it can be a lot can happen in the market. I mean, I see you guys in the chat. Man, look at this work you guys are putting in. Got some early risers. I mean, 10 a.m. for the OG core position, that's a little early. I got to be honest, but I see you guys, man. Christopher Springer and Sam L. Or Danu, Joel James, Adam Armfield. Man, Green Ape is here. Man, I appreciate you guys so very much. I'm going to try to get to as many of you guys as I can here in just a couple of seconds. But I wanted to pop in QQQ short put spread. We're not going to do anything. We're going to tap into the DNS. I mean, that is the way forward, in my humble opinion, at least. And then MNQ. This one's a little bit trickier, right? Because obviously, this is undefined risk. This is the trade that we put on yesterday, the 27,300. We have a 28,400 right here. This is the guy that we've had on. Obviously, we're taking more heat on that guy. You can see we're down about $500 on that guy today, and then $300 on the newly minted short put at the 27,300 strike. And so it's not amazing. It's not terrific. But again, it's gimmies and gotchas. This is what you're signing up for. Like when you put on an undefined risk position, you have to understand that there is no safety net. Like you have to understand that there is no, known max loss on entry. The training wheels are gone. I mean, you are Christian Bale in Batman 3. You're in the pit and you've got to get out to save the world. We've talked about this many times before. But what did he do? He tried it a number of times with the rope. He tried it a number of times with the safety net, but it did not work. The only way he was able to get out was to take the rope off, get out of the pit, defeat Bane, and save us all. Now, how does that apply to this strategy specifically? I'm not exactly sure. But when we think about undefined risk, I think there might be some very loose connections there. So I'm not going to do anything right now. We're in the money. Actually, no, we're in the money on this guy, this 24-a-day guy. But the inside the trade, we're not going to do anything because we are out of the money. And you might be wondering, but wait a minute, Jim, what are you going to do with this guy? Well, this is kind of a from theory to practice trade. And so that sounds like something we might talk about later today at 2:30. And so you got to watch that show because your boy needs that watch time. So, all right. So MNQ, we talked about that. Okay, a new trade for today. Here's what I want to do. Again, if you look down the chutes at what is coming tomorrow, it all comes to a head. All of your hopes, all of your dreams, all of your financial goals and aspirations are all hinging on Chipotle earnings and Starbucks earnings and Meta earnings and Microsoft earnings. That is all tomorrow. And then, of course, we've got FOMC is tomorrow as well with cousin Kev. And so that is all coming on down the chutes tomorrow. And so it's going to be tricky, man. It's going to be a dicey day. So what I want to do today, I don't want to trade any of that. We're going to do all that tomorrow, of course. Today, I wanted to do something that avoids all of those upcoming earnings, and it actually allows us to potentially take advantage of the wake of earnings that just happened. We're going to go into everybody's favorite stock. Shout out to all my boomers out there. We're going to go to IBM. So if we go to IBM, you can see the stock price is 216. My IB rank here is still 48. IBM just reported earnings, I think, a couple of days ago. And I don't know what they were. I mean, nobody knows, you may know what they were. But in terms of what they were, the market reaction, it could be anything. I think the market reaction was actually positive to IBM earnings, I think. Let me actually check that. Now I'm not so sure. If I go to IBM, if I go to, That literally could not have been more wrong. Wait. Hold on. So when you see something like that on a chart, you assume that's earnings related, right? Like you assume that's earnings, clearly. But I actually, if memory serves me correctly, and I've been hitting the blueberries hard, I'm talking multiple times a day, most days. I don't think this was earnings. This was something else, was it not? This was something before earnings where something came out like, we're doing the same thing we've been doing since 1986. We should probably change our business model. The market didn't like that because they said they won't do it. I mean, I think it was something like that. I think earnings was actually like around here. So I think the earnings was actually a little bit muted. This big gap and crap was actually not from earnings. That was from something else, I think. If memory serves me correctly, let me know. Correct me if I'm wrong. They're in the chat because I want to know. And the algo is, man, it cannot wait to hear from you. I promise you that. And so earnings for IBM was fairly muted, I think. But the IB rank is still there. So this is kind of a post-earnings play. And this is an interesting way to still take advantage of high volatility, but do it in a way where you're not necessarily exposed to binary events. Like I'm not necessarily exposed to binary events. I'm not necessarily exposed to, the earnings release and, the guidance and the conference call and, all the, the explosive moves that can happen from an earnings release that typically is very, common for the aftermath of an earnings call. And so for IBM here, I think let's just go in here. And I mean, man, what if we do like a 52-day option? I mean, look at these premiums, man. I mean, you would think you were looking at AMD and you're not. Like you would think, is this Micron? It is not. This is IBM. This is Big Blue, I think. Isn't IBM's nickname Big Blue? Now, it may not still be Big Blue, but I think it was Big Blue back in the day. And like I've been saying from day one, I mean, you're my boy, Blue. Like you're 100% my boy. So if we look at the option chain for IBM here, We can do a lot. There's so many things we can do here. Anywhere between, I'm going to say, a 40 delta for all my Shooter McGavins that might be watching the show. I'd go all the way down to even like you could maybe even go to like a 14 delta. I don't like going below 10 because, again, I feel like the single digits. I understand it's the paycheck trade. I understand it looks like free money. I understand some of you may look at it and say it is free money. Personally, I say it's anything but those things because you have lots of really nasty second and third level Greeks that are kind of hiding in the bushes if things go against you there. And so anywhere between usually 35 to 25 most of the time. But if we want to kind of stretch the boundaries, you could go 15 to 45, I think, and you're fine. So when it comes to the strike selection here, if we started at like a 30, 35, like let's say I wanted to do this 35 delta short put at a 205 strike. All right, so let's begin the analysis here. And we're probably not going to end here because, the content's not going to write itself. We got 7 minutes left in the show. And so the pop is 68%. The P50 is 81%. My delta is obviously positive 34. It's going to match up with whatever the delta is on the chain. My theta is $11, and my maximum profit is going to be my credit collected. And so my maximum losses would be if Big Blue went all the way down to 0, which again, theoretically is impossible. It is. I am legally required to remind you of that. Is it a practical possibility? I'm going to say no. You have to draw your own conclusion, of course. I would never tell you what to think. I would never even try to tell you what to think. From a buying power standpoint, though, this is the tricky one. So we'll grab a different color here. If we grab a little magenta, this one's a little bit trickier because that's a little bit big. It's not too big, I don't think, for my account. I've got about 37,000 in this account. So it's not overly sized, in my opinion, but you're right there on the edge. You're right there on the edge of tomorrow. For all my Tom Cruise and Emily Blunt, I think, right? Wasn't that Tom Cruise and Emily Blunt? The Edge of Tomorrow? We saw that movie just recently. It was like maybe 7 or 8 months ago. It was excellent. I was like, wow, this movie is really, really good. And basically everything Tom Cruise has done has been really, really good. Let me know. Show me your best. I want to know, what is your favorite Tom Cruise movie? Let me know in the chat. I would have to say, let me think. What is my favorite Tom Cruise movie? Obviously the most recent Mission Impossible is amazing, but I'm just trying to think. I'll have to get back. I'll let you guys know later on from Theater Practice. My wife was actually in The Firm with Tom Cruise. And when I say in the movie, I mean like on screen. Like screen time. I've talked about this many times before on the show, but maybe you're brand new and you don't know this. I'm married to a movie star. Right? She met Tom Cruise. She was 11 at the time, but she met Tom Cruise, and the movie was shot in Memphis, or at least one of the scenes in the movie was shot in Memphis, where she's from. It was on a rooftop. There's a scene in the middle of the movie where you see a little girl clapping by the fountain. She's on camera for a solid second. A solid second. That's a second more than you. That's a second more than me. That's pretty good, man. And so if you go back and find a clip of The Firm and you find it about midway through on the rooftop scene, that little girl that's clapping by the fountain, that's my wife. That's my wife, Autumn. So anyway, I didn't think I was going to be a sugar daddy, but that's just the way it shook out. So anyway, IBM, let's go ahead and let's see if we, or maybe she's the sugar mom. I'm not sure. Either way, I'm thinking this is still a little bit too big. So we're going to move the strike down a little bit. We could go to the 200 strike. You're going to see that 2,700 in buying power. So that's very reasonable, of course. When it comes to our position sizing. But if you're looking at this and you're like, hey, I kind of like this trade, but I'd like to size it down even more. Again, you could go all the way down to a 190 strike. And now you see the buying power is only $1,900. And so now, a $30,000 account, you're fitting that in there, no problem. This actually even looks really good to me, honestly. You could even go to a 185 strike, I think, and you still have a really nice credit collected. The pop is super high. The P50 is super high. And my buying power effect is about $1,800. So I think I'm going to go back to the 200 strike. For what I'm trying to do here. But again, I think any of those strikes are definitely worth considering. So we got filled at 665. And we've only got a couple seconds to go, but I want to see you guys in the chat. Man, I see you guys in the chat. So I'm just scanning the end, and I appreciate you guys so very much, man. Look at you guys. Ordenu says it was called Deep Blue. Was it called Deep Blue? I thought it was Big Blue. Maybe I'm wrong. Sam L, Jerry Maguire, Clown Baby, Tropic Thunder. I'll tell you what, I've actually never seen Tropic Thunder all the way through. His cameo in there, though, I've seen that clip on the internet many times, and don't necessarily love the language of the clip, so you've been forewarned. But it is very, very funny. And so I have to say that is some good stuff. And so, but man, I see you guys in the house. Man, Ashfin, Wolf is here. Man, look, Joel James is here. I mean, I see you guys in the house. Let's see. Oh my gosh, this is too funny. This is too funny not to mention. Ron Vashar, man, I appreciate you. Maybe this will be tomorrow's Inside the Trade. Ron Vashar says, you need to sell a put in Nana. Oh, it's not even a stock. Okay, I thought these were real tickers. Ron Vashar said Nana and Natty, obviously for banana natties. That's an excellent job, my friend. Unfortunately, you kind of led me into a booby trap there, and I fell for it because there is no Nana and there is no Natty. But man, that's some good stuff. I can't believe I fell for that. Let me get some more. We got like a minute left. I think we got like a minute or two right there, Ben. I got it. Let's see. I'm trying to see. Oh, DC says The Last Samurai. The Last Samurai. I've never seen The Last Samurai. I listen to the soundtrack I listen to the soundtrack often when I'm working because I really like the soundtrack is very, very good from a focus standpoint. And so, but DC says Oblivion. I've not seen that one either. Man, I call myself a Tom Cruise fan. And I'm like, never seen it. Don't even know what you're talking about. And so I'm not even sure where I'm at anymore. But yeah, Top Gun, obviously. I mean, the Maverick was great. I heard a rumor that they're going to do a Top Gun 3. Like I heard number 3 is coming out and it's like, why not do it? You know, I mean, what could possibly go wrong? And so, let's see. But I see Anta's in the house. Jay Black is in the house. What's going on there, Jay Black? Here we go. Jim, honest question with Apple reporting this week, along with Amazon. What are your thoughts on running a double calendar or double diagonal to catch either side placed on Thursday before the closing bell? I love it. Right? Because those type of trades, right? Just thinking through the structure, just thinking through the idea behind, playing volatility and what have you, those type of trades allow you to take advantage of that high volatility in the front month. And then you have the back month that maintains a lot of its premium when it comes to the actual crush that comes out of the option. And so you're able to really take advantage of, that volatility differential between the front month and then the back month with that volatility crush that routinely and reliably does happen. And so I really like that a lot. When you're selling that front month, you're buying that back month. Whether you want to mullet the trade with a calendar or mullet the trade with a diagonal, I'll let you decide because they are slightly different. But I do like it there, Jay Black. I think it could absolutely work. So I got to go though. I'm out of time. I appreciate you guys so very much. I hope this helped, and I'll see you guys later today at 2:30 Eastern, 1:30 Central for From Theory to Practice.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Flying around. Hopefully you're paying attention and taking advantage of it. But we got Tim Knight in the house. And Tim, the chip stocks continue to sell off. How do you feel about it?
Well, I feel weirdly good and bad. The good is that this is what the charts have been calling for many, many weeks. And I feel bad because it's at times like this where all I can think about is the money left on the table. You know how that goes. There's no such thing as a happy trader. It just doesn't exist. Market's going against you, you're miserable. The market's going for you, wish you had more on. More on. I think that's how I feel right now. So
nice.
So yeah, I mean, I've said it before, I'll say it again, I'll say it to the day I die. Brilliant chartist, crummy trader. I mean, I'm printing money now, but I can't help but think about, all the SMH puts I shuttered. Just yesterday, I think we mentioned on the show, STX, Seagate Technology. I went loopy last week and bought puts on it. They did nicely. I sold them at a profit yesterday because I thought, oh, goodness gracious me, Tuesday afternoon, they're going to announce earnings. Volatility sky high. I don't want to get caught. And it's plunging, another $100+. This is why I like nominally high price stocks when I buy puts, because you get a lot of juicy potential, where you can drop $100, $200, etc. So to answer your question, the charts are just knocking it out of the park, and I'm doing pretty good portfolio-wise, but it's a little frenetic. I mean, we're only 52 minutes into the trading day, and I've been frantically rushing around, updating stops, and embracing regret.
Yeah, us too. I mean, I'm glad to hear you say, because this is a definitely frenetically paced day, and there's a lot of movement happening all over the place. What you got up? What's the first chart here?
Well, I'm just saving this for my dog. My role in this world is to counter entropy. And so I'm doing that right now and cause someone I can. Yeah. But let's start off with the spider. Let's go to the spider. Listen, you. I usually, this is how busy I am. I usually foreclose these creatures from being on the show, but
she loves being on camera.
I couldn't even close the door. All right, get lost. So the spider. Taco was a blessing, if read correctly, which I'm not going to claim credit for reading it correctly, but Taco was a great opportunity to get short yesterday because, as we can see, even at its strongest, the spider did not violate this price gap. Came close, but it didn't do it. The next question, and that'll be the last chart we look at, is what happens with the ES. So we'll just save that for then, but I'll just do a pregnant pause here. Any feedback, questions, what have you on the spider?
Yeah, I think the spiders are, they're chopping around, and we were talking about RSP a little bit earlier and how a lot of people might be thinking this is the beginning of a crash, but the equal weighted S&P is at all-time highs. So much more a sector rotation versus a bloodbath across the board. So I think right. I think you'll see continued chop here and some more narrow ranges in SPY until proven otherwise. Yeah, well, what's what's driving me this morning, of course,
is semiconductors, and the exaggerated view of that is KORU, the leveraged South Korea ETF, which is down, goodness gracious me, about 20% this morning alone. It's fallen from nearly 70 down to the teens in a matter of weeks, and a beautiful, not perfect, but it's a nice head and shoulders top there that I've rectangled. So yeah, that's and this is, I self-flagellate here about covering too soon and so on, but SMH, the reason why, and I'll just confess, I sold my SMH puts a few minutes ago because I look at a chart like this and it's like, wow, that is so just slaughtered. Do I really want to get caught in an updraft? But you know what? Just like with SDX, sometimes, put it this way. Just like someone like me looks at the market earlier this summer, it's like, when will this stop going up? It's just relentless. It just goes up every single day. It goes the other way too. It's like, how low is low? When's it going to stop? Oversold, overbought. They both happen.
Yeah, no, I mean, exactly. For me, I sit here and I go like this, right? I go like that.
Give me a moment. This is like the haunted whales of a castle. So just
for sure.
Your
Do your
call is
thing.
important to us.
I'll say this to the audience. I look at a chart like this and I turn my head and it's the same deal. Like Tim just said. I mean, you're wondering how low is low. It's the same deal when we look at a stock that's making a move, and it's like at some point, when do you cover? In his case, when you cover the short, or as it's making the move to the highs, and we're same deal on the flip side. It's like, at what point? There's plenty of things that we get out of that we're long. That again, look like this. They're about to reach the former, whether in this case low, but it could be the former high, and you're like, okay, I'm out of it or whatever, and totally understand. That's why I was saying at the top of the show this morning. Always the last 2 days, been really curious to get your thoughts, because we're seeing something for sure, especially on the semi side, and we're seeing the rotation to these other names, but. It's like, how long is this going to last? And it's just so happening that these things are happening right before Wednesday.
Yeah. Well, I mean, 95% of this game is psychology, and we're all different. We're all wired differently. And we're not alone either. I remember reading the other day that like the CTO of NVIDIA years ago gave virtually his entire NVIDIA holdings to his alumna, which I think was like, it wasn't like Harvard. It was like a well-known but not top-tier school like Rensselaer Polytechnic, something like that. And they were like, thank you, and they sold it all, and it was nice. But somebody calculated, like, if they just held on to it, it would be worth like literally like $700 billion. They could like buy Harvard just for the hell of it and throw it away. It was just like ungodly. We had the biggest endowment in the universe. It's like, hey, individual traders and huge institutions sell soon. So that happens.
Yeah.
Let's see. I'm just trying to hit some highlights in the time that we've got. Storage stocks, and just to twist the knife on myself here, I'll just go to STX. Storage stocks are really getting walloped, and for me, I got to tell you, as a trader and as a person with some emotions, I'm most excited like on days like this, like 4 days ago, when it's like, we're in the throes of a formation. We're getting close, but the price is still good. The risk reward is appealing. And this is what days like right now is when it's tough. Because it's like, this may be the most profitable day of the year, and it doesn't feel good at all. Because you're just looking like, well, what, you get old. When do I cover? How do I adjust my risk? Should I just take profits? That's where the monsters of greed and fear really fight it out. And so, like I said yesterday, I got on my puts, patted myself firmly on the back for my profits, and then just down it goes. And I got to tell you, I think they're reporting tonight, this thing could plunge. We could see this plunge tonight, and then you'll hear the screams of agony from California to Illinois.
Yeah, I think this is an interesting turning point here. And yeah, STX was one of the stocks I looked at, Bloom Energy, Enphase yesterday on the math check that I did on the YouTube channel. But these are huge implied volatilities. Like STX with a 105-point implied move for 3 days and a $700 stock. Like, that's crazy.
Yeah. Well, I'm not sophisticated, obviously, about options. And just intuitively, I thought to myself, look, it's taken a nice couple of days down since you bought these puts. A big chunk of the value here is extrinsic, and I don't have the mathematical minds that you guys do, but I just knew intuitively that the IV crush is going to hit. What if not only that hits, but they have a pop higher? The self-talk, how it goes, like, okay, just take your profits and get out. But it can go the other way too. And as a chartist, I look at this and like, this is in trouble. I mean, in my semi-defense, I shorted this soon after selling the puts just to have some participation. So it won't be total loss. But I look at this chart and I see a down move tonight.
Yeah.
Yeah, I mean, this is one of many, and as you alluded to, I mean, we got STX, you got Bloom Energy, BE, you got LRCX, you got
SNDK.
Yeah. Well, no, I'm saying who actually have earnings tonight. Like STX has earnings tonight, BE has earnings tonight, LRCX has earnings tonight, KLAC has earnings tonight.
I know, and I've got to take a close look because I do not stay on top of earnings dates the way I should. But BE, I'm short BE now. It's got a good profit, and I'm probably going to cover because there's some that is just like they're so deeply sold off. It's like just maybe it's time to take some money off the table. But yeah, today, tomorrow, Thursday, it's going to be a tidal wave of earnings announcements.
Yeah, it's going to be wild.
I just sold the put in DE. I'm getting crazy, getting wild and crazy.
Yeah. Let me to close with as much as I like to talk about tech, let's talk about ES instead, because we started with the spider, but let's end with the ES because I've been pointing out how the NQ it's already failed support, and it did so. It feels like Friday, but it's only Tuesday. I think yesterday we were just peaking below that when we spoke, and so we're not going to hit that. We're going to look at ES instead because it's still above its own support level, and we've been range bound here since early May. And this line, this green line that if you're on here, is a pretty decent approximation of key support. And it would take one ugly earnings report to do the deed. And I think that would, like the diamonds were flying higher this morning. So it's not like everybody's falling. It's really just all about semis and memory and tech. But if we can cut through this level, I think you're going to see a new phase and a broadening of the sell-off. Hasn't happened yet, but that's a level to watch.
Yeah, absolutely. Well, Tim, appreciate your time. Going to be wild to see STX. Hopefully we don't hear the wails of your profit.
Yeah, a sigh of relief maybe. Yeah.
But we'll catch you a little bit later. Appreciate it.
All right. See you both. Bye-bye.
See ya.
Later.
STX down 100 points right now with a 100-point implied move for earnings after the close today. We'll see what happens. We're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Well, What's up, Tasty Nation? Welcome back. We got a market measure sponsored by Cboe. But first, let's take a dive into the platform, recap some of these trades of this morning. We've got tons on the follow page that we've posted here. Boeing closed a $200 winner from a call diagonal from yesterday. GLW, you've been deeply involved in this thing.
I just blacked out, Mike. I just been blacking out and just trading here. So yeah, I guess you could start from the bottom because again, I think it's an important story of the day. I mean, we came in, we could see that a lot of these semis were already making moves down. I've been short of Strangle in here, and I'm short a put in SMH. It's probably right around here actually, the 520 in August, and yeah, it's exactly right here. I just decided to close that upside call. It's like $1. I mean, I could leave that on, but why not? Just close it. I just don't want to have to think about upside at this point. Now I'm just short a put.
Yeah.
And I just want the stock to rally. Now I'm a champion for SMH. GLW earnings call spreads that we were short. We profiled this on Trade of the Day yesterday and closed both of those. And again, the idea was these names have been taken on the chin. GLW, regardless of what you think it used to be, it is related to the AI trade now. And this thing fell on earnings. Not really a surprise. Didn't expect this much of a fall, but did expect a fall and possibly vol to come in. It's fallen so much now, who knows, vol might start to go up. CRM, look, we've been in the software trade for some time. We're still long Microsoft, and that's been the play. Also still long Palantir, which for whatever reason is down today. But I've been betting on software to come back. Now I just want to place a little bet that if it doesn't work out, if this pop doesn't last, because honestly, it's been just really these past – we've seen pops and then they fade. In the last 2 days, strong pops in software. This is my super bear trade to see if there's a fade in CRM along with the rest. EWI, similar deal to SMH, just bought back the call. Now just cheerleading SMH. Sold to put in Intel. It's one of the names that already had earnings. We already have a position there, but decided to sell another and further out in SEP. Marvell, same deal. I know it does have earnings coming up, but you look at that chart, that thing's taking on the chin. My play here at this point is chips are going to bounce back over the next 2 weeks. Costco closed out a calendar in here. Again, this has been the rotation we've been seeing into Costco, into Walmart, Procter & Gamble. Obviously, we saw Coke with earnings this morning. You see those names. Then finally decided GLW is one of those names that has had earnings, clearly, and vol is still kind of elevated, so just want to sell downside in there and just be a champion for chips and AI trade.
Love it. Yeah, I've had my eye on this Costco trade, so I had the 1100 strike calendar. I peeled off the short call in August, the August cycle for 70 cents. I think I sold that for $600 of raw value, bought it back for 70 cents. So captured 90% of the cost basis reduction on that short call, and now we're seeing a 30-point rip higher in Costco. I just looked at reselling it, but I'm gonna hold it because like this, it's very clear that the sector rotation is here. And if the chips continue to sell off, I imagine Costco is just gonna keep rising higher. And I'm making almost $300 today on this long call. If we get another 30-point move to the upside this week, this will be a $300 winner from a calendar spread that was like a $5 debit. So I want to keep that on. I also was looking at Netflix. So Netflix, I totally forgot we did this, but we put on this Super Bowl, the 65-60 put spread to buy the 75-85 call spread in September and did it for a scratch, 12-cent credit. It's now trading for a $200 profit because you don't need the credit to have these things work out for you when you have a 10-point wide call spread that appreciates against a 5-point wide put spread that depreciates on a rally. So same story. If we see the chips continue to fall, I imagine something like Netflix that's outside of that realm could see a bid, because we're seeing the sector rotation with RSP at all-time highs, the equal weighted S&P 500 product. So Netflix is going to keep on, Costco going to keep on, and then everything else, I'm just kind of keeping my eye out for some big P&L day numbers and then looking at it to see if there's anything to do. Microsoft, another one up $6 today, catching a nice bid. They have earnings coming up. I've got the 450, 460 call diagonal spread as like an earnings shot here. And then I have the long-term 500 calendar. So I'll probably throw on something else for earnings, but I'm going to leave both of these with the same sentiment that if we see the sector rotation continue, I want to be a part of that. And that's pretty much it for this portfolio as of right now. But yeah, I did post that closing order for Boeing. It's actually looking much better right now with Boeing up $10.
Yeah, my Boeing's, it's another one I need to keep an eye on. That's the other thing. A lot of times with these earnings names, and if I just put it on for earnings. If I get the move, I take it off. I mean, these were so cheap when I put them on that it's still kind of cheap to some degree. So I have the 225, 230, and 235 calendars, July 31st versus the shorts versus long August 7th. And I can't say they've appreciated a whole lot, which is fine. I don't know how much longer. Maybe I keep this on for now. Again, I bought like the 225s, which is the closest at the money. I bought those for $1.15 yesterday. They're trading $1.78 right now. So
yeah,
there's no rush for me to really take these off as of now.
Yeah. If you get a little continuation, these will really explode.
Yeah.
Especially with the short options. The short options are actually holding on to some value. You can see here. I had what did I have? The 225 short call. Yeah. The 3-day. So it's basically flat into this 10-point rally, which is really speaks to the vol crush in the 3-day with the delta move, how you get this like net neutral move here. But still, all this premium goes away in 3 days, and your 10-day options are going to hold on to value for sure.
But if you're wondering why we made this trade, I mean, this was one where, again, we don't make every single earnings trade, but sometimes certain ones are more interesting than the others. And LMT earnings, stock ripped on earnings. And we're like, okay, maybe Boeing is going to try this. Let's try a small amount of money to throw at it, considering our accounts. In my case, it was $200 and change. Let's see what happens here. Well, I don't remember exactly how much premium you put up there, but again, we just saw that move and we said maybe Boeing makes a similar move, and there you go. So maybe we do get a continuation. Maybe there is a day 2. Yeah. The only problem with Boeing's day 2 is it comes on Wednesday tomorrow, which is going to be a crazy day. So who knows what the heck's going to happen?
100%. Do we have anything in the YouTube chat? Anyone asking any questions, trade ideas we can take a look at?
Good point. Yeah, let's take a look.
See what the people have today.
Well, I know somebody, Frankie sent me a little chat earlier about somebody giving me some props for the GLW trade. You're welcome. Appreciate it. We also have somebody now. Can take a guess at what the
Super Bowl? Super Bowl and Super Rare? Sure. We can answer your question about that Super Bowl and Super Rare. What are they asking specifically?
Just over the setup. I've heard y'all say it, but never seen the setup. Well, that means you got to watch the show more because we talk about it just about every single day. But we appreciate you asking.
Yeah. It's funny because like I really wish I had a really strong answer for you. Like, it's just
I know
you can do it however you want because it's not a premium selling trade. Like there's things I won't do from a premium selling standpoint. I'm not going to sell an iron condor 300 days out because you're just taking risk with no profit potential. I'm not selling an iron condor or strangle in an earnings cycle that's coming up. If like let's say you have earnings in 20 days. I'm not selling a strangle or iron condor in that cycle because I know that the premium is not going to go away until the earnings announcement. Mm-hmm. So what does that translate to? It translates to a lot of risk. These are directional trades. So you can do literally whatever you want. We like to go to the expected move. So like if I were to put this on right now in SPX and I wanted to throw this on for a rally today.
I think we should start here.
Yeah.
It's what makes this trade compelling is that it's especially in SPX, you can use it in a big product to take a directional play. And you're getting a credit to make a directional play. You just don't get that too often.
Yeah. Yeah. And it's really a risk reversal type setup. So like let's do a 5-point wide. So instead of selling a put spread by itself for $1, 73.45, 73.40 right at the expected move, instead of collecting this $1 where I have neutral profit potential to the upside here, if we isolate just this trade that I have on the screen. Neutral profit potential from an expiration standpoint, $100. That's it.
And it's a bullish trade.
It's a bullish trade. I can have a lot of winners regardless of how high SPX moves or if it's just neutral here, I'm going to make $100. Mm-hmm. The reason why we put these trades on is because it's such a huge product. If I put this on, I'm going to have to wait till the end of the day to get 60, 70 cents out of this thing.
Mm-hmm.
Instead, maybe you go up here and you give up some of that premium. You go up to even the 7,500, 7,505. Okay. Now I've given up half my premium, assuming I collect 50 cents of credit here. This is a 1-day cycle, but I'm still collecting a credit in the middle. And that is still neutral premium. It's still a high probability trade because I've only reduced my break even by 50 cents. It's basically a non-factor. Like my max loss is still basically my max loss from the other trade.
Mm-hmm.
However, now if you do get a rally of 100 points over the next day and this thing goes fully in the money, what's the difference in my max profit for this one versus the other one? it's an extra $450. That's an increase of 450% on my initial max profit. My initial max profit on the previous one where I just sold the put is $1. This max profit is $500. We had the same thing yesterday happen. We put the super bear on when the E-minis were up 60 points pre-market, and we watched the E-minis go from up 60 to flat. That resulted in a $500 winner, which if you just sold the call spread, it would have only been a 70-cent winner. So like you think about these issues that people have with short premium trades, especially in 0 days or 1 days, and it's like, okay, I'm picking up this premium, it's high probability, picking up the premium, and then boom, 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 you have a couple of losses in a row, and your premium is not as strong that you collected in terms of the upfront max profit. Now, you throw this on, and you get the directional move right in a big way. You've just made 5 winners, 6 winners in a row in 1 day.
And
That's
it's
the power of it.
Also, again, the call spread is a bullish trade. And so where Mike started it is exactly that. Say you sold that put spread thinking, you know what? I'm selling this put spread here. I want to sell out the money. I want to collect this. And I think somehow S&P 500 is going to go above 7,500. Well, guess what? That's why you put the call spread on too, right? Like, again, we're not saying those particular strikes are going to work, but just the idea behind that trade, you sold that put spread thinking that it was going to go up. And not only that, you're like, you know what? We might go above 7,500 too. Well, then you got basically this free call spread on, right? And your risk profile to the downside is exactly the same. And you got this upside kicker.
Yeah.
There it is.
And that's it. It's really just like, okay, I'm taking on a little bit more risk. My max loss over time is really not going to change all that much. I'm giving up 50 cents, but my max profit potential increases 5x. It's like you're taking on a fraction more risk and you're increasing your max profit by 500%. Like that's how these set up. And that's why we really like these for any type of environment. I have one on in SpaceX that's 300 days out, or sorry, 600 days out. Sold a put to buy a leap call. Still neutral premium in the middle. But if I get that rally to the upside, my short put that would have been, a couple $100 winner can turn into thousands and thousands of dollars because I have the long asymmetric call on, but I have it on for credit. So that's the whole point here. But hopefully that is helpful. And yeah, keep the questions coming in the YouTube chat. But we're going to take a quick break. We'll be back in just a few seconds here. You're watching Tasty Live.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Hello, Tasty Nation. Welcome back to the show. Markets are crazy today. It's an insane day. E-minis flat. NASDAQ down 350. Trying to catch a bid here, but we've got Jermal in the house. We've got Craig in the house from CME Group. How you doing?
Good. Thanks for having me back.
Of course. Always.
Yeah,
Whatever
it's
you
always
want.
always a pleasure. All right, be careful what you wish for.
He's knocking on the door at 7 a.m.
All right, guys.
You guys ready for me?
What are you looking at today? These crazy markets.
Yeah, I think we're looking at everything, right? But I think one of the things we wanted to touch on was the fact that we had kind of a historic launch yesterday of a new product called single stock futures. And I think we actually have some slides with some of the names and some of the sizes. But as of Sunday night, we launched futures on single stocks. And I've been around for a lot of product launches. I've been around a long time. And this is one of probably the most exciting launches that I've been involved with, either as a customer or as an employee of the exchange. So as of Sunday night, you can now trade futures on 55 different single stocks or essentially single name equity issues. And they're names like you would expect: NVIDIA, Apple, Google, Tesla, and then also obviously other sectors as well, like financial, JP Morgan, healthcare like AbbVie. So I think we covered all the different sectors with this offering, and we have two different sizes. And in fact, I think if we roll the slide forward,
let's do it.
So we have 77 contracts total. So I said 55 names, and within those names, we have 22 that we have smaller versions on. So we have 55 names total. On all of them, we have contracts that are worth 100 shares of those names. And on 22 of those names, we have micro shares. So they're worth 10 shares of that company. So essentially, if you're looking at like NVIDIA and you do the standard size, that's 100 shares worth of NVIDIA. If you do the micro size, that's 10 shares of NVIDIA. And then some of the characteristics of these are the same things that we talk about with futures in general, right? They're open nearly 24 by 5. We open up Sunday night at 5 and we close Friday at 4 with a 1 hour break. You have that capital efficiencies that are associated with futures. So instead of like that Reg T 50%, it's statutory minimum is 15%. So somewhere in that sort of 15% to 20%, I think, is where most of these landed in terms of margin. So again, we talk about that capital efficiency of futures that now we have with single stocks. So we're really excited about it. The liquidity is going to evolve, through this week and next week. But it was a successful launch, and we have a lot of interest, from the market maker community, from the retail community, and then also the institutional community. So it's one of those launches that we're really excited about, and just glad that we could talk about it just for a couple minutes here.
So like NVIDIA, for example, NVIDIA's trading $200. How does it work? You just buy, it's like basically buying 100 shares of NVIDIA?
It's a great question too, because, in futures, we have that basis, right? So where NVIDIA might, and I think it's worth pointing out because someone might see NVIDIA on their screen in the cash market or the underlying stock, and it might look like 200 at 200.05 or something like that. It may look something like 200, 0.75 at 200.85 in futures, because there's a thing called basis. So because futures don't pay a dividend, and because you pay interest on that margin, or not on the margin, but there's a cost of carry, right? When you have a leveraged product like that. So that cost of carry is going to make the price a little bit different. So it's worth pointing out. But yeah, essentially it just looks to see you have got a bid and offer with the price. And if it's the standard size, it's 100 shares. If it's a micro, it's 10 shares.
And so then these has expiration dates, I assume, like they expire?
Quarterly expirations, right. So they expire March, June, September, and December, and they settle to cash. So if you hold it till it expires, you're not going to get the 10 or the 100 shares. Rather, it's kind of like the S&P and the NASDAQ. They'll settle to cash. The money will move one last time, and the position will be gone, unless you roll it, right? Unless you wanted to maintain that exposure.
And then there's the 1/10 the size, so the other one is like $20. NVIDIA, say NVIDIA's trading 200.
Yeah.
Yeah, the 1/10 the size one's trading $20 or whatever.
Well, no, the price would be the same, but your exposure, right? So if you look at like, if you think of it in terms of exposure, if you buy the standard size, the 100 shares, you'd have $20,000 worth of NVIDIA. If you bought the 10 share, you'd have $2,000 worth of NVIDIA at that price. But the price is just going to look like the price, right?
Similar like GC and MGC.
Exactly. Right. The price doesn't change just because the contract's smaller.
Okay, cool.
So
love it. I think it's a big step forward with the retail industry too. It's just like you have these issues with earnings reports where you see the earnings number come out, you see the stock go up or down, and the current landscape, the equity markets are closed. Like if you have an options trade on or some kind of exposure, you can't hedge it effectively, where this kind of opens up that window where you
Exactly. All right, you want to get into silver? I'm glad we were able to talk about that, but I think moreover, we're here to talk about CME's silver futures today, which I think we have some slides if we flip forward.
We can move to the next slide.
Yeah, there we go. So silver. On the slides, I think we talk about what we call the standard size silver and the micro, which the standard size silver is 5,000 ounces worth of silver and the micro is actually 1/5. So it's a little bit different than some of our micros where the micro is 1/10 the size. In silver, the micro is actually 1/5 the size of the standard. And it's worth mentioning too, we actually have a third size of silver called the 100-ounce silver. We don't have slides on, we won't talk as much about it, but know that that's out there, and it's even an even smaller contract. If someone is just getting into this market, it might be a good way to sort of explore the silver market, because instead of 1,000 ounces like the micro is, it's 100 ounces, so a much more approachable size.
Love it.
It's the 1OZ, right?
It's called SIC.
Sorry, SIC.
Though it's but it is actually, we launched that 1 ounce gold, and this was kind of, that was successful, and it kind of showed us that there was an appetite in the market for these smaller metals contracts, which is then we launched we call it the 100 ounce, or the SIC is the commodity code, similar in size to that 1 ounce gold.
Yep.
Love it. Yeah, these are small products you can get super granular with, and especially with smaller accounts where if you see a price extreme, you want to hold it without a stop, like these are the products that you can use that.
Exactly.
It's small enough.
Exactly.
We got some quick people. I know we're on silver, but somebody's just curious if the 60/40 tax applies to, and I know you're not a tax guy, but 60/40 tax applies to the stock futures.
Yeah, and again, I'm not a tax guy, and I'm not going to go there. Obviously, that 60/40 is associated with some futures contracts, but that's a question for an accountant.
Yeah, true that. Let's move on with silver.
Yeah, and silver's an interesting one, right? I mean, I think you guys, I'm sure, saw that sort of parabolic move that happened earlier this year. Really historic move, right? And and it has the interesting about silver is that it has some characteristics like gold, like it has some precious metal characteristics, so it's generally going to be correlated to gold, but it also has an industrial use that gold really doesn't have, right? So while it has that inflation hedge, that store of value, it also has, and in fact, increasingly, it has industrial uses with EVs, solar panels, and things like that. So silver's kind of an interesting one because different factors, even than gold, can drive it at times.
Yeah, anytime you have that overlap with a sector that's just booming, that's going to be good for volatility also, but maybe a price floor per se.
Yeah, right. And then different, and the forces can act on it in different ways too, right? Because some of the industrial uses, that's going to kind of tend to draw a bid when the economy, let's say, is booming, right? Like bigger output, all that stuff. Whereas the inflation sort of flight to safety, though, is going to have that opposite effect. So it's an interesting metal to watch, although a lot of people will trade it with gold, right? They'll trade that gold-silver ratio, which, again, futures make that very approachable because you can short them just as easily as you can get long them. So if you wanted to sort of do that relative value trade with gold, silver's another, it's another. And if you were looking at silver versus gold, you'd look, one, obviously at the notional value, right? So if you look at the micro versus micro, you'd look at how much gold exposure versus how much silver. But also silver is about twice as volatile, right? If you look at like the implied volatility, silver is almost like twice as volatile as gold. So then you've got to decide, do you want to, incorporate that into the ratio that you're trading those two metals with?
Yeah.
Yeah, that ratio. I was just looking. I haven't looked at it in a while. It's 69. I mean, it was all over the place. Golly, but 100 is always that level. And yeah, let's pull back up the events to trade these things with, because 100, I always learned kind of is that level that we always will see when you see that ratio hit 100. Usually there's something going on, macroeconomic wise, or a war or something like that, and that's kind of what we saw earlier this year. But it's calmed down quite a bit at 69 and change.
Yeah, so I mean, I guess to wrap things up, we just wanted to showcase the silver market, the fact that there are 3 different sizes, that it is driven by different forces sometimes than even the gold market, even though it tends to be pretty highly correlated with gold. And then obviously all the same things that we just talked about, the capital efficiencies, the 24-hour trading, and then of course there's options on all of these metals, right? Gold and silver. So if you want to, put on a risk to find type of strategy, you can do that versus like the futures where, that risk is unlimited.
Well, just to tease something, you and I are going to have a little piece in a little bit. And I'm actually going to do a risk to find options trade. I always like to use the options. It's like, I'm just the options guy though. It's kind of how I roll.
Yeah.
Perfect.
Love it. Craig, appreciate your time.
Thank you guys.
Absolutely. E-minis chopping around here. NASDAQ down. No surprise there. The Dow and the Russell are moving in opposite directions as well, but we're going to pass this over to Chris and Liz in just a few seconds. Thanks for joining us on the morning show. Stay tuned on the Tasty Live website as well as the YouTube channel to keep those questions and trade ideas flowing in there. We'll get to them throughout the day, but we're going to take a quick break. You'll be back on the other side of this break. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're watching Tasty Live. This is Confirm and Send. I'm Chris Vecchio. She's Liz Deerking. Liz, how are you today?
You know what? Pretty good. Pretty good today. Been a weird market, right? I mean, we're down big. They're trying to rally them back. What say you about this market, Chris?
Where are you looking? S&P looks boring.
I just look at the SPOOs. So they were down 20. Now they're back to unchanged. That's all I know. SPOOs are my guiding light. They always will be, and that's what I look at. Even though my account doesn't swing with the SPOOs, that's where my visualness will always go.
Yeah, I mean, there's just anecdotally, there's such a clear pecking order for what generation talks about what index.
Correct.
And so like my grandparents, my parents, they talk Dow.
Yeah.
And then like Gen X, older millennial talk S&P. And then a little bit younger than me, they're focusing on the Qs. And then younger than that, it's like, I don't know, Dogecoin or something. But you really do see like people's point of reference is really when they learned to start trading what was popular at the time.
It is true. And old habits die hard. I can't stop calling them the SPOOs. When I say that, nobody would know what I'm talking about. Now, that being said, Chris, both of my kids call it the SPOOs.
Tradition's important.
Yeah, tradition is important.
What a day, though. S&P is off by 5 points. That does not tell the story of what's happening beneath the surface, particularly in the tech sector, where the NASDAQ was off 2. It's only off 1.4 right now, but that doesn't mean this day is over or any of the selling is near finished. Liz, the headlines overnight I don't think really necessarily matter because all we know is the prices are down. Although perhaps good news for the hyperscalers along the way because there could be more supply coming in. China's apparently ramping up domestic production of various equipment in order to make their own chips. So more chips on the market, probably good for some of these companies' margins that have been just bleeding cash flow. But that's neither here nor there. I want to pay attention to volatility amidst all of this selling. The VIX is different than VXN, which would be the volatility index for the NASDAQ, of course. So with the S&P basically flat, are you surprised that we have a VIX that's only down 8 pennies here today when the NAS is off 1.4%?
Yes, I am surprised. I'm shocked. But I will say it's not reacting normally. I feel like something has changed. Something has given it. I've said this before, and I'll say it again. And people smarter than me will research it and tell me after the fact, but something has changed.
What might that be? I mean, what's your inclination, gut feeling?
So things are not moving according like they used to. And I think, I don't know. The only catalyst that I can say is when you're looking at all these hedges are cheap, right? Where they gave us all these nearer term options, which keep hedges cheap. So if your hedge is cheap, that means your people are buying. I mean, there's more buyers than sellers, then the volatility has to stay higher than it usually is, right? So now we were down today. I would have expected a little bit more of a pop, but we're at VIX of 18, right? So things aren't normal. They're not normal. Like the skews aren't normal. The VIX isn't normal. Things are just, and what is normal anymore? Maybe this is the new normal.
You mentioned normal, 74.40 here in ES. There is the ever slightest of put skew here in the 0 DTEs for what it's worth. I'm going 10 points wide, 74.50, 74.30. And the puts are $11. The calls are $8.60 right now. So like it's just today's a weird day. It feels like it's been a weird few days here with some of these cross asset moves and like not a typical volatility, broader market relationship. The individual names are doing the heavy lifting, obviously.
They are.
So what's the plan here moving forward then? We're getting into earnings now. We had a bunch this morning. The Coca-Cola trade that we put on last week, Liz, seems to be working out just fine with this breaking out to new all-time highs, right? Bought that little dip for the 78.80 short put spread here. So that's doing nicely. There's still 24 days to expiration. I didn't have this.
You got to close that.
I only made $46 in it. I'm like 20% max profit.
But look at your prices. Isn't it only like 10 cents? Or are my eyes deceiving me? If you go back to the trade page, what is that?
Yeah, I mean it's small. It's small.
You got to close that.
11 fine. All right, I'll take your advice. I'll close. So let's get rid of it. Coca-Cola is a name that I'd be very interested in buying and dipping in again, though. I mean, like this has been one of the peculiarities about this market. If you've been trading everything that's non-tech, you've been doing fine-ish. It's only been tech and semis that have been getting slammed right now. So looking around the board, I mean, UPS, PayPal, UPS had a bad day today, but PayPal had a pretty nice earnings reaction. The market's not necessarily screaming pain unless you're looking at the semis.
It's definitely cyclical. And you know what I'm thankful for you for putting me into this too is RSP. So once again, like I said, I always look at the SPOOs, but I do like the equal weighted. And they were making fun of me saying that I've been listening to you too much. And I said, hey, listen, it's working. So.
It's working, right? Yeah, RSP, equal weighted S&P 500. Close this year, it's a new all-time high.
Yeah. Well, and it's kind of nice. The equal weighted is kind of nice too, because what we're seeing is the sector rotation, but they're so heavily weighted into those tech stocks. Even the S&P is not even the NASDAQ, that it seems to be taking that on a wild ride, where the RSP is a slow and steady chug up because it's a rotation into different products.
Total rotation into different products right now. Top sector performers before we get over to your questions, which you can always send in research at tastylive.com. Liz, I don't think it's going to surprise anyone. Semis are the ones taking it hardest, down 4.25% today. But staples. You mentioned that sector rotation here. Consumer staples are now at their highest levels since early March. A whole host of names here are doing well on the back of some of these earnings. But we do have more earnings coming out. So before we get to confirm and send, I want to take a look at the afternoon calendar here, because there are probably three names that folks are, focused on. Visa, which is non-AI, of course. And then you have CLAC and STX, both of which are chips. There's probably going to be a little bit more action in STX and CLAC. So I'm curious, what are you thinking about these on a day? STX is down 11% before its earnings.
You know what? I have not looked at these yet. I haven't looked at Sticks or CLAC. I've been focused on Bloom Energy, which I know is one of our things, but I also asked the boys this morning, which might have come from what I asked. But so Sticks and CLAC both have earnings today, huh? I didn't know this. So this is only it's a $726 product. I really would like some of these to be, your $150 $150 to $200 range. $700 is a lot because no matter what you're doing, you're going to have to be defined for the risk, right?
You have to. I mean, no matter what you're doing. And I don't even know if the pricing is that fantastic. But I mean, it's a huge move. Implied volatility, we'll call it 192%, $103 either way through the end of the week. I'm trying to go just till the end of the expected move, and I'm not really getting. Maybe we are, but $10. No, that's we're not necessarily getting what we want to see.
No, but what's crazy is because given the move that it's already down 11% today, and it's got $102 expected move, I might actually only play one side. If I was going to do this, I don't know that I would play both sides, because if it reverses just what it did today, you're up already. So I might just go to the 625, 6. No, you're not getting enough. And
that's what I'm saying.
Yeah, I went to the 625, 615, and you're getting $1.10. I mean, okay, Chris, let me show you something real quick. And I don't know if I'll go back so I can see you too, because I was just in my account. If you take a look at the downside here, this is where the common sense slide kind of kicks in. I gotta make sure I can see you. If you go to the 625, 615, you're getting 110 for it. Change it to the 625, 620. You're getting 125. You got 110 for $10 in risk, and you got 125 for $5 in risk. This says no bueno to me. Like, no bueno. Look at these markets. No way. So you actually get more for taking less risk, and you're not. That's avoid like the plague.
Avoid like the plague. Yeah. I mean, it's a good point. So then you also have CLAC here, which CLAC has a different, STX or STIX, as you just called it. STIX does have those 3 days to expiration options. CLAC does not. We're sitting out at 24 days. So fundamentally, the way that you approach this, I know that you say it's an earnings trade. If it pops in your direction, you take it off regardless. Yes. But 24 days to expiration is different than 3 days to expiration here. And so you're looking at a little bit more of a wider move.
Yeah, but I would still follow the same principles. But what it allows you to go 24 days is that it's not forcing you. So for me personally, it's not forcing me to trade the 1 day or the 2 day. You can go out. I can comfortably go out to the 24 day and feel like I'm getting it's the most earnings move that I can get, right? So that it takes that decision for me off the table. So you can get a lot farther when you have some duration on your side.
And you were mentioning you're looking for a stock that was closer to $100. CLAC's trading in at 189, so the number fits a little bit better than what you were seeing in STX. These strikes are odd. They're not dollar wide or $5 wide. They're $2 wide up and down the chain here at 24 days to expiration. That doesn't matter. What matters is that there is actually perhaps some interesting pricing here. Liz, I went $2 wide, of course, to me $4 wide. So 228, 232, 148, 152. That's a max profit of 160, max loss of 240. So you're taking in $1.60 of credit on that $4 wide strike. I mean, how do you conceptualize this? Is that even worth it, given it's down 7% today?
Yeah, but you know what, though? It is worth it, because what you've done is you're a $4 wide, we've got 160. So you've got more than a third, right? You're over a third of the width of the strike. So in my mind, you're taking your drawdown less than it would be. Instead of, if you're looking at a third, what would a third be? It's $1.20. You're getting more than that. You're $1.33. You're getting more than that, so your drawdown is less. I think it's something that I would do if the markets were tight enough. But I'm taking a look at this. They're pretty wide. You're looking at
90 cent. Yeah.
370 credit at 50% debit. And I'm just looking at the bottom where the math is done for me. I can't believe I can read that. And that's doing the math on all four of those things. But those are pretty wide markets too.
It is.
You see some open interest on the put. You don't see any open interest on the calls.
And it's so fascinating because when you look at a name like this, 5 million shares traded today, but the options are just not as. I mean, this is the closest expiration cycle. The at the money calls. Where's the open interest? Where's the trading volume? On either side of the ledger, quite frankly. So this to me, right, when we're sorting through these earnings trades, CLAC has had a big move. It has come off substantially from its highs. Are you going to Hotel California yourself into a position here? And no. I think, right, you could just get in, but not a lot of people are trading this, and you might not be able to get out.
Yeah,
at the price that you want, at least.
I don't know that I've ever traded this. I don't know that I have. And that's just another thing is we kind of looked at there's so many names out there. Why wouldn't you stick with something that's a lot more liquid?
Right. Visa here, last one before we head over to the confirm and send questions. Just a quick peek at the $2.50 wide strike. You're getting 50 cents on $2.50 wide strike there, Liz, for the 3 days to expiration, just on the outside of the expected move. I don't know. Visa, maybe we play for within the move?
It's so funny there too, Chris, because now I'm getting greedy with the implied volatility, right? So you only got a 61 rank, which we've seen higher, and you only got a 47% implied volatility, which we've seen higher. So now I'm getting greedy. Now I want more.
It's non-AI name. What's been working with the non-AI names? Inside move. It's been up and inside move, down and inside move, but inside move.
Press that button, Chris Vecchio. There you go.
Yes, ma'am. All right, we're going to head over to our confirm and send for today. As always, you can hand over your questions to us in our handy little inbox. It's research@tastylive.com. Research@tastylive.com. Liz, folks can also send it in via the YouTube feed. We try to answer your questions as they come in over the course of the day, of course. If you're on the platform, come over to YouTube, like, subscribe, smash that button, and help juice the algo. Okay, hey Liz, we got 4 questions here today, as always. First question, and you were thinking about this. I've heard a few people make this joke today about Bloom. Bloom Energy reports tonight, price for a 22% move, but its average earnings move over the last 10 quarters is only about 12%. When the implied is nearly double the historical average, is that finally enough premium to sell into, or is this a name explosive exactly where you get run over anyway?
Okay, so this has not run me over. This is the gift that keeps on. Bloom Energy has been very, very good to me. So I am in a unique position because I'm long shares. Now, today it's not helping me because it's down 12% today. And I took off all my hedges going into today thinking that I would do something over it. My infinite wisdom last night, I closed all my options against my stock, thinking I would put something on fresh today with the look of it. So I don't know. I mean, you're looking at a 79 IVR. You have a $164 product, but this thing, I know that how long of a chart do you have on there? 2 year?
This is going back to last November.
So Bloom Energy was a $10 stock, right? So this is like everything else. This was a $10, $12 stock. I remember when Vanetta started talking about it, and I was like, oh, that's interesting. I'll get into it. And this has been good to me since. So I've been using the premium. So I don't want to misspeak because I don't want anybody to get run over. But this is one of those stocks where if you look, it's been in an upward move and now it's in a downward move. And the premium in this has been very juicy, enough where it doesn't steamroll me. I mean, don't get me wrong. It's good to be on the right side. But like I said, I'm long today, but it still hasn't taken away all my profits.
No, and look, I think one of the questions you have to ask yourself when you see that mismatch between implied volatility for a cycle and 330% is wild.
It's wild. That's insane. What were we just looking at? Where I was like, oh, I want more. It was like
Visa, 40%. Well, there you go. The question is the old data or the old earnings reports for which we're basing our historical average, is that from a regime that no longer exists, right? Or is the market misunderstanding something right now? It's very possible that this is the correct pricing, that we're looking at, 22% move for the earnings. It should no longer be 10%. It should be 22%. So the price is right. But I think, Liz, what I see when I look at that relationship, it's kind of like IVR and the raw volatility. It catches my attention. It doesn't automatically get a trade because we have to look at the bid-ask spread, the options, volume, the open interest, yada, yada, yada here. So the question is, are you willing to $40 move through the end of the week on a $164 stock? So basically 25% one way or the other. What does the pricing look like, as always?
I'm not going to lie to you. I a long time ago gave up trying to say that I think things are mispriced because they never are, right? Or 9 times out of 10 they're not. So that's just it. I think that the options are way smarter. The options pricing are way smarter than I am. So I take it at face value. If you want to trade it, get out of its way because it's saying you can't be confused or frustrated if it moves inside its expected move. You know what I mean? Get out of its way of its expected move because the options are pricing a very large one.
Right. Define risk, as always with all these earnings. Define risk, smaller size. Catching a falling knife here, perhaps. This thing I can count, I think, maybe on one hand. Just kidding. 2 hands. I don't have that many fingers in one hand. All the green days that we've had since the end of June. It's just, I find so much difficulty in trying to call a bottom in something like this when it feels like it's going through a liquidation of sorts.
Oh, I don't know that I would try to call the bottom in this, but you can sell premium in it if you want to. But once again, I kind of agree. If anybody feels uncomfortable putting something on, don't do it. You're the master of your own trading account. Everyone is the master of their own trading account. If you feel a certain way, no one can make you feel inferior without your consent. I've said that for a very long time. So no one can make you feel that way without your consent. So if you don't get in the way of it if it bothers you.
I hear you there. Let's go on to the next one, and it's a similar type of company here, Enphase. Hey, they do my solar. Reports today trading at $35 after hitting a 52-week low of 73, so it's down more than 50% from its peak. When a beaten-down name reports with elevated IV, does the crush price make the premium safer to sell, or does a stock this deep in the hole just keep finding new lows?
I mean, it's at all-time lows. And the boys this morning did a downside ratio spread. I don't know if they did it live on air or they're doing it for one of the other things today, but they were looking at it saying it's down. So what they love is the downside put ratio spread for a credit. It's a cheap product. It's only $36, so it was cost effective to do a downside put ratio spread for a credit.
Well, they lost all of their subsidies last year. I know that for a fact.
Did they?
Because they were all like, you got to get your system turned on by December 31st in order to be eligible for your tax rebates, which we did.
But so I do like the downside put ratio spread for that fact, because when you do that, you are taking in a credit. I understand that, but you will make more money if it goes down. So I mean, you're gonna have to go a little far, bring it up. You're gonna buy the 34, buy 134, and
buy
sell,
134,
buy 134, and sell two. You need something for what? You need something that's half the price. Would that be the 32s? And sell 32s. So that's a buy one, sell two. Now, I mean, I would like a little bit more of a credit, so I might bring it up. But from this perspective, you're taking in, and can you just there you go, toggle it a little bit. I would go back to the 32s. I just wanted the green bar to move, so sometimes you have to adjust. So look at where your break even is when you go to the buy 134, sell 232s. Your break even is outside the expected move. If Enphase Energy goes down, and keep in mind it's a Tuesday, so if it gets close to the 34 or anywhere near there, this will be profitable. So this is a bearish trade that won't lose any money if Enphase Energy goes up.
Won't lose any money if Enphase Energy goes up. If it goes up.
So that's how you can set up trades where you want to play this where you think it's going down. They just lost their subsidies. If it's going down to its expected move, then you stand to make some money here. But if it goes up, you don't lose any money.
I mean, this kind of like Bloom Energy here. They're interesting stocks because they're tangential to the AI build-out. Like, we're going to need more power, more electricity. And obviously, as semis have come in and everything else has come in, so too have they. But I'm more interested in seeing what happens on the other side, right? Because if we get bad earnings here and volatility collapses, even if prices come in, it probably means that the worst is over. If you see volatility expand after the earnings, that means the market's reconsidering its priors. And it's saying, no, there's a new understanding here of what the risks are moving forward. So 32, 34, I like this. I've never placed a trade like this before. Not in my purview. Not going to start with Enphase. No offense.
Well, and the one caveat to this I was going to say, and I know the boys were doing it, I figured I would just kind of walk through it. This has a lot of capital required for, when you look at your break even at 29.5, this is something that a $1,200 capital requirement for a $29 product is a lot.
It does seem like a lot, which is why we move on to question number 3. Liz, I think this one, this one's for me.
Okay, everyone waits for high IV to sell premium, but the richest IV usually shows up right when the outcome is most uncertain. How do you separate premium that's rich because of fear from premium that's rich because a genuinely big move is actually coming?
Got to compare it to realized vol. You're going to have to contextualize it by the events around what's occurring. And then I think you're probably going to have to take a look at the skew. So when we get something like with the tariffs, for example, Liz, that to me is a very specific, discrete set of circumstances where if like that switch is flipped off, then the volatility can unravel. If I see that realized vol is outpacing implied vol and there's not many catalysts in front of us, and I start to see the skew turn, it doesn't really matter what IVR and IVX is. That tells me that something's bubbling up, and I don't want to start shorting the bubble. Not that it's a bubble in the financial market term, but I don't want to get short the thing that's continuing to grow in its growth phase. So just like with IVX and IVR, I mean, I think that we have to compare the two. The rich premium is important, but it's not an edge unto itself. It's just the beginning of a discovery process that you're doing. And as you become a more experienced trader, that discovery process, it makes it sound long, Liz. You do that discovery process by looking at a ticker and an options chain in a few seconds' time.
That's how I was going to answer this. I think this is knowing markets. I mean, I've been doing this for 30 years, right? So this takes a second if I want to do it or don't want to do it. And I think you can kind of, after you've been trading for so long, I think there is analysis by paralysis. And I mean, what I'm saying is I don't like to fight the markets, but I do hang my hat on liquidity, right? So here with this, I think Chris answered it a lot better. This is such a vague question, in my opinion, that it's almost like you'll get it once you start trading more.
Right.
Yeah.
I mean, I don't overthink things. I think everyone goes through that growth curve where they start out, they keep it simple, they get a little bit of education and experience, they tend to complicate things, then they overcomplicate things, and then they peel it all back and get back to a calmer place, knowing what they know and what they don't know. All right, last question here on confirm and send. Implied volatility versus historical volatility. Everyone says the edge is the gap between them. How do you actually check that gap on a specific stock before you trade it instead of just assuming it is there?
So for me, and you're probably going to have a totally different answer. Mine is IVR. If IVR is higher, am I back? If you get IVR elevated, so anything over 50, it's right there, right next to the ticker symbol, your implied volatility rank. That just tells me whether a product has a higher implied volatility versus itself. You're in ES right there. The IVR of ES is 47.4. So that's saying that it's a little bit elevated. A lot of times, the old studies we used to do said anything over, a 35, 40, 50 IVR, then it's high for itself.
Then it's high for itself. Yeah, I mean, I think just look at the realized volatility compared to other relevant windows. Look back 10 days, 20 days, 30 days, maybe over the last few earnings moves. That doesn't hurt. And then, maybe you can do a little bit of math. You could plot out the expected movement. I mean, if you're looking at like I'm going to say 12% implied move and the stock is only realizing like 5 or 6% in previous events, then, maybe there's a sale there. But this is like the total context. Right, we were talking about this with Tesla. I made the mistake of not listening to my own head, where I went wider than the expected move on Tesla, and I still got blown out because there's been this tendency for the AI names to go beyond the expected move, at least this recent earnings cycle. So just check whether the gap is being driven by an event, and that to me is I always go back to that. If it's not driven by an event, then it's market related. If it is driven by an event, then it's probably a ship passing in the night, and you may not even want to react to it.
I don't know that I've seen a lot of a high implied volatility that's not driven by an event. Usually it's an earnings event, or when you look at some of your pharmas, there's always announcements that are coming out, or there is all the economic stuff, all the economic indicators that are coming out. So think about this week. I don't know that I've seen high implied volatility that it isn't driven by an event.
Maybe in the past 15 or 20 years since the global financial crisis, those pockets have been very few and far between, I think.
Yeah.
Right, there have been some period, like I think late 2018, for example, right? The Russell goes down 25% in the fourth quarter, I believe, between third and fourth quarter, before the plunge. Well, I remember specifically because the plunge protection team stepped in over Christmas that year, and then the market snapped back like 7% between Christmas and New Year's. In any event, like what really drove that? There wasn't like a specific, the end of AI, the end of this, the end of that. It was just the Fed's raising rates and the economy's not doing so hot, and the thing just kind of dripped over the span of several weeks and months. And volatility stayed high the entire time. So it wasn't like there was a specific, NFP was minus 350. Holy cow, the economy's in recession. We didn't get anything like that.
What do you, Chris?
But rare.
Take a look at this. The SPUs are up 27 while we were talking. We are the catalyst that drove the market higher.
Same thing happened yesterday. Unfortunately, couldn't hold on to the gains. Maybe you and I need to start the day and then bookend the day, and that way we can keep the wheel spinning throughout the day. But yeah, 74.75 here. Nice little bounce. We still have not cleared out last Thursday's low for what it's worth at 74.11. So we're holding that. The Nasdaq's even fighting back, down 2% earlier. 28,000 here, Liz. What a relief for those of us out there who are still holding on to some positions that aren't working out. But you know what is working out, Liz? We do have 2 more minutes before this show comes to an end here. We did talk the CLAC and the STX, the Visa. I want to start shifting our attention to tomorrow's morning reports. I see Procter & Gamble, I see Vertiv Holdings, and General Dynamics. These aren't usual names that we talk about around here, although Procter & Gamble is something that I've been operating in recently. I'm curious, what are you trying to think about for tomorrow morning reports, if not this afternoon's?
So let me ask you this. Are you in Procter & Gamble right now? Because PG is about it's a $151 stock, got a 68 rank. So once again, you're back to that 47% implied volatility, actual volatility. So you already have a put spread in?
Yeah, I mean, I saw this little dip back last week, and it was in an area where the market's been finding support near 144. So I said, okay, if the market's getting more defensive and capital's not going to leave the market, then it usually flows into staples. So why not put something here?
I think it's good to diversify by putting, all your techs and your staples in the same thing because we're seeing that rotation. Can you take
We're recreating the S&P 500 through first principles.
Can you take this off given the gap up?
I don't want to take it off. Not yet. There's still some more bleed here. But Procter & Gamble, how would you play this? Fresh positioning because I don't have anything at 3 days here.
So you know what? I would actually, I know you are already in it and you're probably up a little bit, but I would probably go into it in the same thing that you are. You're not getting anything for this 3-day. And I also look at staples a little bit different than I do the high flyer. So I know you're in the 3-day, and I notoriously am a 3-day trader. But for Procter & Gamble, if I wanted to get some, exposure to these kind of staples, I might use the inflated volatility and go to the 24-day, similar to what you did. Because now, if it's something that I want to get into or have in my portfolio, I might open the 24-day and do the put, very similar put spread that you have at the expected.
And worst comes to worst, you get assigned the stock, and then you have the stock that you want to own, and then maybe you start wheeling it out, and you figure what to do from there. Liz, as always, Confirm and Send is here on Tasty Live every Monday through Friday, 11 Eastern, 10 Central Time, with myself and yours truly, Liz Deerking. So send us your questions, research@tastylive.com, research@tastylive.com, or put them in the YouTube chat at any point during the day. Our producers, they collect them, they put them in their pocket, and they save them for us. So we're taking a brief break here. Errol and Gus are coming up next. Be sure to tune in for them, of course, and then come back at the top of the hour. I'll be speaking with Helene Meisler here today on the show, noon Eastern, 11 Central Time. You're watching Tasty Live.
Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
On everybody, welcome back to Risk and Reward. Today's Tuesday. We've got a little bit of volatility kicking into the market here, which we'll go over that. Brother Gus, before we get into it, how we doing? Great to see you, brother.
Doing good. Yeah, happy to be back in Chicago. Lots of travel, lots of fun, but boy, is it exhausting. Especially this weekend. Just a lot of people, a lot of late nights, a lot of the beverages were flowing pretty freely.
Yeah.
So just getting back into the swing of things today. Lots of developments in the market. This weekend in particular was like the least I've kept up with the market in a long, long time. Usually
Always
when
needed, though.
usually when I travel, I'm at least a little on top of things, but we were in national parks with no cell service and I was busy and all over the place. And so it was like a whole nuke of information just as I sat back down this morning and was looking at everything. Man, the bottom's falling out of these memory stocks. It's like I don't even know when that happened. This is all sort of feels like news to me today. So just trying to get my feet back under me a little bit. But portfolio performed pretty well throughout my like non-tracking period there. Had some expirations for max profit last Friday, so I'm feeling good, in good spirits.
Good to hear. No, you need that Starlink next time you go out there.
No kidding. We kept talking about that. I was like, why did nobody bring the Starlink? Yeah. We gotta have the Starlink. And our Airbnb had pretty solid Wi-Fi, but I was like, would Starlink be faster than this? Could we?
A1.
Yeah. So I don't know. We'll see how quickly those things develop.
It's always nice to get some time away from the market. Like it's always nice to even just mentally shut out the market, even when the market's closed, like over the weekend. So I mean, I think that's a vibe.
Yeah. And let me shout something out here, actually. As we were driving back, we stopped at Subway.
Okay.
Let's backtrack even further. You guys have all heard me do the Chipotle complaining bit. I won't get into it again, but I don't go to Chipotle because of the inconsistent portion sizes. That's the TLDR. It frustrates me, and they must do something to standardize. And in the car on the way back, we stopped at a Subway, and Subway is doing it. They figured it out. Subway now has their meats. If it's not a sliced meat, they have them in pre-portioned little containers. So like I got one of those new protein pockets. I got 2 of them actually. They're pretty good. I would recommend the Italian.
Like a hot pocket?
The Italian trio is good. No, it's like a wrap. It's like a wrap in a tortilla. They'll heat them up if it's supposed to be hot. But I got an Italian trio, which was cold, and then I got a Baja chicken, which was hot. They heat up the chicken. Right. But yeah, they have the chicken in these little pre-portioned containers so that you know it's exactly 4 ounces of chicken and everybody gets the same amount of chicken. And
How do you feel about that?
This blew my mind. I was like, wow, how are we not all doing this?
Yeah.
Subway, they've got it figured out. So Chipotle, please take notes. I don't care if it's a standardized scoop, if it's sliding a scale along as you do the food, if it's just copying Subway and doing the pre-portioned containers. Somehow we've got to figure this out.
Yeah. No, I hear you. The consistency matters. Right?
Yes.
That's kind of my shtick about going to other coffee shops, especially out here in Chicago. And it's kind of funny. Sometimes I'm like, I don't really like this coffee, but I'm the one that ordered it. Exactly how I ordered it. But I like Starbucks because of the consistency. What I get or what I order is exactly what I know I'm going to get. So in terms of like consistency in what you order, I totally get that. Interesting to hear Subway's taking steps in portion sizes, those kind of things. So
yeah, absolutely. And as Frankie acutely points out in the chat, Subway are the worst of the sub-national chains, in my opinion. I agree. Jersey Mike's is certainly king in that regard. It was in a gas station. We were tight on time. I usually wouldn't choose Subway, but I did enjoy those new protein pockets. They're really leaning into the macros, which I like. So I might be going back to Subway after that visit. Yes, here are the protein pockets. The second from the right is the Italian trio that I had, and then one of those 2 on the left is the Baja chicken. It's the one with the jalapenos on the far left. So yeah, really enjoyed these. They're pre-portioned. They're very specific about how much protein is in each one, and they're only $3.99, which is a pretty good deal.
What type of changes they slide you as you were going back on air this week?
What do you mean?
Subway.
Oh, not yeah. No, this is not sponsored. I just you think they're sponsoring me? And I just said Jersey Mike's clear Subway on air.
Unsolicited reviews are the best. Like I heard this guy talking about this, and we can go ahead and jump into the platform as we get into it here. I heard this guy talking about one of these newer kind of vibe dinner spots that opened up by the lake, and like he had the most blunt review of it yesterday on TikTok, and it like goes viral, and everybody's like, these are the type of reviews that I like. He's using all that provocative language, just describing his experience. Yeah. And nobody's ever that blunt, especially whenever it's a restaurant that everybody glazes. I always love the unsolicited reviews. Those are always nice.
For sure. What's going on, everybody in chat? Destiny's Brandon, happy to see you. Darker, Nice Boy, Ranch, E-Media, Grumpy Mike, all our friends. Jared mentioned, oh, you're talking about Jared from Subway. Destiny's, you dirty dog. We don't talk about him. I can't believe you just got me to say that on air. Anyway, yeah, let's jump into the platform here and talk about a few things. I want to get Long Rocket Lab. If anyone has any ideas, I was thinking Zebra. Sure, we can start there. RKLB. Let's pop in, have a look.
What have they been up to?
Yeah, I wouldn't be opposed to getting Long Rocket Lab, actually, especially off these levels. This seems very attractive to me. Good historical support here. A Zebra seems a little aggressive for a stock with this kind of range. Obviously, if you're directionally correct, Zebra would pan out very well for you, but there is potential downside to like 47 and then like 40 below that. And if you're caught holding the bag on a zebra and this thing drops $5 tomorrow, that's a real crappy start. So I would be sure that you're very strong in your conviction if you're going to do a zebra. But like I said, if you're directionally correct, there is much less, the ceiling is much further away than the floor, in my opinion. There does seem to be disproportionate risk there. And of course, if you're holding the zebra and suddenly this rips to 100 in 4 days, you'd be a very happy camper. So pros and cons to both of those. I would probably be looking to sell put side premium in some way here myself. We're down. I assume there's gonna be some expansion happening on the put side with this broader downtrend that we've seen in Rocket Lab recently, and I'm sure that you could get something pretty attractive at, say, the 50 level, or maybe even down into like the low 40s. It's gonna cost you a pretty penny, but I feel that there's pretty solid downside protection there. So whether you want to go defined risk, undefined risk is obviously up to you and your risk tolerance. But I would be looking to sell premium on the put side with this compression that we've seen, and probably not being as aggressive as a zebra.
Yeah, a lot of volatility there. This is reminding me of Oracle right now. Anything that reminds me of Oracle right now, I think twice. I think three. I think thrice. No, I mean, thinking about Oracle, it just looked a little bit similar, just this kind of downtrend that we've been on. Some of these type of trades where the price action looks like that can be such a difficult trade. I actually ended up getting out of my Oracle trade. Did I type that in right? ORLC? ORLC?
ORCL.
ORCL.
ORCL, yeah.
Yeah, no, see, that kind of reminded me of Oracle a little bit there too. So I'll probably stay hands off. These names are a little bit difficult to not catch a falling knife because you kind of have to anticipate that this is the bottom whenever we're putting in consecutive lows. So kind of my 2 cents on it. Got out of Oracle today as we bring up Rocket Lab. Gave me a little bit of PTSD. No, about $100-something loss.
Very similar charts.
Yeah. It was like $100-something loss, but it happened so fast. That was the thing about it. So shout out to Rocket Lab. Shout out to Rocket Lab.
Yeah, look at that. It's the same chart.
It's the same chart.
Is Oracle launching rockets? Are we sure? Are we sure Oracle doesn't have any rockets? But yeah, like I said, I mean, I would extend the same sentiment to Oracle as well. Feels beaten down enough to want to get long side exposure, and when something is beaten down and experiencing this type of downtrend, you can find good put side premium, especially if you're willing to go a little further out, 60, 90 days. So that's probably how I would choose to attack. Grumpy Mike, to your point in the chat, I believe Subway still has that rule. There's no minimum distance between franchises. Like if you have the money and you say I want to open a Subway next door to this other Subway, they'll be like, okay,
wow,
go ahead. I know they're the cheapest franchise to open as well, so that's something people often get into if they're looking to start franchises of something. But yeah, no, I don't believe there's any rules there. Yeah, there we go. Big deal. Taking the words right out of my mouth as well. I think the next thing I would like to look at here is Pepsi, PEP. This has started to catch a little bit of a bid for me. This was a happy surprise for me this morning because when I left on Friday, we were down in the low 130s, and it looked like we were really running out of steam on this trade. Just as a refresher, I have the August 21st 145 150 bullish put spread going on here. So short the 150, long the 145 puts. So need this to return to over 150. When I left, we were like, 28 DTE and at 135. And I thought this was kind of cooked and I was going to be looking to get out of this when I got back. But apparently it's a PlayStation 2 look away and it'll work sort of situation. Because the second that I look away from Pepsi, we get this big run up. We've touched, what is that? The 145 level today already, I believe, if not a little bit more than that. Yeah, 145.23 high of the day right now. 145.43 rather high of the day right now. So even a little bit higher than I thought. So got on the dance floor for just a brief moment this morning, but a nice gap up coming off the lows, some big bullish momentum coming through yesterday. So I just hope we can hold this. I hope this isn't too much too soon and the market feels like we need to, correct back down and gap fill that before we can go higher because I don't have too much time left on these. But this is a phoenix from the ashes for me at the moment. Actually, as I sit here talking about this, I have 3 of them. So let me just go ahead and take one off because I already feel like this is a miracle recovery where we're at right now. So yeah, see if we can get a fill there. I'll trim this down to just 2. That's why I take multiple is so you have the ability to scale out. Of course, it runs on me the second that I want to get out. Just give me the money, man. There we go. All right, filled at 355. So
get the fill.
Yeah, I'll take that down from 3 contracts to 2 in size and let this continue to run. But all of a sudden, 150 seems back in the equation. And I might note as well, I said a bunch of times when I was putting on this trade, 150 isn't even really what I want. All I wanted was basically what we've got today, and I would be looking for a full exit. This was the whole idea, is if we could just catch the quick gap fill off the gap down from earnings, which the low on that was 130. Wait, Wrong day. 142.44. So I was really just looking for a return to over 142.44, which is where we're at right now. But with how much bullish momentum is coming through here, I'm willing to give this into tomorrow and see if we're going to let this fizzle or if this is the start of a broader run. But I will say, in a pure technical context, this is a very ugly candle to be holding along into tomorrow through.
100%. The soda sector, if you will, I believe Coca-Cola is at its all-time highs.
Coca-Cola very trendy today, yes. Yeah. At all-time highs.
Yeah, a nice gap up into all-time highs, a little bit of a continuation. I'm wondering how, I know they're competition, right? They compete within each other. And these are some of the larger soda products that own other smaller soda brands and products at the same time. So I'm curious if there's a little bit of that sentiment at play there. Similar products, obviously competitors, completely different chart, but a lot of momentum in the soda sector, we'll call it.
Yeah, I just went to look because I'm sure pretty much everyone's aware at this point, but Warren Buffett, largest individual holder of Coca-Cola by a long shot. And to my knowledge, that's not even really a Berkshire Hathaway position. I believe that's his personal investments. He loves Coca-Cola. He loves the dividend. He loves that it's a consumer staple. He feels it will only continue to grow. He's had a piece about this for a long time. But the gap up in Coca-Cola made me curious what this did to Warren Buffett's net worth. Any guesses? I'll tell you, it's billions. It's billions of dollars increase in net worth today.
I'm going to go 13 billion?
No, not quite. 3.3. $3.3 billion Warren Buffett is up today since prior trading day. So from yesterday's close to right now, Warren Buffett is up $3.3 billion. So not a bad day for him. Maybe you can buy a new plane or something, although he's not really into that. Maybe you can buy a new Civic. What was he always drove like the same crappy car you'd had since high school or whatever.
Is it a Honda?
It's an Impala or something. Yeah, somebody in chat will know. You guys can tell.
Yeah, shout out to him driving through the McDonald's drive-through after that. That was
how about that USO call? Not doing great. Yes, we'd be remiss if we did not talk about oil. We have interesting stuff going on today. Iran is in touch with who are the two? I don't want to speak out of turn here. I believe it's UAE, Syria. Iran is talking to other Middle Eastern countries about management of the Strait of Hormuz today. So we see oil continuing to sink here as it looks like they might be nearing peace or at least some kind of resolution with those people, even if it's not with us. So yeah, we are continuing to see a collapse in oil. The long calls, it's the long calls, it's a tough spot. I mean, like I said, I've had the long puts forever with USO, and it's just such a tough situation to be in this elevated volatility environment, and you'll get vol collapses that come in and work against you. So yeah, being long anything in USO, this has been a sell premium vehicle, not a buy vehicle in USO. So yeah, my long puts still far away. USO currently trading just over 120. I don't know. Did you say those were 100 strike calls? No, 100 was in the following message. So I'm not sure what your strike is on those calls. Hopefully we can get a little bit closer. I would say I have a longer bias towards oil right now, even as I hold these shorts. It just feels like we're gonna, at the very least, it feels like we're gonna get into a channel. It feels like this is becoming a recurring thing where there's peace, there's talks, we compress a little bit, and then suddenly something happens to break them and we go shooting back up, and then we do this cycle over and over. So I'm a little partial to the long side, maybe even neutrality, which would kind of be the ultimate contrarian move in oil right now. But ultimately, I just wish I wasn't involved. I wish I didn't have the puts that I have. I wish that I could just watch this thing from the sidelines, but I find myself rooting for it to work towards the downside myself.
No, I feel you on that. A few days ago, I actually bought a call on USO a few days ago. In today's session, we're actually going to take this one off, but oil just continues to slide and don't want this one to go to max loss, so rather just cut the position, reposition if we need to. We were able to hedge some of these other positions in the portfolio as well. So I think we're going to cut the USO position. I know we cut the Oracle this morning. I think USO is going to be another one that we cut. Might have been referencing that call that I bought there. 8 days left till expiration. So I'd rather not sit in the waiting game of oil. I'd rather not sit in some of these tickers that are getting a lot of momentum to the downside and kind of just hoping for a pop. So I'm just going to cut that one, get that one off the table, redeploy the capital elsewhere. There's 8 days left till expiration. So the diminishing returns is going to really speed up because this is a debit that we paid for these calls over here on USO. So that's going to be the mindset there.
Yeah, but 133. I mean, 133 could easily be right around the corner. I mean, that's within the range of this little drawdown that we're beginning to experience here. It just takes one different piece of news from OPEC or Iran or any side of this equation, and suddenly it's like we're back at 128 tomorrow.
Yeah, that's true.
And you can think about what you want to do. But yeah, I agree with your sentiment at this point. Might as well just hold on for the Hail Mary.
Yeah.
Especially like especially if you buy a contract like that, it often gets to a point for me, and I'm pretty liberal with giving this assignment to things, but it often gets to a point where I'm down like even just 50, 60%. And I'm like, screw it. let's see what happens. Why eat this loss? And of course, you can manage and roll and do different things, and that might be wise to do, particularly with a product like oil right now. But sometimes it makes sense to just let these things run, see what happens.
Yeah, that's a good point. I mean, there's really nothing too exciting going on over here. I know I traded Google earnings the other day. I'm not a big earnings guy. Like my first year trading options, I was trading a lot of earnings just to get the reps under the belt and things like that. But I'm not a big earnings guy. But we did sell an iron condor on Google. Well, we ended up rolling the call side down a little bit more because we had a continued sell-off. So this one's 24 days left to expiration. It's a slow cooker. We're up about $34, so we can get a couple more wraps at Cboe if you want to. But we collected about
a lot of them. It's a good deal. It's a good deal.
If you're trying to get that protein.
Yeah, $1 per gram of protein, which is the typical metric I evaluate things by, those protein pockets.
Solid, right?
Pretty good deal. Pretty good deal.
Get the protein in for the day, for the week maybe. But collected about $2.80 of credit on that one. We did a little bit in the micro NASDAQ today, and then in the overall NASDAQ market, which is nice to at least hedge some of these positions. So we were able to take out 260 out of the market on the micro NASDAQ today, just on one micro contract. And that's, again, not to be understated, the volatility that we're experiencing in the market, right? 260 off of one micro. It's just one micro, which is such a tiny product and sometimes makes you feel like you're undercapitalized, but they can really do some damage, especially whenever the range presents itself in this overall market. And with the market selling off, volatility expanding, we definitely get that volatility. So it's nice to hedge, the micro NASDAQ with a little bit of that Oracle position that we put on, sold a naked put in there. I was selling how do I phrase this? A lot of naked positions. I was gonna say I was selling naked last week. No, but we got on a few naked positions that we're looking to manage right now. So it's kind of gives you a little bit more confidence and a little bit more relief to sit in some of these positions whenever you can kind of hedge a different position with a position that's down on the day. So, I mean, even looking at USO now, because we're up a little bit on the micro NASDAQ, and we also bought a call this morning near the bottom, which we were able to scoop out 140 out of that. It's like now we can reconsider this oil position a little bit more now too. I don't know. I still kind of want to take it off, but it's like those profits now I can kind of hedge that a little bit. I'm not going to be down overall too much now here. So whenever you bring up oil and the potential volatility we could see to the upside, it makes me reconsider a little bit because, right, we have other things that have happened in the portfolio. And I think depending on what happens on one position is going to affect your thought process, on the next position because it's one portfolio.
And particularly when you're dealing with, related macro products like what we're talking about here, there are, clear through lines between a lot of these positions. So it is a broader portfolio management question.
Yeah, it's a good point. But yeah, no, outside of that, nothing too crazy over here on my end. SpaceX, I bring it up every day just to dog on it a little bit more. Sold an out of money put spread there, 24 days left to expiration. We've been at a max loss on this one, I think, after like the first 7 to 14 days. We still got 24 days left, but there's some positions that it's like, I got to look at you another day sitting in the portfolio. I don't even like looking at it at this point now. But oil's been another really difficult product to trade, reminding me of Oracle once again. Just kind of that slide to the downside with consecutive lower lows. Always a difficult trade. If you're on the long side or looking to get on the long side, if you're on the short side, I don't know, that can also feel like a difficult trade to sit in for a max profit. Because you never know whenever they just keep sliding in one direction like that. But with all that being said, there's a lot of volatility in the market. Are you excited about FOMC tomorrow?
Yeah, I mean, I'm really just I'm more excited, not even about decisions or content, but I want to hear more from Warsh. I want to see what kind of cadence we settle into. He's been very emphatic that they're going to give less information. It's all going to be shorter and tighter and a need to know basis sort of thing. Yeah. So just interested to see how that continues to pan out. If we see consistency, if we see the same amount of smaller information that we saw last time. So yeah, just still getting a feel. It's like a second date with our new with our new suitor here. So we'll see what happens.
We will be perceiving you.
Yes,
you will be very much so perceived.
You will be judged. You will be judged. So yeah, I don't know. I would say I'm more interested from that aspect of it.
I got you.
As far as other things I have jumping out here.
What you got?
Let's see. I mean, let's pop over, take a look at bonds. Let's look at some TLT here.
Some bonds.
Yeah. I continue to stay long TLT, looking for 85 sometime in the next 17 days. So we're right there. Once again, very similar to Pepsi. Yeah, it's like this was one actually almost identical to Pepsi. This was one that I thought was totally dust when I left for the weekend, and then I come back, and all of a sudden we're right here in the mid 84s. Yeah, back on the dance floor. So looking to chase down that 85 level. This is one that if this works out, I would be very, very pleased because I gave myself a slightly longer time horizon. I wasn't sure that the bottom was in, and throwing those extra 2 weeks on the contract is the reason that this is 17 DTE instead of 3 right now, looking for this 85 level. So I'm very, very hopeful. I'm cautiously optimistic that we can continue to catch at least a little bounce in bonds here. And work higher, although FOMC could do bad things to this tomorrow.
Or it can make it right.
It could.
Yeah, but now that you bring it up, though, it's like bonds might experience a little bit of volatility tomorrow, depending on what we get.
Yes, yeah, and it's one. Had I really been thinking of doing the proper, broader calculus with this, I probably would have realized FOMC was in the equation and maybe give myself even a little more time just to let that all shake out. But suddenly we're stuck holding through the binary event. So Warsh, please save me. Say good things for bonds. I would appreciate it. Beyond bonds, I don't know what else is at the top here. UNH logging another good day today, up another 2% here, closing in. I don't know. I mean, we're clean through the 400 level. I really want to see 5 out of this stock. We've been as high as 460, 462 in the midst of this run.
Yeah.
So I'm looking. I'm looking for 500. I just continue to hold these 4 shares. My cost basis on those is 268.85. I had a call leap as well that expired earlier this year. I did not. There was actually not enough time horizon. I possibly could have given that call at the time that I put it on. But yeah, it's nice to see this coming through on UNH. 268 cost basis would be what, 536 is a double for me. So yeah, around that time, I think, and again, this is just a pure bag hold. All I got is shares at this point. I'm content to just sit here and hold them as long as it takes.
Anybody long in here deserves to get rewarded, in my opinion. This was a patience trade. So I hope it comes through.
Yeah, and I just believe in the thesis. It's like, despite all the negative press, despite the CEO and the DOJ and all these other things, nothing has fundamentally changed about UNH's core business. Yeah. So I do think a return to 500 is I don't want to use the word inevitable, but very likely in the coming year or two. And having shares with no time horizon is the perfect situation to be that uncertain about timing.
And you're a part owner. Come on.
Yes, exactly. Yeah, I should get a discount on stuff. I don't know exactly what, insurance, Medicare. So somebody slide me something. I own a little bit of this company. I have a lot of waste management in my long-term portfolio. And so as we were, WM. And so as we were on this road trip this weekend, every time we passed a waste management garbage truck, I'd be like, oh, I own 1% of this garbage truck. I should be allowed to drive this garbage truck 1 minute a year. that's how much
you should look at this chart.
Waste management, yes, love waste management. Such an underrated growth stock. Yeah. Not one I usually talk about because it doesn't usually present itself as a great trading vehicle. But this is maybe my favorite stock in my long-term portfolio, bar none. It just makes so much sense. They grow so much year over year. We as humans are only expanding, only producing more trash. They have giant monopolies over major cities. The trash is only going to increase as we move into a greener world and do recycling. Guess what? They do it too. So I really like the long-term prospects for waste management. This is one that I've been loading since maybe 2022, like pretty early into my college tenure. I was beginning to load waste management into the portfolio, but love waste management as a growth vehicle.
No, I mean, what a great company. And I mean, this looks like healthy growth too. This doesn't look like your memory names. This doesn't look like your Microns, your SanDisks. This looks like steady growth over time. Someone you can be quite comfortable in.
Yeah, and it's trash. It's a trash stock. That's what I always joke about.
It's trash stock.
You gotta buy trash stocks, man.
Juice. That's crazy.
Yeah, but love waste management. It's very similar, like Warren Buffett Coca-Cola thesis. It's just a thing that humans are always going to need, that we are
Diet Coke is needed.
Only doing more of.
The Diet Coke brand is only going to continue growing.
Yeah,
I think in 30 years from Diet Coke might be the most popular all-time soda. I don't even know how you can rank those things. I don't know if you can date on that.
Yeah, I mean,
just observations. Good Lord, it's one of the most popular sodas. It's not even funny.
Well, yeah, and they have a whole other line of sodas as well. They're involved with food products. It makes all the sense in the world. Coca-Cola, I also think is interesting too. There's ticker Coke, which is just their bottling, like COKE, which is different from KO, Coca-Cola Company. I've always thought that's sort of fascinating as well, but they obviously grow fairly in tandem. But this is, I love waste management is basically the TLDR there.
Waste management.
Seems like UNH would be good for a poor man's covered call. It would, Ranch. Absolutely. Apt analysis. I'm not really going to get involved there. I don't think. I'm pretty content with my shares where they're at the moment, but I agree. You're thinking the right way.
Yeah.
For sure. For yeah, I think that's kind of it for me. SPX, I do have this Iron Condor on an SPX, which is panning out. We've just started to flip into the green after, how long have I had this on? A week now, 7 days. So Theta finally just starting to pay me a little bit, but I have an Iron Condor here centered around, Errol already has the lines on the chart for me. Oh no, is that just the top and bottom of the range? 7,400, 7,600 is where the range I need this to stay inside. So I got a $200 wide range there. We got it. We got tested the bottom of it earlier, but like I said, I'm content chilling around the bottom of this range for as long as I have this trade on it. Obviously, the nature of the market, the nature of SPX is to want to eke upward a little bit. And so with 24 days left on this one, I don't want to eke up so far in those 24 days that we wind up breaking through 76 and I get screwed at the end. So I'm perfectly content hanging out in the 7,400 range. This is about perfect. We have seen as low as 73.82 today, so it was making me sweat just a little bit. But again, even then, even if we close today, say 73.50, I still feel fine about that. I think there's much better odds that we're $50 higher a month, 24 days from now than $50 lower. So my holding pattern thesis continuing to pan out. Hopefully we can just continue to plinko in this range and land in the right place for me in 24 days.
Oh, that would be nice. I know we're getting a little bit more volatility here. I know the indices were selling off, and it's looking like they're gaining a little bit more strength here very slowly. It's looking like we're getting a rebound off the lows right now from 27,608. Right now trading at 28,044. So we actually just cleared the morning highs, the day highs. So although it was a very aggressive sell-off in the morning, we consolidated for a little bit. Now we're rallying towards the day's highs. So the market might be back, baby, or the market might just be prepping us for this FOMC move that we're going to be seeing on Wednesday. So I know Jermal even made the point today too, right? Didn't expect too much continuation, especially considering the fact that FOMC is on Wednesday. So although we got a lot of directionality at the beginning of the week, that could potentially be the bottom until FOMC. But again, we will see. That's a pretty aggressive move up. Anything else top of mind for you before we wrap for the day?
No, nothing else. Nothing else top of mind. I will be back 12:15 to 12:30 with my trade of the day. So come hang out with me for that. UFO truth tellers in the chat. Hello to you as well. Sounds like I might need to check out that channel. I don't know what kind of truths are going on. Just to quickly acknowledge, big deal. Real estate stocks having a pretty good run since April. At least in terms of I just popped over to a few ETFs, but looking good. We're trading up. Although if you want a more granular text or context, up just a little bit on the day. Pretty much unched.
With that being said, guys, got a lot of volatility, got a lot of opportunity in the market. We will be back with more amazing content later today. Be sure to stay tuned, and we'll catch you guys here in a little bit. Peace.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
We're back. You're watching Tasty Live. This is Trading Trends Live, and we're back for round 3 with Helene Meisler. Helene, good to see you again. Am I getting any audio coming through?
Can you not hear me?
Oh, now I can hear you. Beautiful. Helene, good to see you.
Good morning. How are you?
It's going well. You know, today's a really interesting day in the market. It's a great day to have you on because we're coming on the heels of two major events, at least from the technical world's perspective, a big volume spike in SMH, and of course, the triple Qs falling back to a major trend line. But the path forward right here isn't really straightforward, right? The indexes aren't in a free fall. The internals, they're getting messier. Put-call ratios are jumping up and down. We're seeing more hedging activity. Helene, I think we could just start with sentiment here because that seems to be your wheelhouse, and quite frankly, it's the conversation I enjoy most with you. You've been watching these put-call ratios closely for so long, and the message seems to have changed. Earlier this year, investors were a bit too complacent, and now we're seeing a little bit more hedging, more put activity. So when you're looking across your put-call ratios today, what are they actually saying? Healthy skepticism, rising fear, or still not enough panic?
I'm going to say there is certainly the put-call ratios are no longer complacent. They are showing some skepticism. What they're not showing is panic. Panic would be, readings consistently over 1.0, and we're just not getting that. We're getting a lot of readings sort of consistently in the low 90s, which just tells me people are anxious. But I will tell you the call put ratio. So that's over on the ISE, and it's mostly retail traders. And last week, for the first time, they bought more puts than calls, which is unusual for them. So there's a little anxiety there as well. And I look at a 5-day moving average line of that, and that's down where typically we've gotten lows in the market, oddly enough. So, 5 days is a very short period of time. But basically, let's just say I don't think sentiment is complacent, certainly not when it comes to technology.
Well, let's go over to technology. The triple Q chart that you sent over may be one of the clearer pieces of price action test going on right now. It pulled back towards this rising trend line from the spring advance, but you also see this pullback we've had going since the start of May. It's reaching support, if you will. So when you're looking at the triple Qs right now, is this a support test? We've had some big volume. Have we witnessed any sort of capitulation?
Not capitulation. I wouldn't call that capitulation. What I call it is, maybe got a little bit of a mini panic this morning. When everybody came in and saw that Korea was down 10% and the foreign markets were down, and then, oh my God, now memory is awful again. And I think that's what we got. What I've been looking at is I've got several indicators, short-term indicators on NASDAQ that are very oversold this week. And so I've been looking for a low to give us a rally in that call it tech, the Qs, the SOX, whatever you want to call it, that whole group this week. I've been looking for that only because I've got so much that is heading towards towards oversold. And in addition to that, we had 342 stocks making new lows just a week ago, and we had 342 stocks making new lows on NASDAQ back in early June. And yesterday we only had 230. So we actually had some contracting new lows, stocks making new lows on NASDAQ yesterday, which I know that has nothing to do with the semis because they're in free fall and everybody hates them now. And, it's a momentum trade gone bad. But I'm sorry, it matters. And nothing goes down in a straight line, and they're due a rally.
Let's talk about the semis then, because, you're one of the people that I look at the end of every day because you put out these great market stats at the end of every session. You shared the volume chart on SMH yesterday. We can put that up on the screen. A big volume spike into weakness from a technician's perspective for the audience. It can also mean distribution, for selling, hedging, capitulation, or maybe even a sign that institutions are reducing their real exposure. But we see these volume spikes near tops or bottoms is the point. So what is the SMH volume profile right now telling you about the shape of this sell-off and where we are in that cycle?
Okay, so I'm a big fan of watching the volume in the Qs because when you get Q volume, call it, I used to say over 70 million shares, but it could be 90. But it's got to be high. I mean, the average volume in the Qs runs us, I don't know, lately around 30 million, 40 million. So if you get up over 70, you're almost doubling the volume on the day. And that tends to happen near lows. It's a get me out, panicky type of move.
Sure.
And so I've been waiting for that, and we're just not getting it. And then yesterday, I'm like, oh my God, look at the spike in volume in the SMH. Maybe people are not panicking out of the Qs, but man, they're exiting quickly out of their semiconductor positions. And so I thought it was noteworthy enough to show. And I think it's important enough. And again, I think it's important enough that we can get a bounce in the semis. Certainly, all the people who were bullish on the semis a month ago now tell us energy is a better place to be. So,
right, yes, we've heard that they're recreating the S&P 500 through first principles. Right, got to take on energy exposure to balance out our tech exposure. So, I mean, like, is this just simply SMH getting oversold after a big runoff, or I mean, is the market giving us a clear sign that the leadership within semis has been broken?
well, the leadership in semis turned in June. We are 5 weeks into this, maybe almost 6 weeks into this. Go back and take a look. The SMH or the SOX, I like to use the SOX, peaked like the third week of June, had a little back off, came back, and for the first time made a lower high. That's important. When you finally make a lower high, that's not good. But then you have to make a lower low to confirm that it's really not good. And then we made a lower low. So, I'm fond of saying when it comes to sentiment, the bulls and the bears live next door to each other, and they have a fence between them. Okay? And the bulls will mosey over to the fence and take a look at the bears and see if they're having fun. And some people will jump the fence and become bears and and join the bears. But they don't all go en masse and jump. They sort of do it slowly, and then all at once. And I think what we're seeing this week is a big jump the fence. Like a lot of people have been creeping over, and I think a lot of the laggards jumped over. So in other words, I think you went from a lot of bulls, too many bulls in June, to fewer and fewer and fewer and fewer and fewer until yesterday you sort of jumped the fence. Is it going to be the low? I don't know.
That's kind of where I was going next, because it kind of feels like there's this clear line, in at least the way that I understand the way that you think. There's a difference between a bounce coming out of, say, oversold conditions that are bearish and a durable low that's predicated around panic. And you don't think that we're at that panic. So this almost shaping up, if we get a rally in semis and you're long it, nice, take it home, but then reconsider because it may just simply be a counter trend bounce.
Right. I have my oversold condition in the semis should last at least a week. So I don't think that I'm looking at a day or two. I think I'm looking at something that gets some of those newfound bears to jump back over the fence, just to give you an idea. And then I'll have to see. What I always like to do is I like to see, first of all, can they rally? Can they get them green? I mean, all we've done is rally so far, and we can't even get green. NVIDIA got green. So let's just see if there's anything that gets us there. And then my expectation is that you'll start to get up towards resistance. And the question is do the sellers come out at a lower high, or do the buyers overwhelm the sellers? And I'm just not sure yet, because we didn't have a traditional whack in the overall market. Like we've only had it in the group. And so if we had a big whack in the market, put-call ratios rising to 110 on a regular basis, the VIX getting jumpy, all that sort of stuff, sort of hysteria, everybody selling everything all at once, you'd have a better shot at saying, okay, the semis, that's it, because they're the most oversold. But you don't have that. So all we have now is I'm looking for a bounce in the semis. I think it's tradable. And that's where I'm at.
Sure. I mean, I think that all makes sense, right? We would want to see a larger VIX jump. We'd want to see the put-call ratio north of 1. We'd want to see the big downside volume in the indexes to kind of get to the place of panic. And just maybe there's some breadcrumbs there, but not a full meal just yet.
Yeah, well said. And, in other words, there's a place for them to hide. And you don't want people hiding. You want them panicking.
We want them panicking. All right, so we're looking at oversold rally or failed bounce. Maybe it's going to be, okay, we can get a little bit of an oversold rally here. Whether or not it's a durable low is another question. But I'm thinking about now the next month or so. We've had this great pleasure of having you on every 6 weeks thereabout. If we're looking to the end of the summer now, right, it's Labor Day. We're coming back online. We've made our way through maybe the August doldrums when vol tends to go up. What would be the greatest sign or the indications that we've made it through the summer and that the market has put in the foundation for a more durable bottom if panic doesn't arise?
Okay, if you don't get any panic, then you're going to have to test and retest the lows in the technology names. So that takes time, and I'm not sure that 4 weeks from now or 5 weeks from now is enough time, but I would have to see. If we go back in time to when software was having its collapse, and you just think about the collapse in software, we had a lot of tradable bounces along the way. We're still having tradable bounces along the way, and software collapsed in February.
Right.
And this is now almost August. And you just now, my contention on software was always that eventually you're going to start getting differentiation among the charts. And some are going to develop into nice spaces and some are not. Some are just going to be garbage. And so that's what we're seeing now is some of those software names are starting to get more interesting.
Yeah,
but do the charts all look the same?
No, they don't. No, you can't just look at IGV because it tells a totally different tale underneath. And software's been so underloved. I know contrarians just say buy low, sell high. You should just honestly start to look in places where other people aren't looking. This past week, I've been getting long a bunch of the consumer staple names, and that kind of finally bore some fruit today with the moves in Coca-Cola and Procter & Gamble thus far. But Helene, this has been a fascinating conversation as always. We're looking forward to having you back again sometime in the fall. Folks who are listening in, I'm sure you know her. She's Helene Meisler, Cargill, Goldman Sachs, now at the Street. She has a great Substack. You can follow her on Twitter at ChartFest1. Helene, always a pleasure.
Thanks for having me.
Tasty Live programming is going to continue next. On the other side of a brief break, we have market measures coming up with Kai. See you in 90 seconds.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Putting on strategies? That's easy.
taking off strategies. That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Tasty Live is back. We're here with our friend from the research team, the one and only Kai. Kai, time for market measures. And I hear that you have 3 trades for us today?
Yeah, 3 trades. How are we doing today?
You know, I'm getting my energy back. The second Celsius has definitely kicked in. My 3 hours of sleep last night have been overcome. I'm watching a market rebound while I'm long deltas, mostly in stock. So I'm feeling pretty...
what a crazy rally, right?
I'm feeling much better than I was 3 hours ago.
Yeah, it's exactly the opposite from yesterday. The market was so weak. There's no trading volume for the E-minis 1 minute tick. The average trading volume roughly was 2,000 contracts per minute on average before, but yesterday it was like 1,000, 1,200 per minute contracts. No volume at all. No buyers at any dip.
I mean, can you blame them, Kai? We're at the start of a pretty important week, right? We have the Fed meeting tomorrow, GDP Thursday, but the folks around here care more about the earnings, the Meta, the Microsoft, the Amazon, the Apple. And then there's a whole bunch of memory chips today. We're going to get CLAX, STX. I mean, we have the chart up here on the screen, the earnings this week. Beautiful chart.
Yeah.
The calendar here, I mean, pick a sector, pick a theme. You're basically eating at the smorgasbord this week.
Oh, exactly. So Wednesday is the biggest day. Wednesday and Thursday, right? Amazon, Apple, Microsoft, Meta, and also Wednesday, the Fed meeting.
Well, Kai, I hear that the 3 trades that you want to start off with, we got one with the triple Qs, but you want to go to Intel first here, which has had a pretty decent slump over the past few sessions.
So pretty much all three of my trades today are high tax because they got beaten down pretty hardly in the past week or month. So Intel, I don't want to sell the 80 puts right now or 30 minutes before. When I look at it, it was trading around 85. So 80 puts, roughly 30 delta, 33-ish delta, and you can collect a roughly $5. So the break-even point is literally actually 75. So I feel lower risk to long the Intel at 75. So a little bit bullish in the delta.
Bullish in the delta, and I'm thinking about this in the framework the way that Liz and TP often talk about things. This could be a candidate for the wheel strategy, if you will, down the line, right? If you really like Intel and you get assigned the stock at $80, and so I have it at $80, I could try to monetize the position. I could sell a covered call, and if the thing rallies back, then the stock obviously it's now off my book. But you can work around this right now, and Intel was what $140. At the end of June. So if you put it at 80, do you feel pretty bad about it, right?
What a crazy move.
Something to consider. Yeah. And all these names, 25, 30, 35% off the highs.
Yep, exactly.
5 weeks.
So that's why I tried long a little bit of delta. Don't mind own the underlying if the market keeps going down. And also $80 stock is not as expensive as the Max 7 that you have to put down like a 5,000 or even above buying power.
I like it, Kai. It's an interesting idea. I have enough tech on my book right now.
Everyone.
Yes, and it got bigger than one had hoped during the rally, but what can you do? Okay, Kai, but let's step away from Intel for a quick second here. You said something about the triple Qs, which they've really fallen apart here over the course of the past week. They've had a nice intraday rebound today. We were down near 2%. We're only down about 0.6% here. I don't really see us out of the woods thus far. You have a different perspective, though. It's a 75, we'll call it 76 IVR on our screen right now.
Yeah, I kind of agree with you, right? I don't think we're digging out of the holes yet. So that's why I kind of use a slightly bullish iron condor. So it's kind of a bullish strategy carrying small delta, but it's also getting a little bit more protection by collecting the premium from the call side. So richer premium, slightly better protection on the downside, and the break-even point is closer to the put side, so it's a little bit bullish. So this is a very expensive stock or ETF, $700 almost. So we're gonna do $30 wide on the call in the put side and a $20 on the call side. So make it a little bit skew, not only in the delta and also the wings. So wider wings on the put side makes it more expensive, carry more positive delta. So overall, it's a small positive delta strategy. You can wait a little bit. If the market rally, that's fine too. And I put this trade on like an hour ago, or check these price. So price change 50, like a 0.5% or 0.4% after that. So you probably want to adjust these strikes if you want to keep the positive delta.
You know, I'm looking at this on my screen here. For the sake of this conversation, what if we wanted to replicate something similar, but maybe at smaller scale? Because $2,000 of buying power, you know, for your average retail trader, that might be a little bit here. So working around the same idea, we can go back to the chart. I have loaded up here at 52 days to expiration, the same cycle that Kai is in at September 18th, just $5 wide strikes. Okay, so 620, 625, and then the 728, 733.
Yeah, we have more strike selection on the call side. So literally, you have more flexibility choosing the different width of wings on the call side. But on the put side, you only have $5 to $10.
Right. So just doing it there, $5 wide strike, we look for at least $1.67 in credit. The market's offering us $1.93 right now. Risking 3 to make 2 effectively on a 54% probability of profit. Kai, I really actually like that here, particularly because it's through September. So make a small adjustment to yours. That's only $300 of buying power, which may be a little bit more digestible for some newer retail traders.
Yeah, sure. Totally understood.
And we got one more here. And this is something that's not reporting this week. Perhaps it's not the big one for this earnings season. Maybe it is still. They report on August 26th, though. You have something doing with Jensen's NVIDIA.
Yeah, so just for information, the first trade Intel, I used the August expiration, so we only have a 20-plus days. But for the QQQ and NVIDIA, slightly longer term, so I use the September. So we have 50 plus, I didn't check the number, 50 plus days. So give you a little bit more wiggle room to play around if something happened, especially for NVIDIA. We're going to have an earnings report before the expiration. So definitely check the earnings. If you're already in the profit, you probably can just take it off or reestablish the strikes, whatever the strikes you want. So this one is very similar to the QQQ. I kind of think NVIDIA's even like overkill in the short term. So this is a slightly bullish iron condor again. Wider wings, $20 on the put side, $10 wide on the call side. But as retail trader, if you don't want to put up $1,500, you can definitely make it $5 and $2 or $3 wide, or maybe $10 and $5 on the call side. So overall, for this trade, the delta is smaller than 10, similar to the QQQ, and the probability is roughly around 55%. Return to capital is really good, like a $530 over $1,500. Really decent return capital. So you definitely don't want to capture most of them. Take it off before the earnings if you don't want to. If you don't want the earnings risk.
Sure, we can go back to the platform here, just visualizing what this looks like on the trade mode curve analysis tab there on the platform. Kai, effectively, the bet here is that we want NVIDIA to stay pinned between certain levels, and this position can make money as long as we stay within our short strikes here. So the 180, 225 right now. Curious, if this is such a long cycle, 52 days to expiration, a lot can change in that window. With all these earnings that are coming up in the short term that feel like they're going to have a big impact on an Intel, on a QQQ, and an NVIDIA, would you look to any of the price action in your Meta, Microsoft, Amazon, Apple this week as a way to potentially, maybe I got into this position too early, I should take it off, try again next week? What would be the conditions for getting out before you get to the, you start rolling over your decay curve?
Oh, that's a good question. I haven't checked those names in the past week because I don't think those are, they're trading at the levels I'm interested in to launch. Definitely you don't want to short them because they're Mag 7. A neutral strategy, they're reporting earnings this week, so definitely I'm not going to trade unless it's for earnings reason. If everything goes down, I'm probably going to add more positive delta in NVIDIA or some other semi or Mag 7 underlyings, but I probably want to wait and watch.
Yeah. I mean, I'm very much with you there. The Mag 7, if the semis are going down, maybe they can somewhat stabilize here. You're seeing a little bit of that stability come into play today. In particular, a lot of the software names are doing well in today's session. IGV's up 1.5%. A position that we put on last week here.
Yeah, look at these charts. They're trading somewhere in the middle of the medium term range. So it's kind of very difficult to going long or going short. So that's why I'm probably just going to wait and see.
I'm very much with you. I have a position change to do in ServiceNow later on because last week Liz and I did the diagonal there, short the 108 and then long the 96. And I got rid of the 108, but I kept the 96 call. So now it's doing some work for me here. We're going to cover that later, though. Kai Zeng, everyone, from the research team. 3 trades, Intel, Triple Qs, and NVIDIA. What do you think? Those interest you? Put them in the comments in the YouTube chat below. And, of course, let us know what your earnings trades are for this week. Kai, tastylive's taking a brief break here. We'll be back in just a few minutes' time. We have more great programming coming up next. Mr. Zeng, see you next time.
Peace.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty fam, what's going on? It's the trade of the day for today, Wednesday. All day this is 28th. That's right. It's July 28th. I'm all over the place, so I'm not really sure because I tell you, these markets have been crazy. This week is just as crazy as we predicted it would be, and it's really still just beginning. We got the Fed meeting coming out tomorrow afternoon. We got Microsoft it's Meta and Microsoft earnings, right? That are coming up in a few hours, if you will, here. So those are going to be really interesting at the close. This market is basically giving us the rotation that we've been seeing for the better part of 3 weeks now. When you see days where chips are down, you see days where software are up, you see the consumer staples are up. That's playing out in a very big way, exactly that manner today, and that's what we're seeing. But I wanted to get a little bit away from that because I got to tell you, I got that trade on in spades, if you will. I mean, I have really dabbled in a lot of that on the days where the markets are down, and you can see the chips that are down, which have been the leaders in this market. You can see those other names that are up, and so I've worked that trade in a very wonderful way, and it's worked out for me. But I wanted to get a little bit away from that because something caught my eye that I really haven't been trading that much more recently. I mean, I've traded, when we've done the trade of the day so far, it's been a chip name, then Intel. We did oil the other day, which again, that's sliding. Shout out to oil. I mean, it can't come on cue right now. And look, I'm not really trying to big up myself or any given trade. I'm really trying to big up what we do here at Tasty. A lot of it boils down to not only my experience from a trader, but also Tasty mechanics and the way that things work. And right now, oil is a trade that we just did the other day, and that's sliding below $78 as we sit here and speak because of the escalation. But wanted to look at silver. So this is a trade that I haven't looked at in a while. And this is one where we've just really seen not only a slide in this price of silver, but a slide in the volatility, which is really not that uncommon. That's kind of how it goes typically. This move back here that we were seeing in silver earlier this year in January was insane. It was historic, if you will. I mean, it was just a really huge move that I think there was just a sort of huge global thing that was going on. It was gold and silver. They were really running. You were hearing a lot, particularly about central banks buying more and more gold. And of course, that led to the little brother silver getting a huge move as well. And it's an industrial metal. And you're just hearing about China and all these build outs and, however you want to characterize it. I mean, there were lots of theories. Honestly, I didn't get into a lot of them. I just got into the price move. And I've really kind of learned to do that more than anything. I don't think I know always why something is moving, but I can generally figure out the theme. Even right now, like semis. I mean, there's been a huge theme behind those. You see the AI data center build out, regardless of what you think is going to happen sometime in the future. At this point in time, the market is coming for the semi names, and they've been coming for them in a big way to the upside. But then more recently, right, you've seen a downside move. And it's interesting to play those to the other way because that's what we do as far as traders, but it's always about the price move that's happening at the current time. Now, we can play contrarian for a little bit, and we can find smart ways to do those. But me looking at silver and saying it's going to bounce, I don't know where it's going to go. Is it going to go to 70? Is it going to go to 80 or 100? I have no idea. But I can find a way to take advantage of this strong down move that has happened over quite some time when you look at it. And it's been really ugly. But is there a way that it possibly bounces, or maybe it's found a floor? Maybe it doesn't have to move a whole lot. Maybe it just doesn't have to keep going a whole lot lower, right? So I could do that and take a swing on silver in a futures way, and I could look at buying it. But for every SI contract, it's 5,000 of the. It's a 5,000 multiplier, right? And so I don't want to do that. I mean, we're getting some relief here in buying power, believe it or not, at $38,000. But it's because silver is a contract that gives you exposure to a $300,000 contract. We talk about $5,000 per ounce sitting at around 57 and change. So we're not going to do that. That's not the way I want to express my opinion. Now, I could go to /SI, which I have traded regularly, and I traded it a lot during this real volatile time period, kind of quick ins and outs. So again, this is 1/10 the size. And we could buy this contract, or, we could look at getting along here. But again, this one is 1/5 the size. And so that's why you're seeing a buying power relief here. But this one is really about $6,000 or so, right? $60,000 or so, a little more than that. And you're getting, a little buying power relief. It's probably closer to around 70,000 given the price right here. And that's why you're getting this buying power relief. But again, that's pretty high. I don't really want to trade that. The easy way would be to go to, SIC, which is the 100 ounce silver futures, right? Now, this is actually 1/10 the size. This is a lot more digestible product. And we could easily do that. Now, that's one I could do if I really felt strong one way or the other. And sometimes I'll do that when I trade futures. It's because I feel really strongly that the price is about to reverse. But I just told you, I don't really feel that strongly about the reverse in price, right? So that's when we go to the options. And again, when you look at all three of these products, the only one that has options is silver, the big contract, SI. And now the same multipliers apply to this situation, but now you can make it digestible for your portfolio. So one of the things that I looked at was selling this put spread, selling the 51, 50, 75, or 50 in the orders, right? 50 and 3/4 is how we often say it in trading, but we'll say 50 in the orders is what traders usually say. When you see anything like that's 0.75, it's in the orders, because people are saying it fast. In the quarters, 3/4 in the orders, you get it. It's a trading thing. So just this is just 25 cents apart, right? And in this case, selling this contract. Let's clear this out. Let's make sure so you can see it. Selling this contract. I did this trade earlier for 50 cents, right? And so with regard to that, you can see that doing that, I actually collected $250. Now that makes sense now, right? Like if basically it's not 50 cents, sorry, 5 cents. So I did this earlier for 5 cents. 5 cents times the 5,000 in that case, you would see that's why we get to $250 collected. And of course, this is 20 cents, right? So it's a 25 cent difference between these. 20 cents times 5,000, that's where we get the 1,000 max loss here. So I'm doing this quarter cent wide put spread and collecting $250 max profit of 1,000. So basically risking 5 to make 1 here. And it's the nice thing is that you get the buying power relief on it, $598 to this where your real, this is your real risk, 1,000, but this is the real time risk, if you will, in the buying power, $598 to make $250. And so that's the way I decided to bet on it, right? And it's a easier way to do it than just dealing with the future. I mean, look, if we get a bounce in the future, but we get another fade, it's hard to keep keep an eye on that. Now, one of the things, if I were actually doing that futures trade, I could just create an alert, but I'd have to sort of be paying attention to it. In this case, I have a long delta trade, but more than anything, I have kind of a short vol trade with volatility in silver in the 40s, mid 40s here. I think it's a decent, level, right? When you think about selling volatility. Earlier this year, we saw volatility in like the 60s and the 70s and kind of rode that volatility on the way down. In this case, even if silver continues to trade lower in a slow way, which when you look at the chart, that's really what it's been. Sure, there was a huge move down here and even, some bigger moves down from 80 to 60 and then even in this range. But honestly, since the month of July, it's been kind of trading somewhat sideways. Sideways to down, but somewhat sideways. And so that's what this trade tries to take advantage of, this sideways to downward movement being 51 and 50 in the orders right here. And so that's kind of the way I'm doing it. I went near there the expected move, almost on the edge of the expected move there, but that's kind of the way that I'm looking at it. And then if I look at, let's see the continuous contract. I want to get an idea. Oh, whoops. Let's see the continuous contract here. If I look at the continuous contract, trying to see the last time silver was at this level, going back to December, right? And then the last time that silver was below 51, looks like it was somewhere around November. So, it's just always interesting to get an idea of the last time it traded at a certain price. It doesn't necessarily mean it can't trade there, but just getting an idea of potential lows that we could see in silver. And again, this was the continuous contract. This contract, I don't know if it really actually traded at those levels. But speaking of contracts, that's the other thing that you want to pay attention to when you're looking at this trade here. Going back to the, /SI, looking at the options here. The other thing that we're doing this in the contract is trading 53.30, so a little bit higher than the front month contract. And as you can see, there's some contango going on here in these options. But 48 vol seems to be kind of the level of where things are right now. Like it doesn't seem to stray too far off that, even when you go further out in time. And so this is the September options, but it's the Z contract when you're looking at silver, which signifies the December contract for trading. And it's always interesting looking at skew in silver and gold and even oil, right? Because you always want to know, where is this thing really, what is it showing you right now? What is it expected as far as the price goes? So I like to do, we can go yeah, let's go 20 delta since we're right there. Let's go to the 20 delta that we actually sold. So 51 is actually 20 delta, which I kind of like selling 20 delta at times. And let's go far up here to find the 20 delta. And there is actually some downside skew. It's kind of what we're seeing right now, which is really interesting. You don't see that too often in silver. Most times you see upside skew. And so it does appear that there's again, with that 20 delta put trading over, there is a little bit of a downside skew at the moment. At least it would seem. So I don't mind doing this trade again to sell some volatility to the downside, especially if there's a little bit of downside skew. I kind of like doing that. In a 48 vol, again, you can look across the landscape of other futures. 48 vol is somewhat elevated, right? But again, you would expect that in this type of commodity. It is a commodity at the end of the day. You can look at the grains, ZC, ZW, all of those. Those are usually kind of lower on the scale, maybe in the 20s sometimes, maybe even teens. Gold and silver tend to be a little bit higher, as to be expected, because those kind of products are, well, they're very volatile. And they usually crash up. You usually see a lot higher skew. But in this case, you don't necessarily see that. So let's take a look real quick at the kind of how this trade looks on a P&L graph here. So as you can see, we're selling the 51 put, in the September 24th expiration. That is in the Z contract, just so you know. We're buying that 50 and 3 orders put, or 50 and 3/4 put, if you will. Both of these in September. It's a simple, straight put spread, right? And again, we collected 5 cents, which really plays out to be $250. Again, your 5 cents times 5,000 multiplier on the contract, and max loss of $1,000. So it would have to trade through 50.75, right, at expiration. Now, we don't plan to hold this thing to expiration. If I get a 50% gain on this, which could happen if we move pretty far away from strike, or if volatility comes in a little more to the downside, then maybe I get a chance of collecting $125 on a potential $250 win, and I just take this trade off and I move on to the next trade. That's probably a likely scenario. If silver continues to slide, continues to move down, then at some point, I start analyzing this trade. And for my book, I don't want to say, we don't always want to say we're okay digesting $1,000 loss. But if it gets to that won't destroy me. That won't wreck my book at all. And one of the things I can do, again, I talk about alerts all the time. I love to put on alerts. I could say, alert me when the silver Z contract, by the way, so just do /SI Z6. When does the Z contract get down to, say I want to keep an eye on, I want to know if it's below 55, let me know. Where I really probably care is maybe around when it gets to 52.5. That's when I really want to analyze, because once it gets that close, maybe it can have a huge move lower. So again, this is a fairly simple trade, just trying to take advantage of a potential bounce in silver. We'll see how it plays out. That is my trade of the day. And now we go over to Mike Butler with his trade of the day.
What's up, everyone? SMH going down. NASDAQ going down. E-minis up 30. But yeah, I think right now you've got plenty of products flipping around, going crazy here. Whether you're playing upside, downside, neutral, there's traders going everywhere. There's a trader's market here. And I think right now we're looking at end phase. I think this is an interesting product here. We talked about this yesterday on the options math check. Enflaze, Bloom Energy, and STX, all reporting after the close today. And looking at some of these implied volatilities, STX, 100-point implied move on a $750 stock. BE is a 35-point move on a $160 stock. And Enphase, you got a 5-point implied move on a $36 stock. So all of those well over 10% of the notional value of the stock price, which tells you that it is going to be a crazy one, or potentially a crazy one after the close today. So I'm focusing on Enphase here. I think Enphase is interesting because it's the smallest price point of those three that we talked about yesterday on the math check. And I think this one is digestible for all account sizes. And that's kind of where I want to be for this earnings announcement specifically. When you look at Enphase on a chart, you can see this thing was trading for 75 just a few months ago, early April, late May for this one. We've dropped all the way down to 36 here. So big potential upside room, but of course these things fly around. We've seen this thing drop as low as 26 just late last year. So I wanted to get in with a undefined risk position here, which is kind of rare for earnings trades. Usually I like to keep it defined risks, but we're dealing with a $36 stock and the implied volatility is through the roof. So I wanted to take advantage of that with a put ratio spread. So I went out and I bought the 35 strike put, and I sold 2 of the 33s against it in the 3-day cycle. This is a scenario where I'll be fine if the market rallies. I'll be fine if we chop around. But if we drop down to this 35-33 range over the next couple of days, I can make $230, which is the max profit here on a put ratio spread where I'm buying 1 option, selling 2. Another way to think about it is buying a vertical spread to the downside and then selling an extra put to finance the cost of the whole thing. Very similar to the Super Bulls and Super Bears we talk about all the time now on the show. You're financing the cost of a debit spread with an extra short option here and routing it for a credit. Routing it for credit is super important in the long run. I think if you're doing just one-off trades here and there, I actually don't mind if you route it for like a 10-cent debit or a 20-cent debit. It's not really going to change the feel of the trade. It's still going to be a trade where you want this thing to move to the downside, but instead of making 30 cents on any upside move, you'd be losing 10 or 20 cents on an upside move. So if you extrapolate that over 1,000 trades, of course, you want to be collecting a small credit versus paying a small debit. So I'm always just going to make the trade work with a credit by changing the strikes a little bit, maybe moving them further out of the money, maybe a little bit closer to the money, or changing the width, just because in my mind, like today's one day, we're going to do this hundreds of times throughout the year. So I want to make sure I'm collecting credits on all these trades that I'm making, and it just changes your probability of success as well. When you look at this type of trade, my break even is down just below 31. So the $30.70 exactly is where my break even is, and the product is trading at 36 right now. So my break even is 20% lower than the current market price. Love to see that. And not only with this trade in particular, but when you have a product that has such high implied volatility in end phase, you have the ability to continue that trade. You could turn this into 100 shares of stock at a basis of 30. If we retrace back to 36, you've now made 20% on your shares of stock. You could continue to sell the put. You could roll the put forward. You can turn it into a straddle. There's so many things you can do with a small price product. So really, this is probably just the entry point for this trade, especially if we get a big move to the downside. I will likely sell out of the put spread, capture that $200 value, and then use that credit to offset my basis. So you might be thinking, well, 30 cents isn't all that much in terms of cost basis reduction. That's the beauty of the put ratio, is that you're not using the credit received as your cost basis reduction. You're using your embedded long put spread here to reduce your basis way lower than the strikes. So if we do get a move down to 30 or 29 or 28, I'll sell out of that long put vertical spread for $200, and instantly my net credit received goes from 30 cents to $230, and I can roll the put that I have, the remaining put that I have forward. I can add a short call and do all these things. So let's just take a look at like what that might look like if I were to buy back the 33 and roll it out to August. Like, what is that giving me right now? About $1. So assuming we get a downside move, if that's what happens, I have the ability to roll this put out in time, move it from the 3-day to the 24-day, or even go to September. And like I've mentioned, I could also throw on a short call. Maybe the market drops down and the 33 strike call is trading for a couple $100. Or maybe I go to a 40 strike, 33, 40 strangle. So many things you can do with a small price product like this, but I wanted to get involved with the high implied volatility and route this trade with the long 35 and short 2 of the 33s, creating your traditional put ratio spread. I wanted my short options to be near the expected move in the 3-day cycle. So I actually looked at a 34.32, went with a 35.33 just to get a little bit more bearish delta on this inside move versus needing an outside move at the 34.32. But again, I mean, these are not going to be very different in terms of the trades here. This is one of those where it would have been routed for a small debit as opposed to a small credit here. So again, making sure we're collecting credits on any of these trades is just going to help you in the long run. And instead of paying 10, 20 cents of a debit, you're collecting 30 cents in credit. So that's the trade here. Another interesting thing is, like, let's say Enphase chops around at 36, 37 after earnings today, or if it rallies, I don't have to close this trade. What I would actually do is look at flying this off, right? Because my risk here is in the extra short put. I have a 2-point wide long put vertical spread. If tomorrow I'm able to buy this 31 strike put on a rally, what's going to happen is my buying power is going to free up. You can see this here. My buying power effect would increase by $1,300. This is a pretty hefty buying power requirement, but again, the notional risk is $3,000 if Enphase goes to zero, which I don't think is going to happen. But either way, if Enphase rallies after earnings, these options really far out here on the strike plane are going to go to zero. So I'll be able to buy this put and basically just give myself a free shot. I don't envision myself closing this trade if we get a rally. I'm really just going to look to buy this 31 put for a debit that is less than my 30-cent credit that I collected on entry. If I'm able to buy this put that's currently trading for 45 cents pre-earnings, tomorrow, if Enphase rallies, this option will probably be trading for 5 cents, 10 cents, something like that. In which case, I'll go and buy that option. My net credit received would reduce from 30 cents down to 25 cents if I pay 5 cents for it, or 20 cents net if I pay 10 cents for this option. But again, it'll free up my buying power requirement. I will basically leg into a free butterfly. This is the same kind of concept as turning a broken wing butterfly into a symmetrical butterfly, but that would be the plan. Free up the buying power, give myself a $200 free shot to the downside if the market just tanks over the next couple of days. And if not, I'll keep that small credit received and we will move on to the next trade. So that's the trade idea. Let me know what you think in the YouTube chat, whether you like it or not. Maybe you're fading it, taking the other side. Liz actually was talking about maybe turning this into the Batwing trade, which is basically doing both of these. So instead of just having the put ratio spread on in isolation, maybe you kind of create a neutral range here where I've got this put ratio spread on here. Maybe instead of just the put ratio, I go up and I buy, or I get into this long call ratio spread here. So instead of just doing the downside, maybe you do the upside too, 39.41. I stated I didn't really want to have upside risk in Enphase here. I need to get rid of my existing position on the order chains, or the analysis tab here. There you go. So this is what this looks like. You can see the little ears here. How cute, right? But the 39.41 call ratio paired with the 35.33 put ratio brings my credit up to like 60 cents if you look at the net credit received here. And you have these little kickers to the downside and kicker to the upside. But again, I don't want to be in a world where Enphase goes from 36 to 45, and now I'm dealing with short delta in an equity that's already beaten up down into the mid-30s after it's sold off from the mid-70s. So I'm just keeping it simple. I don't really like to take upside risk in equities anyways, just because you have these crazy moves that can happen. And if they do happen and you have a short call on, it's just a really tough trade to get out of. You're going to have increased buying power requirements with an increasing stock price. You're going to have increased implied volatility most likely. You're going to have marked losses. It's just a headache. So I like to reserve my short call exposure to products like the Micro E-minis, the Micro NASDAQ, products that are not going to move nearly as much in terms of realized volatility compared to these equities that are just absolutely flying around. Similar trades could be put on in other products for earnings, but really I like to think of this type of trade as a cost basis reducing trade. There's really not much max profit on an inside up move here, as you can see, but I do want to bring up the fact that in the interim, if you do these types of strategies for like a 30-day cycle or a 60-day cycle, the expiration risk graph looks great, right? You want the thing to drop towards your strikes, your long put spread fills up, all extrinsic value goes to zero, and you're just left with this nice window of opportunity. But from a theoretical standpoint, and I think this is the important thing to bring up, if we flip this from expiration to Theo, you can see I would actually take losses if Enphase were to sell off right now closer to my strike. And that's because my one long put option, although it gains intrinsic value, it loses extrinsic value. And my 233 strike short options would gain a lot of extrinsic value because these are way cheaper right now than this 35 is. And I've got twice as many options as the long. So from a theoretical standpoint, I would take on some losses here. In this perfect zone at expiration on Friday, I would actually see losses in the meantime here. So anytime you're using a put ratio spread, you have to realize that you can take losses if you get a move down too quickly, and you have to be prepared for that. You have to have the size correct where you're not worried about those losses. You know that at expiration, this is going to be a great window to be in. And even if still you get this big sell-off to the downside, you're way better off in terms of cost basis reduction at expiration compared to cost basis reduction right now if I were to just buy 100 shares outright in end phase. So using the analysis tab here along the right-hand side, we can see if I push this to the 30th and then you get to the 31st, you see that this Theo graph starts to look a lot like the expiration graph here. And that is the name of the game for put ratio spreads. But like I said initially, if end phase rallies to the upside, I will certainly be able to buy that 31 strike symmetrical option to create a 2-point wide long put spread, a 2-point wide short put spread, and I would get into that or leg into that for a credit. So the name of the game and the focal point here from a defensive management standpoint, if there's a rally, is buying this 31 put for a credit, or sorry, a debit that is less than my 30-cent credit that I received up front. And going back to the idea for these types of strategies for any other product, you can use the same sort of idea. So let's say in SPY or QQQ, I throw on a put ratio to protect my downside basis or get into SPY or QQQ at a lower basis. If you get a rally in SPY or QQQ or whatever you're trading, you have that same ability. If you can buy the symmetrical wing, and in this case, 2 points further down than my 2-point wide put spread that I already own, if I can buy this symmetrical wing here for a debit that is less than the credit I collected up front, you have the ability to leg into a free butterfly, no buying power requirement. You're guaranteed a profit if you collect a net credit on that total package from a transaction standpoint. And of course, you have this nice window of opportunity to the downside. I like to think of it as a hedge, for lack of better words, especially if you're using put ratios for SPY or QQQ. But that's it for the trade. Let me know what you think in the comments and the YouTube chat, but we're going to pass it on to our next trader.
You're on in.
What's going on, guys? Welcome back to another trade of the day. We got a few options to look at. I mean, all of last week we put on an individual trade each day, so I want to talk a little bit about that first before we get into the trade that we might put on for today, because the market's been so volatile. Things change within 30 minutes, an hour. It feels like the overall sentiment in a lot of these products shift really quickly. So earlier this week, one of our trades of the day was Google. We ended up selling this. We have 24 days left till expiration, and if I go to the order chains over here, you can see whenever Google continued to sell off to the downside, we rolled that call side, that untested side of the iron condor. We rolled that one down a little bit, and we collected an additional 50 cents, which is nice because now we have 280 worth of credit, which we can now widen those break evens a little bit more. And that's always nice because it allows us to sit a little bit more comfortable in our trades. So we're taking a little bit of a Mikey B approach where we're rolling the untested side, trying to collect as much additional credit as possible. So that's for Google. And again, we can take a quick peek at the Google chart. Google's been pretty volatile, mostly due to their earnings, but it still looks like it's chugging to the upside. So we don't want to overstay our welcome in this one, but if we could take advantage of that theta decay, that'll be nice. That's going to be the goal on Google. Again, 24 days left till expiration. We'll be patient with it. Another trade of the day that we did last week was we sold an out-of-the-money put spread on QQQ. What's nice is the overall put spread is down a little bit on the day, but we did purchase a call today that expires in 3 days, which we ended up taking off within 20 minutes. That one's already hedging the overall trade because right now I think our max risk on this put spread is going to be around what did we collect? We collected, let me go back to these order chains. It's a little bit easier to see exactly what we did, what we sold things for. We sold that out of the money put spread for $1.78. So our max risk on that is going to be what, $322. And then today we were able to snag $140 just off that $675 call. So we're able to use a little bit of what we made on that to hedge the out of the money put spread that is right now sitting in the money and is down a little bit on the day. So that's nice. We can reduce our cost basis in a way doing that while still maintaining that out of the money put spread with a little bit of long delta on in there. So we'll pay attention to that. SpaceX, this one is 24 days left to expiration. We talk about that one every day. Was trying to do a little bit in oil last night. Oil's getting very rocky. Oil's getting extremely volatile. And I know one of our trades of the day was buying that call, that 133 call. Right, Ranch? I know you were also looking at the calls in USO. I know a few of us were looking at the calls in USO. And because of this downside slide that we're getting, I don't like to sit in a lot of these trades until they're at max profit. If I recognize that my trade thesis within the time frame that I was looking for this move is wrong or is mistimed, then I'd rather just cut the position until I'm feeling a little bit more confident, and then I'll redeploy that capital maybe into the same product or maybe into a different product. Maybe just start looking at micro NASDAQ again. But with that being said, we ended up cutting that USO position. No need to realize a full loss on that if we don't have to. I mean, things change very quickly. And I mean, if we just look at the charts, I don't know what type of fundamental headline geopolitical news has been coming out, but at the end of the day, I don't really care. All I know is I'm down on this position and I need to manage the risk. So regardless of what's being said, it's a little bit irrelevant to the risk of this position. So with that being said, that was USO. And then Oracle. Oracle's another one that continues to slide on the day, which we ended up cutting this position. So you can see again, whenever we get the direction wrong in these trades, I'd rather just cut the position, reposition, redeploy that same capital in the same underlying, or redeploy that capital in another underlying. So with that being said, we took off the Oracle position, we took off the USO position. Oracle and names like Rocket Lab, and whenever that daily chart is just stair-stepping its way down, making a new low on consecutive days, that's a very difficult market to trade. It's a very difficult market to pick off the bottom. It's not that the opportunity isn't there, it absolutely is. Maybe we could even utilize a different strategy next time to allow us to stay in this trade a little bit longer to see what move might be coming. But whenever we're putting on such a directional trade, whether that's buying a call or just selling a naked put, I'd rather manage that directional risk a little bit more and a little bit quicker than I would on like a vertical spread with the defined risk and a little bit of a break even built into selling some of that premium on the verticals. So with that being said, that was Oracle, that was USO, that was Google, that was QQQ. But what I'm really excited for today is I really like the rebound. I really like the reversal that we got on the day. We have a little bit of long delta on in QQQ already. We sold an out of the money put spread. And the reason why I'm feeling a little bit more comfortable to do this was because we were able to take advantage of the volatility on the micro NASDAQ today. So what I want to do is this. I want to leg into this iron condor on QQQ. We sold the out of the money put spread for 24 days left till expiration. I want to look at getting on a little bit of short delta here. I know we've seen a pretty massive reversal off the lows. This is still going to be tentative because I know we have FOMC tomorrow, which that's really going to most likely set the tone for the rest of the week. And then we got some big earnings on Thursday like Apple, which should provide a little bit of more continuation after FOMC sets the tone. So with that being said, we might have to do some readjusting as we get closer to the end of the week. But I do want to get some short delta on in QQQ. Let me know how you guys are feeling about FOMC tomorrow. Let me know how you guys are managing some of your trades. Are you guys kind of front running this binary event? What are some of your expectations? But I mean, with that being said, I'm going to be looking at the same exact cycle, 24 days left to expiration. And this one is, we're going to treat these as individual positions, right? I know we have the out of the money put spread. It was out of the money when we sold it. This in the money put spread that we have now that we collected a credit for is kind of sitting right on the dance floor. We're just right outside of that strike that we purchased at 680. But I want to get some short delta on it. We might even utilize SPY for this. And one of the reasons being is because NASDAQ has kind of been leading this directional move to the downside. But products like SPY and IWM are still kind of trading within that range over the entire summer period. So we may get some short delta on in here. I like that NASDAQ is leading the way. NASDAQ feels like you're getting short a little bit into a hole. Like we've had that reversal off the lows today. But we are pretty sold off given the last, 3-4 days that we've seen on QQQ. So let's shift over to SPY. Let's look at its trade position. Let's look at the 24 days left to expiration, same exact time duration. And let's potentially look at the 750s, maybe buy the 755, see what we can get for that. We could do 237 worth of credit. That's not bad. And I mean, that's a 61% pop, a 67% P50, right? Max loss 264, max profit around the same 237 right now. That's actually a decent amount of premium for what we're selling. And I'm curious, I mean, 236, that's a lot of credit. I mean, that's almost half the width of this spread that we're almost able to collect. And we have a 61% pop. That's pretty high, given what we usually get selling strategies like this. So I'm gonna adjust this just to see the credit that we can get if we go a little bit closer. But I mean, 237, you know, you can't really beat that. I mean, 282, yeah, I'd rather sit at 750 on SPY. I'd rather sell the 750s on SPY, buy the 755s. That's gonna give us a potential credit of 236, 237. That's gonna allow our break-evens to be sitting at around 752 on the short side, right? A little bit above that, but around 752 if we average it out. I'm gonna go ahead and try to send this one through. Get a little bit of short delta on just because we have FOMC tomorrow, and again, we might come back and reposition, you know, after the bell or after FOMC on Wednesday, maybe sometime on Thursday, maybe sometime on Friday headed into the weekend, but we'll see how things play out. It's nice to get on a little bit of short delta since we have on a lot of long delta in the portfolio. So now we have the out of the money put spread on QQQ, and now we have the out of the money call spread on SPY. So that's going to be the trade of the day. We're going to be selling the 750s by the 755s. We collected about $2.35 of credit, which is a lot higher than we typically get on a $5 wide spread. So I like this. I'm comfortable with this position. And again, with FOMC, it can be difficult to have a level of conviction, especially when it comes down to direction, just because, again, like the FOMC really, you know, sets the tone for, you know, what other market participants might be expecting. So we might have to readjust. We'll circle back around to that. But I think the underlying of the day has to be USO, right? I mean, if you have some short delta on in USO, you've got a lot of downside action in just these last 3 to 4 days. So this is something that I'm going to step aside on right now. I'm just going to manage the risk. I'm not going to throw anything onto this here right now. I was debating on selling an out of the money put spread on USO at the same time, because whenever we buy that call, we're expecting that directional move in a very short time frame so that we're not going to be eaten alive by theta. But by selling that out of the money put spread on USO, it gives you the ability to give yourself a little bit more breathing room just in case you end up catching this falling knife just a little bit. And then also it's defined risk. So you can you have the ability to let that run on its own for a little bit longer. But because we bought that call, I didn't want to risk the entire debit paid. I'll just accept, okay, right now, I was expecting a short-term pop. We didn't get that right away. We made lower lows, and we'll call it a day there. So that's going to be USO, but we'll still pay attention to this oil market. But I don't want to give back more P&L on the oil products if I don't have to. Right, it's nice that today we were able to scalp a little bit of the micro NASDAQ for about 260. We bought a call on QQQ today for about 140, so about $400 worth on just the Qs or just the NASDAQ products today alone. So it makes you feel a little bit better, a little bit more comfortable since we can hedge those oil positions or those oil trades. But if we don't have to take unnecessary losses, we will try to avoid that at the same time. So taking a look at the micro NASDAQ over here, I was actually doing a lot of charting over here on the platform. Let's see if we can zoom in a little bit more over here. What were we charting on? Was it QQQ? Let me see what it was on. It's probably the other computer. But the micro NASDAQ, again, we were looking to get long, you know, near these lows. If I can pull up the trading activity, you can see we were getting long today on NASDAQ at 27,690s, which is around here on these lows. And we were able to catch a little bit of over 100 points. We only held that one for about 20. We only held that one for about 20. What was that? 20 minutes. We bought that 846 today, and then we ended up selling that 948. I'm sorry, that was about an hour. And I think we ended up letting this one run a little bit longer, although they're typically scalps, right? Sometimes they're 10-point trades. 10-minute trades, 20-minute trades, 30-minute trades. You know, sometimes a little bit less than that. But because of the given sell-off over the last few days, we were so oversold without getting any type of retracement pop is what led for the longer hold time on a position like the micro NASDAQ. So that's what we were doing a little bit today. Whenever we were trading down here at these lows, that's when we bought the calls on QQQ, which is really nice too. Again, like I know when it comes down, we like to scalp the micro NASDAQ because it's such an efficient market to scalp, not in terms of liquidity, but also being able to get in and out of the stock at the exact price point that you would like. Right, trading the options can be a little bit different because you have to go to the options chain, right? If you want to set up a stop loss, if you want to trade directionally, these options can be so extremely volatile. At the same time, you got to go to the options chain. There's just a lot of steps involved to be able to buy and sell some of these contracts. That's why futures can be so attractive because it's the one-click trading. But it's difficult to do that with the QQQ with the QQQ options. But with that being said, we were looking to get long, pretty much the same idea near the lows, but being able to purchase that call for about, what did we purchase that for? We purchased that call on QQQ today for, you can see this is the out of money put spread that we have down about $50 right now, sold for $1.78. Where is this? Let me go to today. There we go. We purchased that for about $6.78. And then we sold that one within 15 minutes. We ended up selling that one for about $8.16 after purchasing it for $6.78. So again, the volatility in these markets can be understated. I know Jermal was making the point here. Again, we got FOMC, so a lot of positioning happening before the fact. So I don't want to be too convicted directionally before an event like that. And the fact that we're selling off towards these lows is going to make a potential upside move a little bit more attractive. But I am also very comfortable that we put on some short delta in SPY today, just because, is this a tipping point? Because could this be the time we get a real pullback in the overall market, right? I mean, we just continue to chug higher. Pretty much on the entire summer, we were trading within a range, just consolidating at the highs. But this is the first time we're starting to see a little bit of a change of character. And I think that if we continue to head the way that we're headed, we could see lower prices. But FOMC is on Wednesday, right? FOMC is tomorrow. That could kind of be the fork in the road. But maybe FOMC adds on to the sentiment that we've already been feeling. Or maybe it reverses the sentiment that we've seen over the last few weeks. So with that being said, we'll be patient on those trades. But, SPY finally making some lower lows, trading outside of that range. It's going to be really interesting to pay attention to SPY, just because we're trading directly in the middle of that range, and we haven't really seen any type of significant pullback in SPY either. I know we've talked so much about the rotation, semiconductors, AI, a lot of these hyped up names, and I'm just curious to see if some of these indices will roll over temporarily. If not, maybe we keep chugging higher. And it's a great day to be a buyer at the highs. You just buy high and sell higher. It seems to be the way to go. But with that being said, we'll give this market some time. You got some short deltas on in SPY, out of the money call spread, so it's defined risk. We'll be able to sit in there fairly comfortable. We're up about $6 so far in the position. There we go, $7. We could take that off right now and call that a green trade if we want to, but we'll let that one ride a little bit more. I like that we were able to collect $235, which is a lot more credit than we typically get on a $5 wide. We at least try to get $1.66 minimum. So $235, that's an extra, what is that? That's like an extra 70, 80 bucks or 80 points on the trade that we could capitalize on. So with that being said, if you're just joining us, these are some of the trades that we did today, some of the trades that we put on throughout the duration of the week. We scalped some of the micro NASDAQ today. We sold an out of the money put spread in QQQ, hoping that this rally lasts a little bit longer so we can at least take that one off for break even. I was kind of in that boat today too. I was like, do I want to get some short delta on the QQQ position? This rally off the lows has been nice. Although the position is still red, we're only $50 away from break even. So just thinking about all these things in the portfolio, we'll continue to manage as we go out throughout the week. But the trade of the day, lastly, was the out of the money call spread that we sold on SPY. We sold the 750s, bought the 755s. It's going to be a waiting game from there. I'm excited for FOMC tomorrow. I'm excited for earnings on Thursday with Apple coming out. And with that being said, guys, that's going to be the trade of the day. We got Gus prepping for his trade of the day. Let's go ahead and check out to see what he's looking at. But thanks for taking the time to hang out with us.
Thanks, Errol. I was really hoping for a back to you in the studio, Gus, but I guess we didn't get that one. We're still ironing it out. We got to teach this field reporter how he's supposed to kick it back to the studio. But very happy to be here with all of you, and I have a trade in an interesting product, and this was spurred by a chat that I got this morning on Risk and Reward. Whoever gave me this trade, it's escaping me right now. I dearly apologize, but somebody was talking about how Rocket Lab seems to be a little bit oversold right now. And so that's the direction that I've chose to attack this. I believe it was Ranch, but I don't want to misappropriate that. If it wasn't Ranch, speak up right now. But I have decided to get long Rocket Lab. Now, this is a dangerous trade. Am I trying to catch a falling knife? Potentially, a little bit. I am a wee bit sketched out about the current situation with Rocket Lab, but these levels are just too attractive to ignore to me. Outer space stocks have been a giant theme, really, of the entire 2026 year, but particularly since SpaceX's IPO last month. And I just feel that we are getting to a point where I am obligated to get involved with a long position, particularly on Rocket Lab. Obviously, all these space companies are going to track pretty closely together, and we've seen Rocket Lab track very closely with SpaceX throughout the entire course of this drawdown, now all the way down to this low 60s level, currently just under $64. There is good strong historical resistance at this level in the low 60s. We've seen Rocket Lab take bounces off this level a number of times. We caught a dead cat bounce off this level earlier this month. Scrolling back into April, we can see good resistance happening at this level, slight retest below it at the very bottom at the end of March, and then we take another bounce off that level. Big consolidation at that level all the way through February. We can see acknowledgement at that level back in last December. And while I'm not usually a super technical guy, as I talk about a lot, I think when you see a level appear as a clear support this many times in a row, you're obligated to at least acknowledge it. And so that's what I'm doing here. My trade itself, I am playing a 2-by-1 put ratio to the upside here, getting aggressive with the 2-by-1. This is not something that I typically do. I believe I most recently did this with Starbucks sometime last year, which was actually a 3-by-2 until I took it down into a 2-by-1. That panned out swimmingly. I don't usually do this because it's a very aggressive position. Let me show you guys the trade setup here. We're pretty much still at my exact open here. I'm up $5 notional on this position right now. You can get a fill $5 worse, or you can try for my same 11.23 fill and see if you can match it, or maybe even get a little better. Rocket Lab does seem to want to continue to work down throughout the day today. But here's the setup. I have this takes $1,100 of buying power, which is not insignificant, and it gives you $1,100 back out in credit here. That's essentially the situation. Pretty much a 1-to-1 risk profile. Now I chose to attack this with a 2-by-1 instead of just a regular bullish put spread to the upside because, and I can set this up here, let's take our quantity down on this guy. If we make this a 1-by-1 trade, we're putting out $272 of buying power for $228 of credit. So that's slightly worse than 1-to-1, about 20% worse than a 1-to-1 risk profile on that. But by taking this second one up to 2, by going 2 short on the short side, we bring this much closer to a 1-to-1 risk profile, 11.18 in for 11.58 out. So we're essentially talking about the same $40 of difference between the credit that I'm getting out and the buying power that I'm posting up, but $40 is a lot less in a percentage context on 11.18. So I'm content to go for the 2-by-1 here. The issue with the 2-by-1s, outside of the massively more buying power that they require, is that these are dangerous. My max loss is much greater than my max profit. As you can see here, we're talking about max profit obviously being the notional value of the contract, while my max loss is nearly 5 times that because I have one short put with undefined risk just hanging out. It's not that the long put defines the risk of the short put. There is an extra one happening in the equation. My risk is semi-defined, if you will. So you have to be very careful with this, and I am going to be. This one is one that if we don't get the right move like tomorrow or at least before the end of the week, I am out on this trade because we have there is very real reason to believe Rocket Lab could continue to work towards these lower lows as well. If we zoom out into a more macro scale here, it's obviously been a great growth vehicle, but I talked about how much acknowledgement we've seen of this 60 level. There's also been plenty of times when we have gotten clean breaks down through this 60 level, most recently back in October of 2025 when we sank all the way down to 40. Rocket Lab, very volatile company. It's kind of yet to be determined how SpaceX's presence in the market is going to affect Rocket Lab. I think they will probably just move correlated, but I do think that some of this drawdown has to be due to people rotating money out of Rocket Lab into SpaceX, the new exciting space company to get involved with. So I'm curious if that substitution effect will continue to take place, or if we will see Rocket Lab just rally alongside SpaceX, fall alongside SpaceX, and because SpaceX has been falling this entire time, that's why we see Rocket Lab continue to fall as well. I would be surprised if these start to move out of correlation. If we get days where Rocket Lab is massively up and SpaceX is massively down or vice versa, I just don't think that'll be the case. I think we'll see this like AI or memory names where one big bullish or bearish story for one company in the sector has the propensity to move all of the other companies in the sector, particularly if it's the biggest company in the sector in SpaceX. So very, very carefully monitoring this. If we get below 60, I will certainly be out. And quite frankly, even if we just take another 1 or 2% down tomorrow at the open, I'd probably be looking to get out of this just because of how crazy the risk profile is. But my reward to the upside is very great also. And I've taken this pretty far in the money. That's the other thing here too is my top strike, what I need to stay above is 60. So I'm able to get this $4 in the money at a 1-to-1 risk profile for all intents and purposes, a slightly worse than 1-to-1 risk profile. And that's huge. Being able to get something $4 in the money, particularly when it's on a $60 stock. So we're talking about what, 7% in the money there. That's really good.
risk profile to be able to get out of this trade. I'm sorry, I'm getting ahead of myself. My brain's getting ahead of my mouth here, but that's a really good risk profile to be able to extract from this trade. Usually, and especially if you were talking about a 1-to-1 ratio, as I displayed at the beginning, if you go this deep into the money, you're going to have to pay a little bit for that. You're going to have to post up a little bit more buying power than the credit that you're getting out because your trade is inherently more guaranteed. You're buying it already a step ahead of the market, essentially. You're not making a prediction for the future. You're assuming that conditions will hold or making a prediction for the future. So to price all of that in, you're going to pay a little bit of a premium. But by doing the 2x1 here, I'm hardly paying any premium at all. My risk profile is essentially 1-to-1. And I have defined but very, very high upside should things move my direction. So just going to have to be very careful and treat this one with a lot of management. And I'm just very interested to see how everything moves. Now, beside the specific chart action that Rocket Lab has going on itself, which this is a trendier name than I would usually want to get involved with this heavily, we also have to take a look at the SpaceX chart, because as I just said, my prediction is that at large, we will see Rocket Lab move very similar to SpaceX. Now, obviously not as much long-term context to be had with SpaceX here, as it's only been public for a little over a month now, but SpaceX continuing to churn down, finally seeming to catch a little bit of a bid down here, though we have seen some fake out bids come through. But I think if SpaceX can find some support, can start to run even just a little bit, not even necessarily back to IPO price, but if SpaceX can just string together 3 straight green days, however small they may be, and instill some confidence back into the space sector, I do think that we would see Rocket Lab stand to gain from that situation. And I think that that's pretty likely, because as funny as this whole SpaceX situation is, and believe me, I think it's very funny, where we did all this hype, all this 1.75 trillion. What's it gonna, it's 135. What's it gonna open at? Oh my gosh, it's 150. Oh my gosh, it's 225. Wham, $100 stock. That's hilarious. Don't get me wrong. But at a point, SpaceX must become oversold. That excitement is still very much present in the market, both among retail and institutional investors alike. And so I think that as we get down on SpaceX, I mean, because for me, I had an order placed to buy 10 shares of SpaceX in my personal account, my non-Tasty account, at $100. I threw a limit order in there. I was like, why not? In a world where this thing tests 100, I feel that I'm simply obligated to get long. I don't think that I'm going to get a fill on that order now. Had we gotten another aggressive down day today, maybe it would have been possible. But I just think that, like the way that I'm thinking of, there is this level where it is just mandatory that I buy SpaceX shares and don't ask any questions. I feel that everybody, consciously or subconsciously, has those levels present in their mind. And we're going to see that expressed in the market here. I think that this can only get so low, which is a dangerous thing to say. I understand we're talking about a multi-trillion-dollar company that does not have the revenue to back that right now. But as we've seen with the AI trade, and now we're seeing with the space, if you will, the market is willing to assign those valuations, pricing in things that are in the distant future, 10, 15, 20-year distant future. And a lot of AI companies still have valuations relative to their revenue that are seeming to price in 15 and 20 years into the distant future. So I don't think that we're going to see a actual, fall off to fully match the revenue here. I don't think we're going to see the valuation on SpaceX slide so much that it matches the revenue. But I'm not surprised to see this slide that we've gotten, and I think this is feeling like the bottom is coming into me here. So if SpaceX catches a bounce, I think it moves Rocket Lab up. Even if SpaceX does not catch a bounce and just runs sideways, I like this support level for Rocket Lab. I was able to get into this trade out $4 ahead of where I need to be at a pretty equivalent 1-to-1 risk profile, which is attractive to me. And the only drawback involved in the entire process is that I have to use an abundance of caution to make sure that this downside doesn't start getting tested on this trade, because the moves down are going to hurt me a whole lot more than the moves up, particularly if we start going way down. So I feel content with where we're at right now. There seems to be good consolidation happening with Rocket Lab right now. These trades are October 16th, 80 DTE. So I'm giving this plenty of room to run, which is part of why I'm afforded that slightly more attractive risk profile, because a lot can happen in the next 80 days. I thought about being more aggressive with this trade. My initial conviction was to do something like 24 or 31 DTE when I went to attack this. But I wound up talking myself out of that and going on just a slightly longer time frame just to give myself room to mobilize should I need to. Should we run sideways? Should we take the next 2 weeks and feel like we're coming down and just barely testing that 60 level? I'm able to roll. I give myself mobility. And I just didn't want to put myself in a situation where some bearish news comes out tomorrow and this thing is over before it started because I've only got 24 days in the trade. So Rocket Lab is my trade of the day for today. You can see everything illustrated very clearly for me here. And I just need this to hold over the 60 level for the next 80 days until October 16th, just past my birthday. I am holding through one Rocket Lab earnings call in that calculus as well. So there is a binary event that could do good or bad things for me, but they just won a big old government contract with the Space Force. And I think we're going to see the enthusiasm return to this space fairly soon. Now, it might not be as much enthusiasm as we've seen in the past, but I think it will be enough to at least keep Rocket Labs afloat above 60. And if SpaceX moves up, I think Rocket Labs cruises up along with it. And all of a sudden, I'm not surprised if 2 weeks from now, Rocket Lab is at the 80 level and this one is completely sweat-free. So that will conclude my trade of the day for today. That will conclude all of our trades of the day for today. Try to say that 5 times fast. Be sure to stay tuned for Futures Power Half Hour coming up next with Chris Vecchio. It's going to be a wonderful show. Thank you so much for watching. We really appreciate you taking the time. And I will see you guys tomorrow.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. This is Futures Power Half Hour, sponsored by CME Group. I'm your host, Chris Vecchio. We have a cast of rotating characters here on Futures Power Half Hour, depending upon the time slot. Coming up over the next few days, Ilya is out, so today we are very fortunate to bring in the one and only Errol Coleman.
What's going on, Chris? Always good to chat it up with you and talk about some of these markets. It's been a little while. How are we doing?
We're doing well. We're going to talk some NBA basketball here at the start of the show. It's midday. The markets are kind of calm. LeBron to the 76ers kind of sucks.
For you.
He's living in New York.
Yeah.
He clearly wanted to be a Knick.
Yeah.
But what's going on with your Nuggets, man?
Let's not bring up old stuff. You know, the Nuggets will get there. It was a patient season we had to have, but I think they could pull one through. I think Jokic and the team, I think they can continue to build around him, and I think they can catch some momentum. But you got to beat the tough teams in 4 games.
I'm real bearish on the Nuggets.
Hey,
I was just looking at their depth chart. Oh no, not even Delta neutral. It's OKC Spurs. Could I just point out? Thank you very much.
Why are we bringing up the past?
Producers? I don't know. I didn't even ask for that, but they know me. Here's your depth chart right now.
That's a terrible scoreboard, by the way. That's a terrible one, man.
Trevon Brazile, who's a second-round draft pick this year. Julian Strothour, who was not in the playoff rotation last season. Deron Holmes, who was fully out of the rotation last season. Zeke Najaji, who was out of the playoff rotation last season. Alpha Diallo, who's a 29-year-old rookie from Europe. And then Tyus Jones, who was a buyout addition from last season. So I'm looking at your bench right now, and I'm wondering...
Look, I got 3 words for you. I got 3 words for you, Chris. Trust the process. All right. And I'm going to leave it at that. Trust the process. No, I mean, LeBron to Philly didn't see that coming. Looks like apparently he's going to be living in New York, maybe taking a trip down to Philly whenever he needs to be down there. But clearly, I think he wanted to be out in New York in some way. He wasn't able to get onto the Knicks, probably wasn't able to get onto the Nets. Whatever, he knew there was going to be a lot of talk regardless of where he went. But I do think just the location that he chose, he wanted to end up over there. I mean, he spent a lot of time down in Miami, spent a lot of time out in California. Got to hit the big 3. You got to go to New York now to finish off the career. See Chris say what's up to Vecchio over there.
I don't like the idea of another NBA star using a helicopter to get around.
Yeah, right when I saw those posts.
Hopefully takes the Amtrak.
Feeling. Yeah.
Yeah, hopefully it takes the Amtrak, which is just, hey, listen, it's not 45 minutes. It's about an hour 15, hour 30.
Yeah.
But it's a lovely ride from New York to Philadelphia. I know a lot of people who live in Philly that work in New York. It's just that much yeah, like the comparable rent for the same size living space is like $2,000 less a month.
How's the drive? What does that look like?
Well, they just take the train, so it's like 90 minutes each way.
Okay.
So they live in Philly, and then they just take the train to Penn Station, and they're at their desk by 8 a.m. And they're also save like $2,000 a month.
Yeah.
And like where I live in New York, it'd take me an hour and a half to get into the city. And we're not paying those kind of prices. So either way, though, you said trust the process earlier. That's a good transition into trusting the process in these markets, perhaps, sticking to the mechanics on a day like today, which has been a really wild day, Errol, here. I'm looking at the NASDAQ right now. It's only off 0.5%, but that just does not tell the tale of how today has unfolded. It was off 2 at one point earlier, and the sell-off was deepening here. We're now kind of getting into this FOMC window. It's almost 2 p.m. Eastern, so within the 24 hours before the Fed meeting, which that means we're also about 26 and a half hours away from the first of the big 4 earnings releases this week in terms of our Meta and Microsoft here. Talk to me about how you're looking at the NASDAQ right now, because this is clearly the index to watch today, given how it's been swinging.
Yeah, I mean, to the point that you made, it's really nice to be able to take advantage of the directional volatility we've been seeing, especially on some shorter time frames. But in terms of sitting in some positions, especially headed into FOMC tomorrow, I know I've been cautious of being too convicted directionally in the portfolio. So I've been kind of trimming some positions, getting some positions off that I'm not as confident on. Maybe I'm not taking off my full directional bias, but I will trim some of those deltas just because it does feel like, FOMC is going to really set the tone maybe into the rest of the week. And maybe depending on how earnings plays out, maybe that's going to provide the continuation after FOMC sets the tone. So really just on an intraday basis, the volatility is nice, right? Volatility is a trader's best friend. As volatility increases, obviously the risk increases, but so does the opportunity. But with FOMC coming up, not too convicted into these, longer term, larger time frame ideas from a directional standpoint. So I'm excited. I'm really looking forward to it. I mean, we finally broke out to the downside out of the range we've been trading in the entire summer months on NASDAQ. SPY not following suit just yet. We've been seeing a little bit of a rotation. So I think this FOMC is going to be nothing short of exciting, dare I put it that way, Chris.
Yeah, we had a great conversation with Helene Meisler on the 12 Eastern, 11 Central slot here today on Trading Trends Live. Definitely encourage folks to go check that out once it's clipped and put up on our YouTube page. But she was talking about the conditions for panic or capitulation being in place. And she pointedly said that they're just not there yet. Maybe they are in semis, right, in SMH, because that type of volume move that we saw yesterday, the largest volume bar ever, does speak to folks finally throwing their shares overboard and finally capitulating. But when you're looking at the triple Qs here, right, she had pointed out that the average volume in this instrument recently has been 35 million or so. And so if you're looking for that panic washout where everyone jumps overboard, you're looking for at least 2 times that type of trading volume over the course of the day on a significant low. I bring that up because today is odd. We had this big gap open lower. We've bounced aggressively since the U.S. market opened. We're obviously still underwater here in the triple Qs. But it's only 35 million shares traded so far, which granted, if that was a full day, that'd be an average day, and we still have 2.5 hours to go here, Errol. But this is not a panic market right now. This has actually been a fairly orderly decline, all things considered, with a VIX that's still hovering below 20.
Below 20.
Right now. Yeah. Yep. So square circle here for me today. I know that this isn't a futures instrument, nor the triple Qs, but I was using the triple Qs as a stand-in for NQ, as it were. We're seeing this big meltdown in the NASDAQ and the semiconductors and some of the hot momentum names out there, frequently on the top of the Wall Street Bets board. Quietly, the rest of the market is still chugging forward. Equal weighted S&P 500 here, sitting at what would be a new all-time high. So capital not leaving the market, it's just rotating within, getting away from the hot momentum stuff and maybe going to some of the lower valued but still quality names. Does this inform how you look at a name like the S&P, broadly speaking? Does it give you confidence to buy dips or perhaps stay away from certain sectors that may be weighing down the headline indexes themselves?
I'd say maybe staying away from certain individual underlyings, but I would say not too much of an effect on the S&P 500 for me, at least, Chris. Again, I'm a little bit more of a Qs guy. We already got jokes about it going around. I'm a little bit more of a Qs guy, but for the S&P 500, 100%. I mean, depending on how those other assets that are relatively correlated are performing, it's going to affect, I guess, my comfortability on putting on some of these trades. So, I mean, again, we haven't pulled back too aggressively off the highs from the S&P 500, right? How far are we off right now? Just a few hundred. I mean, that's NASDAQ terms, but not. I don't know how many handles are off from the highs, Chris, but we're not too far off.
3%?
3%. I mean, what is that? That's a drop in the bucket. That's another day in the market.
It could be a really good day in the market. You could get to 3%. But where are we right now? I mean, I've been thinking about some positioning that I'm still holding on to by the skin of my teeth here because I've been I've been watching this 50-day moving average, and just yesterday we didn't clear out the low, and I know my condition is to close an MES position below the 50-day here. We're bouncing off of 74.11 right now in the ESU6 contract. But have we turned a corner? He's not here with us until August 11th, but he's certainly here in spirit right now. And I do this thing when Ilya's not here. I almost talk myself into being a little bit more bearish to keep myself honest because I don't have that voice, like the little devil on my shoulder shouting in my ear.
Ilya typically leans bearish.
Yeah, and he'll tell you it's a function of the market conditions that he grew up in, and I something similar for me, right? Okay. He goes to work. It's the global financial crisis. Things crash.
Yeah.
And so that's that's his favorite type of trading.
Okay.
Which, when it's your best, that's kind of what you stick with.
Yeah.
I saw a tweet years ago. It's like 2012 or 2013. That was a meme of Janet Yellen saying, "Shut up and buy stocks." And I don't know why that made things click for me, but it's like being bearish, you got to be really selective. They're pumping liquidity into the market. Why am I fighting the Fed?
Yeah. What year was this?
It's like, oh yeah, that's why. It's probably 2013, 2014.
Yeah, I would have shut up and bought everything in 2013. I mean, in hindsight now, right?
Well, in hindsight, but it's interesting how, the conditions in which you find yourself. And actually, when you mentioned you're a Q's guy, Liz and I were literally talking about this morning, and I was thinking of you about this. Whenever I hear people like my parents or Frankie, they talk about the Dow, right? And then you go a little bit younger, and then like Gen X, they're talking about S&P 500 and SPOOs. And then you go a little bit younger to young millennial, Gen Z, and they're talking about Qs. And a little bit younger, maybe crypto. So I find that funny that you said that you're looking at the Qs here today.
No,
kind of
100%.
fits the stereotype.
I mean, because depending on what market you're looking at, I mean, that volatility feels completely different, right? You ask somebody that trades S&P 500, you ask somebody that trades NASDAQ, right? NASDAQ guy might have a couple extra gray hairs. That volatility, is definitely noticeable compared to the S&P 500 at least. But it is a great observation though, Chris. It does seem that trend is continuing in terms of generations.
Yeah. So what do we do with the S&P here? It hasn't really crossed any lines in the sand. It's bouncing from 74.11. This may simply just be a bear flag, Errol, because we're not getting back above what I think throughout July was a pretty easily identifiable area of support, 74.80 or so. 1, 2, 3, 4, 5 bounces from that area. So that's exactly where we're finding some resistance today. Maybe we overshot yesterday because of the oil move and the, excitement on the headlines from over the weekend, but it didn't hold, of course.
Yeah.
And today we're not pushing through there. So the NASDAQ, as you mentioned, that we broke through effectively the range lows. Have we made that substantial recovery yet? No, 28,500 hasn't been reclaimed. And this is a market that's not exactly screaming that it wants to go up before the hyperscaler earnings come in. So I don't see a reason to call a low here per se. Of course, the pricing is what matters most. So if we were to go out to 51 days, which is closest to your 45 and 21 out, and let's bracket the expected move by 250 points. NASDAQ is a big contract. Maybe MNQ is better suited for the average retail trader because this is $1,300 in buying power L. But the question is, even if we're going to be, NQ, is the math there? Okay. Straddling that expected move, we're looking at 250 points wide between strikes, only $46.25 a credit. That does not meet the mark. At 250 points, we're looking for at least $83 in credit. If you're looking at NQ, if you're looking at MNQ, $8.33. But it's just not there right now.
Yeah.
Given how this market's currently priced. So dip buying, maybe. Perhaps directionally neutral involved, but being directional and saying like the lows here and the market's compensating me to take that risk right now, I just don't see it making that mark. And the technical momentum is just top left to bottom right.
Let me ask
you this, That's not how
Chris.
I trade.
Does it kind of feel that in terms of price, maybe more so talking about the NASDAQ market, does it feel like we're kind of at an inflection point, whether the market keeps heading upwards back to an all-time highs and sustains that trend, or maybe we get a little bit of a change of character, change of behavior to the downside temporarily, given the insane rally we've seen earlier this year? Does it feel like we're at an inflection point with FOMC tomorrow and some of these big tech earnings coming out?
No, it definitely does. I mean, I think about the 2018 market when the Fed started to hike and then just general malaise, the stock market basically slumped for the third and fourth quarter. In fact, I don't need to tell you about this. We do have a chart on the screen. Better the show than tell, Errol, right?
You said 2008. Was that it, Chris?
2018.
2018. Okay.
Can I go back far enough? No, I'm going to go to IWM to show this.
IWM.
There we are. Okay, so here we are. IWM. Okay, so fourth quarter of 2018 here. This is a weekly chart.
Okay.
So the very left is the start of 2018. This is 2019. So you have now the start of September 2018, and the Russell IWM goes from 172 down to 125.
Yeah.
Right, loses basically a third of its value. Just the Fed starting to hike, the cost of money is getting more expensive, rates are going up, real rates have increased.
So rates were being hiked at that point. I'm sorry, Chris, didn't mean to cut you off there.
Yes.
But just trying to remember back, I don't think I was too involved with the overall market in 2018, but rates were beginning to hike. What was the cause of that rate hike in 2018? What was kind of the tipping point?
The economy was finally doing better after the global financial crisis.
Okay.
It had gained enough momentum. Trump had started doing tariffs with his initial U.S.-China trade war. I'm thinking about this. So there was a little bit of inflation concern within the system. And once inflation started burbling up, the Fed said, we can continue to remove our emergency measures and move further away from the zero lower bound, get away from ZIRP, yada, yada. And so, the economy warranted tightening because things were going good, but not great. In any event, the reason I bring that up is the clear litmus test this earnings season for these hyperscaler names, the Mag 7s in particular, the Meta, the Microsoft that we're going to be looking at tomorrow, which are big heavyweights here in our NASDAQ, as you know, Errol. It's all been about the CapEx. How much capital is going out the door to help build this AI revolution? And every dollar out the door now means another dollar that needs to be paid back in the future, and it gets into the back of the line. And so you as an equity investor, if they're taking on more debt or you have no free cash flow, when do you think you're going to get your money returned to you? Effectively is the question right now. So I'm looking at what's going on in this market tomorrow, and if we get a Fed that says, actually, it doesn't really matter what oil's doing, you look at diesel prices and heating oil prices, and they're sitting basically at their yearly highs. They haven't come back in. There is inflation coming to the system. While we chose not to raise rates today, we're going to have to do so in September. They start to foam the landing pad, and then you get these gigantic CapEx numbers from Meta and Microsoft, and the market goes, you're telling me that I need to give you more of my money, which is now going to have a greater cost for just now having it extended longer in time. And so the equity is worth even less. I mean, I could see tomorrow being a really bad day for stocks, which, incidentally, it's not going to be an S&P 500 trade, and the one that we did yesterday going into today didn't work out. But for tomorrow, something like a put butterfly at the expected move. Let's just clear this out. But something like a put butterfly at the expected move. That would interest me, because if we do get a big downside move in stocks, there is a very high asymmetric payout on taking a bet like that, risking $65, $50 to make 1,400 or so.
Yeah, you gotta take that.
And I could easily see the market freaking out tomorrow with that. So maybe we recenter this on the futures then here, Errol. After all, that's what we're trying to do. When you want to do something like a butterfly, call or put butterfly, it's usually best to do it in a high volatility environment. You're getting compensated if you're right, because the distribution of outcomes is so large.
Right.
Okay, when there's low volatility, the distribution is narrow, so you're not really getting paid to take that kind of bet. The NASDAQ, it feels like, would be a little bit more sensitive than the S&P 500, which I know is a really difficult thing to understand given how they've traded recently. So why even look at ES? 3 days to expiration here, Errol. If we were to construct that same type of put butterfly around here.
Right. Expected move?
Go at the expected move, just near it, 50 points wide. What would this look like in M and Q, just for the sake of this conversation?
No, I'm curious about this. What are we whipping up right now?
Risking $2 to make 98 with $93 of buying power. So for a retail account who wants to like kind of hedge off, maybe the market does freak out tomorrow because of the Fed and the earnings.
Yeah.
Something like this towards the end of the week could work. In fact, this is such a small trade that I think this is even worthwhile for NQ itself. And with NQ, unlike M and Q, we get those daily strikes. So we don't even need to go out to 3 days to expiration.
Yeah.
Doing that here, 550, we'll go 525, 575. We double up the middle, risking $5 to make 490, somewhere in that neighborhood.
I like that.
I like that too. Let's see if the market wants to get it filled.
Okay.
So tomorrow, right here in NQ, the idea that we've been seeing is that these tech stocks have been punished. I'm just thinking about my own book here, Errol.
Yeah.
If it's not tech, Coca-Cola, Merck, Novartis, KMB, pick a name out of the hat that is not AI related, those positions are doing fine.
Right.
If it's anything related to tech, it's been getting hit hard.
Yeah, we got all the old faithfuls up. We got Heinz up. We got Coca-Cola at all-time highs. You know, all the old faithful stocks. Old faithful.
Liz scared me out of Coca-Cola today.
She said I had. What'd she say?
I was short last week. I got short the 78.80 put spread, and then it jumped today. And she's like, "You got to get out." But it was at 24 days to expiration. I could have rode that thing into the ground a little bit more. I'm my own person. I make my own decisions. Anyway, there's something to do in the NASDAQ, Errol.
Okay.
10 minutes left. The other thing is ongoing here. How are we managing a Russell position?
Yeah.
Beautiful thing about the short put spread, just like the short call spread, is that folks here know that I call it the wedding crashers trade. End of the movie, Owen Wilson runs up to the altar and he says to the bride, "I'm not asking you to marry me, I'm just saying don't marry him." So short put spread is basically the market doesn't need to go up, it just needs to stop falling.
Okay.
And the 50-day moving average for the past few months has really been kind of old reliable here. When you've gotten dips between the 1 month and the 50, the market has seemingly stabilized.
Yeah.
It started to stabilize again here recently. So as long as we're sitting above the short strikes, 28.75 and then 29.25 here, I'm just kind of forced to grin and bear this chop, which isn't fantastic, but that's really all there is to it. No conditions are being broken, and the market's behaving away from tech in a manner that's still fairly constructive. So it's difficult for me to give up the long deltas yet.
What EMA was that blue one down there again, Chris? If you could remind me.
That's the 50-day.
Okay.
Creeping right up at a beautiful, I mean, how many lows have we had here? June 17th. We can go directly to last Thursday. It's been 29.30.
Yeah.
29.35, and now that's exactly where your 50-day is. So below 29.30, feels problematic.
Explain problematic.
If I'm sitting like the 29.25 short strike, this thing could go belly up very quickly. And right now, it's already a small loser. I mean, I really actually don't like the strike placement now that we're looking at this, Errol. Get out of here. I want to get rid of you. I don't like that. Too close.
I feel you. Sometimes I'll see something, I'm like, I'm actually not too fond of that. Let me redeploy capital elsewhere.
Yeah, speaking of redeploying capital as we make our way through this futures, Errol, tell me your take on rates here. Oil's fallen off hard the past few sessions. Bond yields have come down. It seems fairly straightforward to me. Do you sell a rally in bonds, or do you trade it, buy it up?
I'm not opposed to buying bonds. I've only traded bonds one time, Chris. TLT. Gus and I had bottom ticked it. Since then, I haven't touched it. I got a clean record on it, 1-for-1. But when we come back down to bonds, it looks like bonds have been rallying. Bonds is it seems like it's a difficult product to fade, I will say. Don't know how I'm feeling on that one, Chris. I'll put it that way, actually.
Well, from the volatility perspective, it's pretty unappealing. 12.1 IVR. You look at the raw vol, it's like 10. You go over to ZB, it's even worse. You're going under 10. Yeah. 12.9. But Errol, I mean, yesterday we did make a position adjustment here. Okay. We have been rolling down long put spreads, long at the money put spreads in recent weeks in ZB. We had gone into another one, 110, 109, and then the market started to bounce back. So yesterday I said, you know what? We're bouncing back to former support turn resistance. Oil looks like it can collapse further from here. That's probably going to take some pressure off. I don't need to ride this out. If this thing is going to go above my long strike here, then all of a sudden this position's not working. So I got out at break even. It cost me nothing to get in and get out, right? Okay, outside of transaction fees. So my thinking here then is what I wanted to do was to find a new opportunity to get short. Let me know your diagnosis on this, sir. I'm looking at the move since the end of June here.
Gotcha.
And I see that we're still in somewhat of a downtrend, and I still see that we're holding below that yellow line, which is our 1 month moving average. Is today a reload day?
I think today is a day to take a shot, considering the factors you just brought up. I mean, I think it's time to take a shot. What is the yellow one again? What EMA is that?
So that's your 1 month.
Okay.
That's your 1 month moving average, Errol, and it's got me it's got me thinking here. What happens with tomorrow's Fed meeting? If the Fed raises rates tomorrow as a surprise, what do you think happens to long end yields? They go up or down?
They go up.
I would say they would go down.
Okay, they go down.
Well, they hike. It's going to hurt growth. It's going to hurt inflation. And so then those inflation and growth premiums are going to get sucked out at the long end of the curve, so yields come in. Right? Remember when the Fed cut by 50 basis points in September 24 when the market was expecting 25 and then long end yields blew out?
I do.
You're giving the market you're giving the market more money when we're running pretty warm on growth and inflation already. It's like shoveling coal onto the fire. Right? So I'm viewing it as the opposite end. Warsh could also come out and say, we have these task forces in place. 6 more months, we'll let you know at the end of the year to try to buy time to not have to hike because he's President Trump's pick.
Right.
I think the optionality for tomorrow is fantastic around this meeting. And if there's only one way to quantify this into math terms, my friend, it's going to be the CME FedWatch tool here. There's still a 30% chance of a hike for tomorrow. It's not
impossible.
Nothing.
Yeah.
It's not impossible. The Fed's never done that before. They could surprise. Citadel has been circulating a note saying that a hike tomorrow is possible. This trade has rarely, if ever, worked for me, but like Tobias Funke and Arrested Development, maybe it will work this time. I'm thinking about something like a reverse iron fly here, Errol.
Right.
Which, who cares which direction this goes, as long as it goes, and the Fed is going to give us a spark.
Okay.
Right?
Expecting that
if they hike,
yeah.
Because we have 30% of market participants potentially offsides, or 70% of market participants offside. So some group of people are going to have to make a meaningful adjustment. And they could start to foam the runway for September if they really want to hike, which is what the market is telling us. Right now, the market's giving you a 95% chance of a hike in September. So what if Warsh comes out and says, we don't envision hikes anytime soon, and the market has to take down its hike odds? That could provoke a big, that's almost set in stone right now. That in and of itself could provoke a big movement in yield. So Errol, we should be playing for a little bit more vol right now in treasuries, which at 11, 12 IVR, it's pretty dang low.
I think you get the volatility you're looking for too.
I think so, my friend. What can we do here? I like ZN better than ZB. It's half the buying power requirement than ZB. Same half tick value, like $15.62.5 as opposed to 31, etc. Either way, though, here, Errol, 1 point swing. We're up near 108.5. We're a little bit more, 108 3/4 right now. So buying the 109 put and call, selling the 108 put, selling the 110 call, dollar wide or point wide, risking 450 to make 546, costs 29 in credit here, 51% probability of profit. This market just needs to move.
I think it'll move. Can't get a move.
Can't get pinned after the Fed.
Yeah, no. And I think you brought up some really great perspectives, especially with some of the moving averages. And on top of that, providing a little bit of market structure, recognizing we're trading in that range. We're kind of at a inflection point right now. On top of that, we are able to see a little bit of the confluences with those moving averages that you have brought up. I mean, we even looked at some of the bonds. We looked at the Russell. So it does seem that we're going to get some type of move. Again, I think it's just going to be a matter of, are we going to start to stay on that consistent uptrend back to the highs that we are very much so used to, or are we going to actually get a decent pullback? Not even calling for a market crash, but it's been quite some time since we've gotten a little bit of a relief from the rally. I will say there, Chris. So with that being said, I think we'll see the volatility there. I do like those trades you set up too, actually.
Errol, it's always a pleasure. Thanks for joining us here. I think you're going to be coming on a little bit more often this next week or two while Ilya's out. So thanks very much for stepping in. Errol, final closing thought here as we head into the final 2 hours of the day. Are you thinking this market moves a bunch more, or are we going to get pinned as we look to the Fed and Microsoft and Meta tomorrow?
Man, I think we start to get pinned. Maybe even staying inside of today's lows. We'll see. Sometimes the market can get pretty choppy prior to FOMC, so I'll be patient.
He's been Errol Coleman. I've been Chris Vecchio. This has been a quick edition of Futures Power Half Hour here on Tasty Live. We have more live programming coming up right around the corner. Live trading coming at you, so stick around. See you after the break.
What's up, everyone? Mike here for another episode of Options Math Check, and this one is going to be earnings related. We've got plenty of earnings on deck this week. You've got a handful of Mag 7s with Apple, Amazon, Microsoft, Meta. Those big four are reporting this week. I just wrote earnings previews for all of those on Tasty Live's News and Insights tab. So check that out if you want some written content. I do a little analysis of the implied volatility and just things to watch out for the stock. All the stocks, I should say. So check those out. But today we're talking about BE, STX, and Enphase. They have big implied volatilities, all three of them, and we've got huge implied volatility across the board for a lot of these stocks, and usually when that happens, you have a hard time beating those high implied volatilities. When you look at these three stocks in particular, you typically have a 12 to 10% implied volatility range, and they usually do not beat. When you're looking at BE, 1 of 8 times, they beat that move. You look at STX, 0 of 8 times. They beat that move over the past 8 cycles. And Enphase, just 2 of 8, beating the move for the huge implied volatility. So we're going to take a look at all of these cycles here. We're going to take a look at some skew if we can find it. Maybe construct some earnings trades for these three stocks. So let's dive into the platform right now and do just that. So we're in the Tasty platform, and we got to look at some of these stocks here. I mean, Enphase, going to always have big implied volatility. We have a 100% implied volatility really in August, which tells you everything you need to know. $37 price point, $5 implied volatility for the stock. So whenever I look at any earnings announcement, I'm always going to look at the weekly expected move, the 4-day cycle that encompasses the announcement, and I'm going to weigh that against the stock price. That tells you how big or small the implied range is. If you look at Apple, later this week, Apple has like a 5% implied move, something like that. It's actually a little bit less, $330 stock and a 12-point move. So that's really low. When you get up to 10% of the stock price, you're dealing with a pretty high implied volatility. So for end phase, 10% of 37 is 3.7. We're seeing 5. So we're seeing well over 10% of the implied move relative to the notional value of the stock price, which tells you end phase has huge implied volatility for earnings, as we just stated previously. But this usually kind of tells you that there's something that the market is looking for. And if they get it, maybe there's a big move positively for end phase. But if they don't get it, maybe there's a huge liquidation event that we see. But over 10% is pretty rare. But for these 3 stocks, I guess it's pretty common. But generally speaking, you find products that land between that 5 and 10% notional range. So having anything over 10% is notable. You look further out in time too. The next thing I look at is what is the weekly cycle for the 4-day relative to September, for example. August still has pretty elevated implied volatility, so I don't like to weigh the 4-day versus August, because you're going to see 99% drop down to these back month levels of the mid 80s. You can see we also have some high 70 readings here. So I wouldn't be surprised to see 88.7 in September drop to 80, maybe a little bit lower than that into the 70s, which means that this August cycle is definitely going to drop from 99 down to 80, or kind of match these further dated cycles here. So if you look at any stock that has already reported earnings, like Intel, reported a couple weeks ago, you can see pretty similar implied volatility readings across the board. And generally speaking, that's what you're going to see. You're going to see all of these implied volatilities crush towards a kind of a flat line. And that tells you, or gives you an idea of how much implied volatility is going to contract in these monthly cycles and in the weekly cycles. So end phase, 4-day cycle, huge implied volatility. Looking at the premium here, let's go equidistant out of the money to see if we can find skew. That's the last thing I look at before constructing a trade, just to get a whole lay of the land for this earnings announcement. So let's go 3 points out of the money, 4 points out of the money to the downside in end phase. We'll go from 37 down to 33. That gives us just to the expected move here, but a dollar option, we'll call it 90 cents between the bid ask. And then let's go 4 points to the upside. We'll go to the 41, and you can see that we have call skew here with an option that's trading for significantly more than the equidistant put option. 41 is 4 points higher than 37. So looking at this equidistant range, you've got a $1.15 option to the upside and a 88-cent option to the downside. So skew just tells you where the velocity risk is perceived to be. Doesn't mean it's going to move in that direction, but it does mean that if you place an options trade with short premium on the upside, like a calendar spread where you're selling that weekly option, or a diagonal spread where you're selling the weekly option, or even a butterfly or a ratio spread, broken butterfly, anything where there is a short premium component on the upside, you're going to have better cost basis reduction than playing for a downside move. But again, if you're placing directional trades and you have a downside move and you get the downside move in end phase, regardless of skew, it's going to likely be a profitable trade. So just keeping that in mind, huge implied volatility for end phase, kind of wild to see. But let's move on to the next stock here. And let's pull up STX next. I think STX could be interesting. Seagate Technology. This one is a stock we've been talking about a few times on the morning show here, but seeing a 5% sell-off today is kind of wild. Earnings are July 28th after the close, and this is another one that is much higher than 10% of the stock price. This is kind of crazy. 100% implied volatility all the way through September, which tells you this is a high flyer, high implied volatility stock. $800 stock price, $112 implied move for earnings. So this is going to be wild. Cost basis is going to be through the roof here in terms of cost basis reduction if you're selling an option against September. But let's go through the motion again. $112 stock, $112 implied move on an $800 stock, well over 10%. 10% would be 80 points. But looking further, this is kind of interesting. You've got 112 points for the 4-day cycle, but you still have 300 points almost for September. So even though implied volatility is really high for earnings, this market is telling us, yeah, earnings could make this thing move, but we still have much more implied volatility priced through September. 112 relative to 260, going back to end phase, where we had $5 relative to $7. So this is what is this, 70% of the implied range, $5 against 7. And then you look at STX, and it's only about a third of the range. If we do 112 times 3, you're at what, 350-ish. So less ratio when it comes to 4 days to 53 days in STX compared to N phase. And last but not least, let's take a look at skew. Let's just go 100 points out of the money. We'll go down to 705 since we're looking at 807 in STX, trading for, let's call it $1,900 in the mid price there. And then let's go 100 points to the upside, 906. Interesting. So this market doesn't really exhibit that much skew. If we were to kick this up to 907.5, still, we're looking at pretty equidistant, equal premium options here. So a little bit of a different story. N phase clearly has call skew. This is a lot less clear in terms of velocity risk to either side. So for me, this reads as, generally speaking, this is going to create some volatility with 100% implied volatility in the weekly cycle and all the way through September, a 92 IV rank. So be careful out there if you're trading STX. This one I would stick with defined risk. I'd be forced to anyways at an $800 price point and $1,800 options for the 4-day cycle. Last but not least, let's take a look at BE, Bloom Energy. And this one has been a high flyer for a couple of months. It's kind of lost its luster. If we look at where it was at 350 all the way down to 185 where we're trading now, but that means nothing for earnings. Earnings can create tons of volatility, and this is a huge one. This is a crazy one, actually. $185 stock price. $43 implied move for earnings. So this is crazy. You've got, what is this, 300% almost? $18, 18.5 would be 10% of the stock price. We're looking at 43. Then you go further out in time and you're looking at 65 points for the 25-day cycle, 80 points for the 53-day cycle. So even though this has huge implied volatility for the week, they're still pricing in tons of implied volatility for September. Like, this is a make or break situation. 80-point implied move on $180 stock is nuts. So this one, I would imagine we're going to see some skew here. And this is kind of funny. We'd have to go like 40 points out of the money to find these equidistant premiums. Let's go down to the 140, which is 45 points out of the money to the downside, trading for 530-ish. And let's go 45 points out of the money to the upside, which would bring us to 230. And yeah, there you go. Trading for $7. So equidistant options here. Call side trading for much more value than the put side, which doesn't really surprise me with the super high implied volatility, especially when you get into the 200, 300, 400% range. Let's say 200% range in implied volatility. You don't really see crazy numbers like that outside of earnings reports, but you'll usually see call skew in those environments because a stock can only go to zero. And if it goes from 185 to zero, that's 100% loss. Where stocks can multiple to the upside. You can see this thing go from 185 back up to 400-ish, which is more than 100%. So when implied volatility starts to creep up above 100%, you typically see call skew in those products simply because a stock can only lose 100% of its value. So with that said, I would say I am still going to be defined risk in here, trading BE, just because these options are crazy in terms of the expensive nature of them, but also pretty wide bid-ask spreads, and I don't want to step in front of this thing with an undefined risk trade where this is clearly the highest implied volatility we've seen or we've talked about for any of these three stocks, but also any of these other tech stocks we wrote about on the News and Insights tab this week. But I think the big thing here is when you have implied volatility ranges this wide, it doesn't mean they can't be beat, but it does mean it takes a lot for BE to show you a 2 standard deviation move. A 2 standard deviation move in BE would be a 90-point move, basically, up or down, which is 50% of the current stock price in a week. Would be wild. The lower the implied volatility is, the opposite is true. You have an easier time posting a 2 or 3 standard deviation move, because if there's only a 3% move or a 5% move, a 2 or 3% or 2 or 3 standard deviation move against that is 5%, 10% of the stock price, which happens every day. You'll see stocks up or down 10% pretty much every day. So the lower implied volatility is, the more afraid I am, honestly, of selling undefined risk in there. I'm usually sticking with defined risk for earnings anyways, because these binary events can create outsized results to the upside and downside. So I want to know exactly what my risk is on entry. I want to kind of take advantage of the vol skew here, where the lower implied volatilities are in the further dated cycles, the super high implied volatilities in the near term. And that's kind of where I like to live with these types of earnings trades. But let me know how you're trading these three. BE, STX, Enphase all have implied volatility readings for the week over 10% of the stock price. And some of these are through the roof. So be careful out there, but let me know what you're doing for these trades. And join us on the morning show this week. We will be looking at all of these stocks and more on the Tasty Live morning show. But we'll see you on the next options math check, and good luck there. Good luck out there with these earnings reports. Peace.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the early edition of From Theory to Practice, man. I caught you guys napping 15 minutes early on the start time for the show. So we are going to go from the Dr. Jim Power 3/4 of an hour to the Dr. Jim full hour show today. We are off to a rocky start. Don't worry, it'll all be over in 58 minutes. So welcome to the show. I'm glad that you are here. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, you can celebrate if you are just here. You can commiserate maybe if you are also here, because the gimmies and the gotchas, they most certainly come together. But if you have a question for me, I would drop it in the chat box. Drop it in the chat box. I'll try to get to as many as I can right around the halfway mark of the show. We should have a little bit of extra time today because we started, 15 minutes early. So this is kind of the Elaine Venice extra wide lane version of the program. So if you've ever had a question that's just been burning through your skull, and I'm like, man, I really need to hear Dr. Jim's thoughts on this question, drop it in the chat, and I will give you my thoughts for no fewer than 9 minutes. So Ben, go ahead and bring us into the market. Man, what's going on out there? EMI S&P is up 16. You got the risk-free instrument, also known as the NASDAQ futures, which for the record officially is a very, very high risk product, down 250 on the day. You got the boomers up 585. You got the Russell 3000 down to not quite at or around or even near 3,000. So you got bonds up 16. You got notes up about 7. You got oil down 368 on the day. You got UB40 up a little bit. You got the shifties out there, and they're getting smacked around just a wee little bit, down 46. And then you've got the Hunt Brothers. Hunt Brothers down $1.32, down to 57. You got the British pound is up. You got the euro is also up. You got the euro is also up. You got volatility down. The market is so weak that even volatility futures are also down. So volatility down. Got Bitcoin up. You got Ethereum up. Man, Apple's even up. Amazon is down. Baidu is down. That makes sense, obviously. GDXJ. Man, it's just a mixed bag. It's just the VIX is down 30 cents. Man, crazy, crazy stuff. All right, what I want to do, though, let's talk about a couple of things in the portfolio. Maybe we'll put on a couple of new trades, and then we will see where the wind blows us from that point. I see you guys already in the chat putting in a little extra work, a little early work. Usually around this time, you're mixing the banana natty, which is a pretty simple job to mix. It's just banana daiquiri mix and then a little natty light ice to go into that guy. So it's usually a pretty simple task. But around this time, you're kind of getting ready. Like you're getting the electrolytes ready. You're getting the ghost ready, and you're getting the banana natty all ready to go. And so if you are already here, that is a power move indeed. So looking at the portfolio, if we go, let's do PayPal. Let's do PayPal. Oh, you know what's? Oh, I forgot to bring it in. Oh my gosh, this is too funny. You know what we're gonna do? Here's what we're gonna do. This is an extra long show, right? So are you guys ready? So watch. We're gonna do this live on the show. This is gonna be so much fun. So Ben, this is how we do it, man. So I'm gonna text my wife. Hey, can you bring? Because we got extra time today, right? Can you bring that Christmas card in here right now? So my wife, she probably doesn't know I'm on air. So this is great. I told her earlier that I've got to go on a little bit early. She probably doesn't remember. So I just texted her because the Christmas card, you know how we did that yesterday? I mean, that was the most important content from yesterday's show. The plot thickens. Do you guys remember when I pulled it up and we did all of our deductive reasoning, like, hey, who did this card and which child was it from or whatever? I need to tell you guys the rest of the story, but I need the card to do that. So I'm going to see if my wife writes me back, and then she may actually be on air today. And so that would be so funny. So we'll see if she writes back. But while we're waiting for that, let's look at PayPal. So yeah, we sold the put, and was there ever a doubt? Like, was there ever a doubt? Look at this guy marking it 10 cents. We sold it for $1.76. And so, again, you're doing something in the front week. You're doing something kind of short term. I mean, it may work. It may not work. And so obviously it could go either way. But PayPal up 241 today. That is pretty good. That is pretty good indeed. So I think we don't really need to, do we need to belabor the point anymore? I don't think we do. I mean, we could maybe labor it. I don't know that we have to belabor it. But, PayPal, you sell a put and the market goes up. It's a pretty easy trade, right? Like you sell a put and things work out, like it's a pretty straightforward trade. I mean, even I can't really mess up that trade. And if I stay in this trade too much longer, I'm going to find a way. I'm going to find a way to snatch defeat out of the jaws of victory. So let's go ahead and let's close out of PayPal. Let's see here. If I close out of PayPal, 11 cents. All right, that's fine. Okay, perfect. So we're out of PayPal. All right, awesome. And of course, Autumn is not texting me back. She's usually good about, 30, 35 seconds on the response times. But now the one time in 17 years of marriage when I really need her, like urgently, she's probably napping on the couch, man. She's probably midway through a Netflix binge, middle of the day on a Tuesday. Yeah, it's crazy stuff, man. All right, so PayPal, so we did it. It's over. It's done with. What about this other stock? Novartis. Who did Novartis? Let me see here. Novartis. Where are my receipts at? I got to come up with a better system. That was, no, I got it. No, I don't got it. Was that Sam L? I think that was Sam L, right? Novartis, Sam L. You got to be here, right? Sam L in the house? Yeah, Sam L's in the house. Man, I appreciate you there, Sam L. I don't appreciate this Novartis trade, but thankfully we've got 100 shares and it could be worse. And this is one of the things about these low price stocks, these low basis stocks, right? It's like, hey, if it doesn't work, And this isn't even that bad. It went down $1.50, whatever, it doesn't matter. But, if it doesn't work, even if it goes down to zero, right, which is essentially a worst case scenario, when the stock's only at $10, you can only fall so far. When the stock's only at $5 or $6, like you can only go down so much. And so that's a really positive thing when it comes to, Novartis. And we're down $1.45 today, but it absolutely could be worse. And so if I go in here to Novartis, we'll give it an extra couple days. This is not going to be a longer term holding. This is not going to be something that I want to do for the long term. This is not going to turn into a Starbucks deal. This is not going to turn into, something that we are trying to hold for like the long term. I'm kind of thinking, let's give this guy a shot. Let's see if we can get this guy to bounce the next couple of days. And then we'll probably go ahead and just say our goodbyes. Just go ahead and say, all right, that's it for Novartis. Like we are done and dusted. And that guy's going to be over. So that's Novartis. There's a little commentary around that guy. And then going on down the rest. Oh, IBM. Oh, you know what's funny? I'm actually still getting used to trading in the morning and then trading in the afternoon. That's very new, obviously. It's only been about a week or two. And so I actually have not pushed this trade out yet. So I'll push it out when I get done with the show now. And I'll go ahead and you guys will see this on the follow page. This was the trade from inside the trade this morning. And this was the put that I sold for IBM. And so if you want to hear all my thoughts around this trade specifically, you can obviously check out the morning show it was at 10 o'clock Eastern. It's right there in the archives. And so I sold this guy for $665. And the nice thing about this trade is I may have multiple nice things about it. I might be a little bit biased since it is my trade, but the IV rank of 50.5, even after earnings, after, a situation where the binary event has already come out, it's kind of nice to be able to step in there afterwards and still get decent IV. Like step in there afterwards and still get a decent IV rank. That's really, really, really nice. And so for IBM, this was the trade that we did this morning. And so that was from inside the trade. And then the other trades that we have on, hey, how about ZB? Isn't that an Ash Finn special? I think it is. That is an Ash Finn special, man. I see you guys in the house, man. Nice job, guys. BBB Fine, Ryan LP. Man, Rets Media is here. E-Media is here. N1C, Ash Finn is in the house. Man, I appreciate you guys so very much. So let's go ahead and our Ash Finn special here, this ZB trade. I don't know there, Ash. I mean, obviously, you've got your trade. I've got my trade, right? They just happen to coincide. We are not necessarily synced up in any official way on this trade. You did your analysis. I did my analysis. They happen to potentially converge at certain points. But when I go to ZB, I don't know, man. I'm kind of thinking here that, what if we just take the trade off? I mean, we're already up, a couple $100 on the trade. That's pretty solid. I mean, I would only be looking for another 4 half a ticks out of this guy. And so we could stick around and, it'll probably work out just from a probabilistic standpoint. But just in case things turn around and we happen to lose the U.S.-Iran war again and or win the U.S.-Iran war again, I kind of think right now we just close it down. We're getting close to 21 days to go. I mean, everything really kind of checks out here to just close this trade down. Now, we took a little bit of heat early on in the trade's life, but it's bounced back nicely. And so I'm very, very happy, very happy with that. And so let's go ahead and let's see. If I go ahead and close out of this position, let's see here. All right, so we're out of ZB. Okay, so ZB is over and done with. So we did PayPal, we closed it. We did ZB, we closed it. And man, is there anything else in the portfolio that needs our attention right now? I don't think so. Oh my gosh, look at IBM. I didn't even see this. Wow, look at this. We're already up 235. Wow. Are we going to just close it? Man, I'm kind of thinking we just close it. So guys, hold on. Again, we got plenty of time. Autumn's clearly, she's not around. Like I have no idea what she's doing. So this may not happen. But I tried, man. I tried. You guys remember when she called? And I tried to put her on the mic, but I didn't have my speakerphone, so it didn't work. I'm trying to get better. I'm trying to improve. Never forget that I'm trying to do all that I can to give you guys what you need to become better traders. And the Christmas card story, man, you need it. I know that you need it, so I'm trying. But this morning we did IBM, and now it's actually already up a couple $100. And so do we keep holding the risk? I mean, wait, didn't we do this? Hold on a second. We actually did this for IBM earnings. We did this for IBM earning. Oh, didn't want to show you guys that, but that's okay. You guys can see that your boy's doing okay. We did IBM earnings. Let me go to the activity tab. Let me go to IBM because we did this for earnings where we did it in the morning and then it paid off and we took it off in the afternoon. Yeah, look at that. 722. There you go. 1012, 237, right? Beautiful. Look at that. We bought it for 208. We sold it for 245. I mean, we picked up, that was like 30 cents. Now we're actually looking at some real money, right? It's like, man, I mean, $1 here, $1 there. The next thing you know, you're talking about real money, right? And so it's like, I don't know, man, maybe we take out this IBM trade right now. And then I would feel a little bit bad that I didn't push it out this morning because, it's almost like neither trade exists in any capacity. But I really think we don't have to worry about PDT. We don't have to worry about all that stuff. Man, this whole morning into the afternoon situation is pretty nice. And, we'll talk about this in a second. I think the autumn project is just not going to work. And so that is very, very frustrating. But let's go ahead. I mean, she could be caring for our children. It's possible that she could be schooling the children right now. It's possible, right? She could also be watching a little Gilmore Girls. That's also very possible. And so when I think about what she might be doing, it's a number of things right now. But if I go ahead and I close out of this IBM trade, I don't think she ever seen a single episode of Gilmore Girls. To be fair to her, I don't want to completely misrepresent her position. I misrepresent it most of the time. I don't think she's ever seen that show actually. But yeah, let's close this guy down. And then I don't know if I'm going to go ahead and push them out. I guess I'll push them both out on the follow page. So my apologies to the Inside the Trade audience. You saw the trade this morning, but you didn't see it come through the follow page. Now you're going to see, the beginning and the end. Like now you're going to see the alpha and the omega. And yeah, so there's the IBM trade. That's pretty cool. I mean, a couple $100 out of IBM. That's pretty solid indeed. And so, all right, so we did IBM, we did PayPal, we did ZB. What else? What else do we need to do here? Do we need to do anything else before we kind of scout out some new trades? Oh, well, here's the thing I want to talk about. And so, let's see. I see you guys, man. You guys are putting in some work. Nice job. So I talked about this on the calculated risk that I just recorded a little while ago. You'll know it when you see this blue shirt. Now, when you see this blue shirt, as we learned this morning on Inside the Trade, it could be me, it could be Jermal. Like we get mistaken for one another on a fairly regular basis. And when we're wearing the exact same hex code blue, that makes it even trickier. Like I understand that. But if you see me wearing this blue shirt earlier today and it comes out, it should come out tonight probably, or maybe it'll come out in the morning. I don't know what the production team will do with that. But it was all about how to play FOMC tomorrow. It was all about like how to use the Dr. Jim tried and true Betty Crocker recipe of the expected move butterfly for this event. So let's actually talk through that a little bit live here on From Theory to Practice. Now, just because we're having this discussion now, when the show is released later on Calculated Risk, should you still watch it? Yes, you should. Why should you still watch it? Because your boy needs that watch time. It's very, very simple, very, very straightforward. But for SPX here, we've got an overnight play basically, right? Now, I might actually save this. Man, I'm going to get so much out of this. I'm going to get so much juice out of this SPX situation. I got a calculated risk recorded. I'm going to get 7 to 27 minutes of content on From Theory to Practice that has just now begun. And then I think I'm actually going to save the actual execution of the trade for Inside the Trade tomorrow. And so we are going to hit this guy not once, not twice, but thrice. And that's how we're going to do it. So when it comes to FOMC though, you guys know, love playing the binary events. I like using broad market exposure for a binary event like an FOMC because it is very broad market based. I mean, you could go in with something that's single stock if you wanted to. You could do a Tesla. I'm not even sure they're still in business actually, but you could do, the artist formerly known as Tesla. You could do a little SpaceX. You could do whatever you want to do. Of course, it's always going to be your call at the end of the day. But with something that is so, macro, so kind of market wide when it comes to like an FOMC, it's like whatever tie color he chooses, it's going to affect us all. Like there's going to be nowhere to hide. And so I kind of want to be in it with something like an S&P 500, something like a NASDAQ, something like a Russell 2000, something like, the boomers potentially. So I like using the broad-based indexes for, kind of these FOMCs and a CPI and an NFP or something like that. And so choosing SPX makes a lot of sense for that reason. But then also, secondly, it is cash settled, right? So I don't have to worry about taking assignment. I don't have to worry about, running that guy to the end. I'm getting into the chaos going into the close. And it's like, man, I really want to hold this because it's either working and I want it to work more, or it's not working and I want it to work. Like, obviously you can argue that from both sides of the fence, but it's nice to not have to worry about assignment where it's like, I have to close this guy before 4 o'clock Eastern, 3 o'clock Central, or I'm going to take assignment. Like, that's obviously a little bit tricky when it comes to, dealing with, stocks or products that are going to potentially expire in the money. And now you're taking some type of share or future position, depending on the underlying option. But with SPX, with it being cash settled, it just settles to P&L. So I'm thinking, when you're setting up a butterfly, it might look something like this. Like, you've got the index right here at 74.29. And if I set this guy up, if I buy a 74.25, and if I go all the way to the expected move, 73.75, and then 73.25, that is a good looking trade, man. Like, let me clear away that random magenta oval there on the top. This is a really nice looking trade. Now, it's a little bit large. Like, it's a little bit long in the tooth from a position sizing standpoint, but it's not out of the question, right? This is about 2% of the account, definitely reasonable in my opinion when it comes to defined risk position sizing. But when it comes to binary events just writ large, it also can make a ton of sense to go ahead and shrink down your position sizing even more. So rather than 1% to 3%, maybe you're, 1% to 2%, or 0.5% to 2%, or 0.5% to 1%. If you've got, it all depends on how big your account is, of course. If you've got 10 or 15 or 20,000, there's only so much you can do. There's only so small you can get. But once you get to like 35, 40, 50, 75, 100 and beyond, of course, you can effectively get as small as you want while maintaining some level of economic significance, which is really, really nice. And so when it comes to this position specifically, I like the way this sets up. I'll probably want to reduce the sizing a little bit, just in case it doesn't work. So what if we did, and again, right, we're not signing on any dotted lines. We are just window shopping at this point. If I buy a 74.20, I sell the 73.70, and then I buy a 73.20, that's even a little bit less costly. So now it's only $6.75, which is nice. So 74.20, 73.7. Oh, she wrote me back. Hold on. Yes. Come out here. She said, oh, sorry. Do you still want it? Yes, come out here. And this is a family show, by the way, in case you were thinking other thoughts. She says I'm going to have a kid come. Wow. So it's actually not going to be my wife. It's going to be one of my children. So I don't know who it's going to be. So anyway, I have no idea who it's going to be. It could be Penelope. It could be Eli. It could be Amelia. You guys are going to get to say hello to one of my children. And since we have so much time today, this is the perfect time for this. So I have to listen for the knock on the door because, this is so amazing. We'll get back to the SPX trade in just a second. And so, but I do like the fact that we've been able to narrow down the width of the spread. That was just funny reading that text. Do you still want it? Yes, come out here. That's just really, really funny. And so, okay. Oh, Eli's coming. Oh, that's cool. You guys are going to get to say hello to Eli. And so that's really, really awesome. Okay. Awesome. Perfect. Okay, I don't think he can open that. My door's a little janky, so he's not going to be able to open it. I'm going to have to help him open it. But we'll get back to this trade here in a second. But I do like the fact that we moved it out a little bit, and so the debit on the strategy has gone down a little bit, and so that is really, really good. And so, here we go. Give me 1 second. Hey man, come in for a second. You want to say hi to everybody? You don't? Oh, okay. Okay, so we're back. So I got it. I saw Adam Monfield. It was the Ninja. He didn't want it. He got nervous. I kind of sprung it on him. He wasn't ready. He got nervous. He was like, I'm going to be on air. I said, yeah. He's like, I don't want to be on air. So I got to cut him some slack there, obviously. I wish it was Autumn because I would have made her come on air. But okay. And so, I love the fact that they cut to the empty chair there. Okay, so we'll get back to SPX. Oh, by the way, if you're brand new to the show, this is an authentic From Theory to Practice experience. We are off the reservation from the first minute, and we rarely return. So we talked about this. So we talked about this card yesterday, right? So this was a card I've had on my desk since last Christmas, because it's obviously a Christmas tree, and it says Merry Christmas, Dad. Okay, so what did we conclude yesterday? We used a little calendar math, we used a little logic, we used a little bit of deductive reasoning, and we concluded that this card can't be from Amelia because the writing is so good, right? And she was 5 at the time. So then it was like, well, was it Penelope or Eli? And I thought it was Eli. So when we were having dinner last night, I was like, hey, we were talking to the kids about our days and whatever. I told them about the Christmas card story. And so we actually pieced it together. We all pieced it together. And you know what the actual answer is? We could not have been more wrong. The picture was drawn by Amelia. The picture was drawn by Amelia May, our intern, our assistant. She does all my trading analysis for me. But she obviously was 5. She couldn't write these sentences. And so Penelope wrote the sentences for her that said, Merry Christmas, Dad. And so I thought it was from Eli. Eli literally had no part in this card whatsoever. And so I just wanted to make sure that you guys knew the end to that story, because I know when you woke up this morning, it was burning through your skull. You were like, what should I trade today? What looks good in the market? And I really need to know who made that Christmas card for Dr. Jim last Christmas. But anyway, I digress. And so, all right, so that was a little fun. That was maybe a good use of our time. And by good, I mean, it was around a C+, maybe a B-. And so, all right, buying power effect here, 675. And let's see. If I go ahead and narrow my strikes now. So I've done a good job with this trade. So now let's get back on track. I've done a good job with the trade. I pushed it out a little bit. And I've gone ahead and reduced my debit by a wee little bit. Okay, what's another thing that I can do to reduce that debit? Well, I can narrow up the strikes, right? Right now, this is $50 wide. And so that's really nice from a, risk return standpoint. But if I kind of want to get this guy down around $5, then you've got to give away some advantages somewhere, right? Like you've got to be willing to, absorb some gotcha somewhere if you want the gimme of an even lower debit. Like if I want the gimme of a lower maximum loss, then I have to be willing to absorb some additional gotcha. And one of the gotchas with a butterfly is a more narrow spread. The more narrow the spread, the harder it's going to be to thread that needle and kind of get it where you're trying to take it. And so, one of the things we could do is, what if we just went to like a 40-point wide butterfly? So if I did a 40-point wide butterfly here, where I'm 73.30 and I'm 74.10. I mean, now, this looks really, really nice, right? 74.10, 73.30, 73. I'm sorry, let me start again. 74.10, 73.30 for $4 and about 25 to 35 cents. We would see where we would get filled. I like this trade a lot. The only thing I don't love about it is 40 points wide may seem like a lot, and it kind of is in an absolute sense. But when you're dealing with SPX, which is a $7,000 product, 40 points can happen in the blink of an eye, right? Like once he walks out to the podium and we all know, wow, he actually did it. He went for a screen. Like, wow, he actually did it. That looks like it might be magenta, right? When we learn that information, that's going to change the financial trajectory of the global marketplace instantaneously, right? And so because of that, the 40 points in the SPX, I mean, it could go in the blink of an eye. And so I really like the way this trade is setting up, and I'm not going to do it now, of course, right? You guys have to watch Inside the Trade tomorrow for that information. So that is SPX. Those are my SPX thoughts. And then of course, tomorrow we have some heavy hitters coming on down the chutes. I mean, it's everybody, man. It's Chipotle, Starbucks, Meta, Microsoft. That's pretty much the entire market. These are the 4 horsemen of the apocalypse, and they're riding in tomorrow morning at dawn. And so Chipotle, Starbucks, Meta, Microsoft, I have a feeling I'll be doing 1 or 2 of these on Inside the Trade, and then maybe 1 or 2 of these for From Theory to Practice, and maybe some intraday scalping, which apparently we're doing now, which is kind of fun. And so Chipotle, Starbucks, Meta, Microsoft, and there you go. So, all right, so there is a little bit of commentary for you guys. Other than that, is there anything else we could do from a position opening standpoint? I don't want to jump out of my shoes here I don't want to be like a Sadon Raphael with the grand slam last night to take the game against the Athletics. That's 11 in a row on the road, I believe. That's some pretty impressive stuff. If we look at these individual stocks here, you can see there's a lot of earnings coming up. You've got earnings and these individual names. You've got a few indexes like an EEM. You've got this guy. I think we already have a position on an EEM, which is really nice because you look at the, like you're on the positions or the watch list, I should say. And you can see that just by looking at a little silver dot right here, you can see that that's going to tell you that you have a position on in there. Right? Like EEM, we have a position on. Snapchat, we have a position on, obviously. Right? That is the thing that we're hinging our financial future on. XLE, we have a position on. And so the little silver dot is really, really nice when it comes to understanding what you're up against. And so, all right, so let's go ahead though. Let's see. Is there anything to do here that's not associated with earnings? I don't know that there is. I mean, EWW. I mean, we've tried to do this before, right? The markets are just not that great, if I remember correctly. Yeah, look at that, man. Look at these markets. 77. Look at your at the money options. I mean, look at that, man. Look at that. Look at it. That is bad. That is BAD. I'm not touching that market. And so until Mexico gets their act together, right? I think, didn't they get knocked out in the quarterfinals or the round of 16? I can't remember if it was 16 or 8. And so it's like, man, can't do it in the World Cup. Can't do it with the bid-ask spread differentials. It's like, yeah, man, they got to do some things over there to kind of get back on an upswing. But EWW, not going to do anything with that. And then, yeah, I mean, Amazon's got stuff coming up. We just did IBM, obviously. XLU, EWZ. Now, I think I'm good. I mean, we got our Christmas card back, and that was kind of fun. We did a couple of trades. We did IBM closing trade. We did a PayPal closing trade. We did, what else did we do? We did one more, right? I think, let me go to my activity tab. I think, we did a ZB closing trade. And so there you go. So that's pretty solid. Let me see where you guys are at, though, man. I see you guys in the house. Man, I'm going to surprise and delight somebody at the very, very, very end. Man, look at away from the numbers. Man, let's go. What is going on there away from the numbers? I think I might owe you an email from like a week or 2 weeks. And so my apologies. But sometimes they slip through the cracks, man. I try to be as quick as I can, but sometimes they slip through the cracks and I get hit from so many different directions. If it falls out the first page, then it's kind of like a Google search, man, which nobody uses Google anymore, obviously. But when my AI agent goes to Google to find something, even he's like second page. I'm not looking at that. And so I apologize for not getting to your email, Neil, but send it to me again. If you send it to me again, it'll be right there at the top and I'll get back to you. But away from the numbers says, Dr. J, for earnings trades, do you prefer to go short term, 3 to 8 days, or would you consider longer term, eyeing a return to CMG? Oof. A short put at 32.5, 24 days to go. Also, Roblox, a calendar, 55-21, August, September, the August, September. Is Roblox tonight? Or are they tomorrow? Roblox. Okay, so that's later this week. That's gonna be Thursday. So a couple of things. So number one, I'll do both. So the 3 to 8 days, very short term, or something that's maybe more regular, like, anywhere between 30 and 60, 45 kind of being, a nice sweet spot in that range. I will do both. It all depends on my goal and my intention with the trade. If I'm doing something where I want a quick turnaround and it's more well suited for shorter duration, like a butterfly is, then I'm going to choose that front week. I'm going to choose something that oftentimes only has a few days to expiration. If I'm choosing something that's more like a quote unquote regular trade, like a short put, like a short strangle, even like a vertical spread, what have you, then a lot of times I will just be using the earnings day as a bit of a catalyst into kind of a regular trade to give me a little bit of a volatility crush, give me a little bit of a push in the right direction. And I really like using that as a little bit of a nudge and a catalyst into, my premium selling and my decay collection efforts when it comes to just regular trades. And so it all depends on my objective with the trade. So I think about what I want to do with the trade, kind of like bird's eye view, like high level. What is my goal? Then I go one level down and I start thinking about what type of strategy I want to deploy. And then because of those two things, when I put those two pieces together in the puzzle, then I start to think, okay, what type of expiration is going to make the most sense for this trade? Case in point, tomorrow for FOMC, SPX butterfly, or really any trade that you want to make for FOMC, in my opinion, if I want a quick turnaround on that, I'm not going to do something 45 days out. That's going to be way too slow. That's not necessarily going to jive with what I want to do. Since I want to trade FOMC just for the sake of trading FOMC, then something like a butterfly and SPX having the daily expirations is really, really nice. And so that's kind of how I begin to think about the expiration cycle selection when it comes to short term versus longer term. And then you were setting up a Roblox calendar. I mean, I think that would be, the August 21 and then the August, September. I mean, that's a classic calendar setup. I mean, if you go to the trade page here, you're going to see, August is 24 days, September is 52 days, and you got your classic 1:2 ratio. Like generally speaking, I mean, there's so many different ways that you can set up a calendar. You can do super short-term guides with like 2 days and 10 days. I haven't done a ton of those, but I understand kind of the goal of what you're trying to do there. But the more classic standard Betty Crocker approach to a calendar spread is going to be a 1:2 ratio between the days to expiration, front month and back month. So your front month is typically half the length of your back month, give or take. It doesn't have to be precise. Right now, August and September set up really nicely for that end objective. And so hopefully that helps you there, Neil. But remind me about Roblox on Thursday because once again, the content is not going to make itself. And sorry, so let's see here. Let's go ahead and can we go ahead and can we grab somebody in the beginning? I mean, I think we can. Let's go all the way back to the beginning. Man, there's N1C. What is going on, my friend? Brian Rackerton is here. More Dr. Jim. I have mixed feelings about this. Oh, you absolutely should have mixed feelings about this. Very similar to how a banana mixes with a natty, right? You should have very, very mixed feelings about this. And so again, right? I've said this many times before, but there's only so much Dr. Jim that anyone should be consuming in a 24-hour period. And we are dangerously close to that line. And so, man, be careful. Be careful what you wish for. And now I know why Autumn took so long to write me back. Because, she gets it 24/7. She gets it 25/8. And she didn't necessarily ask for it. She didn't ask for it at all. If I go to, let's see, Ash Finn is in the house. What's going on? Let's go. Even if I'm evicted from the core position. Yeah, Ash, we've got to review your case. Ash Finn, I mean, if you guys saw my Twitter feed, you guys saw that good friend Stella, right? Good friend of the family, big fan of the show, been a fan of the show for a long time. I met Stella multiple times at events. Stella's amazing. Stella said that she was recently at a conference or some get-together with, these are the most brilliant minds in finance, right? So a Dr. Jim would never be invited, right? A Chris Vecchio would never be invited. These are the actual powerhouse brains in the world of finance. In that room, she said that one of the people, speakers, panelists, judges, whatever it was, said when they were referring to the ticker that we all know well and love, NVDA. They were talking about this stock and giving their analysis, giving their thoughts and their 2 cents and what have you. And they said, yeah, I really think NVIDIA, blah, 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 blah. I'm pretty convinced that NVIDIA, blah, 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 blah. And she tweeted about this, and she was obviously sure to tag me in that tweet because I'm like, this is the greatest thing I've heard the entire week, without question. Like, the world is healing. We are making a change. We are making a difference, guys. If you ever feel like, man, I'm not making a difference. Like, I'm not getting through to people. Like, they're not listening. My friends don't want to hear about selling premium. My friends don't want to hear about high probability. My friends don't want to hear about, no, don't worry about it. Don't worry about it. We are making a difference in the far reaches of the world that we don't even necessarily know exist, right? I mean, she was at some panel in Spain or something, right? Some just country that people don't typically think about, Spain, right? And we're making an impact. We are absolutely making an impact. And yeah, that story definitely ran its course. But thank you there, Ash Finn. We should get back to you within 5 to 7 business days. So N1C is in the house. What is going on? There's Ranch in the house. Howdy, Ranch. Howdy, Doc. What's up? Wolf is here. Doc, since you are back to keeping receipts, I gave you the Netflix in the money put. Oh, you did. And you owned up to it. I'm there with you. Let's make it as profitable as the SPUX trade. Yeah, maybe, man. I don't know. You know, I mean, when it comes to Netflix, yeah, you know, I mean, we've got this in the money put, and yeah, it's gonna be tricky. It's gonna be tricky. But we just have the shares now, right? And so I think you mean you gave me this guy. I'm still getting used to the fact that they're shares now, and they're not just, you know, a deep in the money put. It's still, I mean, obviously the Netflix pop today is really, really nice. And so that is certainly helping the cause, and it's obviously helping the portfolio in a somewhat significant way, which is nice. But we're still a little bit too low for to consider a selling premium, in my opinion. Right, still a little bit on the low side when it comes to, you know, maybe selling some calls against this guy at this point. So I'm not really going to do anything just yet. I'm going to sit tight. Obviously, you've got to make up your own mind and make your own decision here. But I'm going to sit tight, and yeah. So for Netflix. I appreciate you there, Wolf. I appreciate you very, very much, my friend. And we will see. We will see what happens. N1C is here. What is up there, N1C? Again, Marin is here. Dr. Jim hitting us with a full hour. I am indeed. It feels like we just got started and we're almost done. Like, that's crazy. Even for the full hour, it's like, man, we've got 20 minutes to go. Man, that's really, it goes so fast. Wow. Weiss, Dr. Jim for an hour. That's like a third of an Odyssey. I know. I haven't seen it yet. Is it worth the watch? I mean, I've seen the Rotten Tomatoes, but come on, guys. Can you trust Rotten Tomatoes? Like, really? I mean, I haven't seen the audience score on Rotten Tomatoes. I've seen the critics score, which is 98, 99%, whatever. But those guys are all in cahoots. It's all a bunch of kickbacks and whatever, you know, payment for order flow, payment for movie ratings, whatever it might be, right? And so I need the audience ratings. I don't really give a rip about what the critics have to say because they're not us. Right? They're the elitists, right? They're sitting up in the ivory tower. I got to hear from the common man. I got to hear from my people. And so yeah, let me know though. I want to hear from you guys. Is it worth the watch? Because that's a pretty big investment, man. With 3 small kids, we started watching Project Hail Mary. We're about halfway through and we're 2 weeks into it. And so don't tell me what happens. Do not. I'm serious. If you tell me what happens, because I will scan the chat after, I want no spoilers. If you tell me what happens, you will be blocked from the channel forever. Ben will make it happen. Roberta will make it happen. It has to be done. I do not want to know what happens because we're about halfway through. And obviously, it's already starting to tug on my heartstrings a little bit. And I'm like, all right, does he get back? Does he not? Does he just stay with the alien, Rocky, up by Tau Ceti or whatever? I'm like, I don't know. I want to know. But I won't know for another 5 to 6 weeks. And so do not spoil this for me in the chat. But yeah, let me know about Odyssey too, because I got to know. I mean, you guys got to tell me, man, because I have no idea. Christopher Springer is here. Yo again, Doc, you buying that SPX yet? Going to 300. I'm already in SPX like multiple times, man. Like I'm in this thing all over the place. Like I've got strangles, I've got short put spreads, and so I don't have straight shares or anything. But yeah, we got all kinds of SPCX exposure, and so yeah. Let's see. BBB Fine is here. Hey, Dr. Jim, extra long show. I love it, man. I appreciate you loving. I appreciate you very, very much. Thank you for being here and being a part of the network and all that kind of stuff. And I appreciate you guys, man. I appreciate you guys so very much. Don't ever forget, we got to stick together, man. We got to do this together. And I appreciate you guys. Laura's is in the house. Dr. J, full hour, solid offering from Tasty today. I agree, man. The effort is top notch. I mean, the effort for the network, A+. The effort for Dr. Jim, right there at about that 81% level. As for Dr. J, we're going to sell a put for SoFi earnings? SoFi earnings? Oh, man, I don't know. SoFi earnings. Oh, man, are they tomorrow? SoFi is like, wow, they're in the morning. They're in the morning. $16 stock. They have a bunch of premium though, right? I mean, maybe not in the 3-day cycle, but if I do like a September. Yeah, I mean, the at the money strike is $1.20. Man, I don't know. I think I'm going to pass just because there's so many things happening over the course of, the next couple of days. I mean, the next 24 hours, there are so many things happening. And so because of that, I think I'm going to pass. I think I'm going to sit tight. I'm not going to do anything. And we're going to wait this guy out. I mean, SoFi, I know SoFi is kind of like an internet darling, is it not? Like SoFi is kind of like, it's kind of in that GameStop type of category a little bit, kind of in that AMC category from a few years ago. And so people get really fired up about SoFi, man. They get super fired up about it. Like if I go to the chart, of SoFi. Is that a daily chart? I mean, that's got to be, oh, excuse me. That's got to be a daily chart. Let me do, like if I do like a 1 year daily, excuse me. If I go all the way back. Okay. So this guy was up around 32 and now it's at 16. I mean, you don't typically see things that are this bullish, but yeah, that's quite, that's quite a ride. I mean, that is quite a ride indeed. And so, yeah, SoFi at 32, you got it down to 16. Yeah, I'm going to pass right now, but good luck to you, my friend. Like, good luck to you with whatever you decide to do there. But there's too many things happening for me right now, with SPX and, you know, the other things going on. And then all the things that are going to happen tomorrow with, you know, Metas and Microsofts and whatever. And what's crazy too, is, I mean, I'm pretty sure tomorrow's show is 2:30, like normal. And so if that's the case, I mean, as soon as we are live, then we have all the information we need to make good, solid, sound financial decisions. Like, we'll know it was navy blue again. Like, we'll know he actually went charcoal gray, which is a bit of an innocent move on his part, but it could happen. It could absolutely happen. And so let's see. Sam L is here. What is going on? Dr. Jim in the house. What is up, my friend? Yeah, Nevada's had great earnings, but it still couldn't resist the fade doc strategy. The magnetic pull, the gravitational effect of the fade doc strategy, it should never be discounted. I guess we're officially long-term investors with those shares now. Didn't play it that way, but here we are. I mean, that's the way it goes, man. When you inventory some shares, that's just the way that it goes. Doc, for the morning show, we need a new segment. What's your breakfast today? I agree. And then BBB Fine says, you work from a man shed. No, it's not a man shed. So actually, I mean, we moved down here in 2020. So we moved down here in July 2020. So that's crazy. We've been down here for 6 years. It feels like we just moved down here. I mean, COVID hit. I was in Chicago. Like, I loved it, going to HQ every day. Like, it was amazing. But COVID hit and it shook up the entire world. Like, nobody knew what was going to happen. So we were all scattered and we were all remote. And Autumn had been wanting to relocate to Florida basically since we got married, because her mom lives down here and, you know, they have a great relationship and all that stuff, right? And so I was like, yeah, that would be amazing. But, you know, the Lord took us to Charlotte so I could teach, and then to Chicago for Tasty. But then when COVID hit, we had a chance to come down here because nobody knew if we'd ever even go back into the studio. So when we actually did move down here, I told Autumn, I said, hey, listen, like, I really want to make sure that my content continues to be, you know, super high quality, top notch. So I want to build a little studio in the backyard. And so there was nothing back here. There was actually a bamboo garden back here. We ripped out the bamboo garden, and then I kept ripping out bamboo shoots for the next 36 months. And they would just spring up like out of nowhere. I'm like, man, I thought I killed you back in 6 hours, man. It was crazy. But we built the studio back here, and I'm really glad that I did, because you know, I think it's a decent little setup. I think it gives you guys a decent little end product. And yes, I would like to think it's more than a man shed, but maybe it's not. I don't know. Anyone see Surprise and Delight the Wife, and then the Omaha? Yes. Yes, not that way at all, of course, because this is a family show. Ryan, Dr. Down in the Basement thought maybe he was an office guy. Nope, I'm not down in the basement either, man. I am in a standalone unit in the backyard. And so it's really, really great. I got AC back here. I got electrical. I got internet. I got internet hardwired in. I had a guy come out. He dug a trench in my actual backyard, and I have a cable running down so that I have actual Ethernet hardwired in, which hopefully gives me more reliable internet. And it has, for the most part, I think, been okay. Sam L is here. He's guilty. Reds Media here. We're going to get an hour of Dr. Jim today. Wow, that's correct. That is correct. I feel like we should all take tomorrow off after this. Ryan LP is here. What is up? Christopher Springer, time to start selling some calls. Ryan LP, Nevadas. Did you mean Nvidias? I think maybe you did. Let's see. E-Media, never mind. Ignore me. I'm still watching segments before this. Getting caught up, my friend. Okay, so that's how you do it. Let's see. N1C, IBM has dividends in a couple of weeks. Care if sell any calls? Yes. So if IBM, okay, so a couple of things about dividend risk. So yeah, there it is right there on August 10th. So yeah, it's in a couple of weeks. So here's what you need to be aware of. So I don't know, it might tell us what the dividend is expected to be. No, it's telling us, oh wait, no, that's right. It's going to be $1.69. So that's really nice, because that gives you a very, very clear picture of what to assess and how to assess what your assignment risk is for any calls that you might be holding. Okay, so first of all, This is only going to apply to in the money calls. This is not going to apply to out of the money calls because the long side of the contract is only going to be interested 999 times out of 1,000 is only going to be interested in exercising the call option if it's in the money. If it's out of the money, if he exercises the call option, then he loses out on the difference between, the strike price and the stock price. Like, for example, like here, let me give you guys a really concrete example. Like if I open up this August cycle with 24 days to go, right? And let's say that I own this 230 call, right? I own this call right now. And I'm considering exercising this call so that I can pick up that dividend on August 10th. Now, obviously, there's a lot of things wrong with this example. It's too far away, but hopefully I can make the point that I want to make. I'm considering exercising this call. It's out of the money. Should I do it? No. There's really no scenario I could think of where it would make sense to exercise this call. Now, there will be times when you're short and out of the money call and it may get exercised. But again, that's not a bad thing for you. That's actually a great thing for you. Because look at what happens. If I exercise this call, when it's out of the money, I am going to buy shares for 230. So let's grab our Glacier Freeze. I'm going to buy my shares here, right? And they're only worth 228. So I'm buying shares at 230 and they're only worth 228. And so I'm actually already taking a $2 loss. So it doesn't make sense for me to do that to collect a $1.60 dividend. So again, it only makes sense if the call is in the money, and hopefully that brief little illustration kind of explains why that is the case. But let's say that instead of having the 230 call, I have the 220 call. Well, and again, there are problems with this example because it is so far into the future, but I still think it's gonna get us where we're trying to go. If I take a look at this 220 call, I didn't mean to do that. We got to get it back. If I take a look at this 220 call with an extrinsic value of about $6, let's just call it $6 to make it simple. If I exercise the call, I'm going to buy IBM for 220 and I'll be able to sell it for 228.20. So I would make $8.20. Hopefully you can see it right there. It's $8.20, right? But look at the cost of the actual option right now. Well, the actual option, the cost of the option is much higher than $8.20. It's around $14.20. Well, why is it so much higher? Because it's including all the extrinsic value that is right there. So if I am in an in-the-money call and I'm trying to figure out what's the best move for me economically speaking, should I exercise the option and collect the dividend? Or should I, if I want to just cash out my call, just sell out my call and collect whatever extrinsic value is in the option? Hopefully you guys can clearly see the extrinsic value capture is much more valuable than the dividend capture, right? Because the dividend capture is only $1.86 or whatever we saw there on the overview tab. The extrinsic value capture is $5.87. That's significantly more. And so the thing that can be helpful for you right here, this came in, was this N1C? This was, this was N1C. Great question, by the way. We haven't talked about this in a while. If the extrinsic value in the call that you sell, that's in the money, is greater than the dividend by a pretty obvious amount, then you don't really have to worry too much about assignment. Again, it's always a possibility, but the likelihood is extremely low. If they get really close to each other, it's still probably not going to happen, but it could happen. If the extrinsic value dips underneath the dividend, then you're going to be in a situation where the likelihood of assignment becomes more and more likely, because now it does actually behoove the long side of that contract to exercise and collect that dividend. And so there you go. Hopefully that helps you there, N1C. And And so let's see. Brad Fouts is in the house. What is up, my friend? Sam L, I'm off to enjoy a banana natty drink with some friends in this heat. Man, I appreciate you. Have a great show, guys. Man, I appreciate you so much. I hope the bloops are accurate. They never are. The gotchas are few and the algo behaves, at least for today. Man, I appreciate you, Sam L. Thank you so much, then, my friend. Daniel is here. Hello, Dr. Jim. Today you said that when doing a naked short put, that you can choose a 10 delta or so to accommodate the portfolio limits as long as it is not single digits. Did I understand that well? That is correct. In my opinion, going further down the chain and going further out of the money beyond the 10 delta mark, so that would mean you're going to 8 delta or 6 delta or 4 delta. Your probabilities are growing when you do that, but man, you are just collecting a pittance when you go that far out of the money. And so because of that, I don't really love that trade because you're just not really being rewarded for still taking unlimited risk. And there are like some second level Greeks, like Vama is the one I'm thinking of specifically. And Vama measures how does Vega begin changing when volatility changes. And what people don't quite realize until it smacks them in the mouth, a time or 2 or 9. When you have a volatility event and the VIX, goes up 50% or 80% in a day, volatility is skyrocketing and the market is almost always falling in that scenario. Well, because volatility is accelerating so exponentially to the upside, not only are you getting hurt on the actual movement in volatility, but similar to like a gamma delta relationship, you're actually getting hurt because your sensitivity to volatility is actually getting more and more significant with each increasing point of volatility expansion. Because you are moving down the chain and you're now approaching that strike where you were in this trade to begin with, and that strike already had a pretty high VAMA. And so VAMA is not typically something we need to monitor like on a daily basis or like scalp it or anything like that. But just understanding that the low digit, I should say, options typically have the highest VAMA levels. Yeah, I don't really love it. Now, 10 delta, I think is okay. I think that's reasonable. That kind of gets you out of the VAMA danger zone in a somewhat not insignificant way. And so that's my own personal kind of cutoff point. Do with that information whatever you best see fit. And so, or Daniel, hopefully that helps, my friend. P.E. Leonard is saying, I'll have a banana natty for me. Yes, me too, my friend. Let's see. Christopher Springer is here. Let's see. IBM is already weak. If Warsh does something dumb, are you going to wish you closed that? Well, we already closed it, man. We're done. So I'm not worried about it at all. And I'll tell you what, Warsh isn't going to do anything. He's not going to do anything smart. He's not going to do anything dumb. What he is going to do is he's going to get a committee that's going to be on it, and they're going to report back to us in 6 to 9 weeks. And so that much I do know. Shawshank Redemption is here. Dr. J, what about TLT? What is, what is up? TLT. Don't we have, we have a TLT trade on, don't we? Yeah, we already have something on TLT. I have a diagonal spread, I think. Yeah, so I've already got my diagonal spread on. I'm just going to sit tight on this. I'm not going to do anything extra in TLT. I think we're just going to sit tight. But I appreciate you there, Shawshank Redemption. Away from the numbers. Hey, 1 hour, Dr. J, fantastic, man. I appreciate you so very much. Again, Neil, resend that email, man. I'm sorry that it slipped through the cracks. I think I'm remembering correctly that there was one I never got back to. Let's see. Look at Sample Lampa Damp. What's up there, Sample Lampa Damp? Sample Lampa Damp is here. He's bringing some comments. He's bringing some commentary. He's bringing some trolls. I mean, he's got a mixed bag. So Sample Lampa Damp, we appreciate you, man. Talking about some T2. T2, Take-Two Interactive Software. Looking good into the close. Earnings August 7th. They have earnings on August 7th? That's a Friday. Wow. Well, remind me on August 7th. That's going to be a big day. But I am August 7th. Yeah, Friday before the close. You don't see too many Friday earnings. I mean, you never see it Friday after the close. But even Friday before the close, there's Sample Lampa Damp. Yeah, I'm going to pass for now. Remind me next week though, and maybe we'll take a look at this guy. But yeah, Take-Two Interactive, rip it into the close. Yeah, 1.3% move. I wouldn't personally label that as a rip, but that's what makes a market, man. Like that's 100% what makes a market. And so let's see. PE letter. Nobody goes out of business taking profits, Doc. A couple $100 same day, I would book it. Yeah, I agree, man. I totally agree. And don't let the momentum bros hear you say that because they will rake you over the coals. They will 100% take you out behind the woodshed. And so Adam Armfield is here. I'm surprised she doesn't call fall. Nicely done, my friend. Nicely done. Very nicely done. Notice how she didn't come out. She sent one of her minions. Notice how she did not come out. She sent someone in her place, in her stead. And so let's see. Christopher Springer, I send mine to work. She'd kill me if she saw this. That's pretty funny. Timothy Patrick, are you going to do a Visa earnings trade? What's going on there, Timothy Patrick? I appreciate you so much. I don't recall you having been in the stream before, so welcome to the show. Visa is today. Maybe we will there, Timothy Patrick. Maybe we will. I didn't want to do SoFi earlier because it's a low price stock, and I do have a lot of things going on, but it's hard to find things to do in a low price stock. Visa at $370 is a little bit easier to work with. And we could maybe do a little Tuesday butterfly. Just as a little bit of a warm-up set going into tomorrow. What if I did a little $10 guy? 72.5, 82.5, 92.5. Only $1.87, man. That's nice. I'm actually going to try going a little wider. What if I did 85 and then 90 and then 400? Oh, wait, that's not right. 97. Ooh, I like that trade a lot. We've got the Yankee strikes. We've got a really nice risk return ratio. The overall debit is very low, 247. That's our max loss on the trade. So we are less than 1% on this trade. Man, Timothy Patrick, I appreciate you for the suggestion here. 72.5, 85, 97.5 for 259. Man, I really like it. I really like it a lot. And it might work, it might not work. I mean, who knows what's going to happen here. But yeah, let's go for 259 on the Visa Butterfly. And let's give it a shot. There you go. Got filled right away. So that's a good sign, maybe a bad sign. I don't know. But that's going to be Visa. Are they after the bell today? They are after the bell today. There you go. So there's a little Visa action. Wow, I'm just about done. Man, I'm done. I'm like done. I'm like out of time. Wow, I can't believe it. I see you guys in the house though, man. Man, you guys are here. I appreciate you guys so very much. Man, Flub is here. DMZ is here. Joel James is here. Man, Griffin Jones, Daniel Perkins. Man, I appreciate you. Look at Ray Turn Buell in the house. Ray Turn Buell in the house. Says you 100% can go broke taking too little profits. And I don't necessarily disagree with that there, Ray Turn, but thank you for being a part of the show, man. I appreciate that so very much. And so I got to run, man. I got to run, guys. If I can ever help you guys, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello, Tim Knight, and guess what? You get more of me again. Yeah, it's not. This is not a new permanent schedule or anything like that. But the fact is that the time's available, and I asked for it, and a lot of people seem to like that, and so why not course, by the same token, I guess if the day's going crappy, I should ask for a 90-second show and be excused from it. But it's here's the thing. ES, bright green, up. RTY, green. YM, green, up hundreds and hundreds of points, maybe even a lifetime high close. And I'm having a great day. Totally short. Why is that? How on earth can you be cheery, Mr. Bear, when the market is bright green? Well, I can pick them. I got a lot of good picks. And as I said this morning, if I had more wits about me, I would have recognized not Taco Tuesday, but Taco Monday for what it was, which is just an opportunity to get even shorter. You can only taco once, like I said in yesterday's show. And the thing is that my all short portfolio is heavily concentrated in semiconductors, memory stocks, that kind of thing. And almost everything's down in that area. Now, to be clear, I have taken some profits. And to be clear, I usually take profits way too soon. Like I mentioned yesterday, Seagate, STX, which reports after the close today. I sold my STX puts yesterday for a profit, patted myself on the back for being such a clever young boy, and it collapsed in the triple digits today. And, I'm sure the same will happen with the other stuff I covered. I sold my SMH puts for a good profit. I bet you it's going to be worth a lot more. Example after example. But here's the general theme I want to get across before we dive into the charts. The market has like pockets now of strength and weakness, and what I'm trying to do is scurry across the battlefield to find the places that are the best to short. And so that was semiconductors and memory. And I think that in spite of me continuing to have some positions in that area, I think that it's kind of done for the moment. So what else can you short? Well, there's plenty of other fat pigs out there that are very overpriced. And so I'm doing, it's not sophisticated. It's like, all right, buy SPY puts for January. It's not a particularly elegant idea, but I think it's a pretty good bet that between now and January, the spiders will be a lot lower than they are right now. So simple as can be. That's what I'm doing. So what we're going to do here is thumb through what I think are some interesting symbols. But the point I'm trying to make is that if you can use charts to find opportunities of appealing risk-reward ratios, to find themes, then you can defy the market. And in my particular case, the way I'm constructed, I like to go short. And so even on a day when there's buying going on all over the place, and Tom Lee is again saying the bottom's here, okay, Tom, you can still make money. So let's jump into the charts and look at what's what. We're going to start with the diamonds. The diamonds are up, and they're up strong, 1.21%. And just eyeballing this, it is entirely possible that we are at or near a lifetime high close today. Maybe not. It looks like the lifetime close was right here, but boy, are we close. Now, I have no position in the diamonds. Like I said, I got stopped out of it yesterday and stayed out of it. But what's the next feature in this which might be a trading opportunity? I think this trend line. I think if this thing clambers its way back to the trend line and kisses the underside of it, that would be a lifetime high for one thing. And the administration would brag about it, and it'd be on the headlines of USA Today and things like that. And that would be the time, I think, to get aggressively short. Because, just like in 2000, which was the beginning of a wonderful multi-year bear market, it's not like everything collapsed in March. It was in fits and starts. There were some sectors that were exceptionally strong through the summer, even though the NASDAQ was falling to pieces. Like telecom, I think, was very, very strong. Cisco kept muscling its way higher. But eventually, they all got the memo, and they all fell. Sector by sector, things will break. So the first warning shot we've got is memory and semiconductors, because these things were just on fire, going up hundreds of percent, thousands of percent over the course of a year. And easy come, easy go. We'll look at SanDisk later. SanDisk has lost over half its value in the past few weeks. That's a big deal. So yeah, I'm looking for new victims, and I'm not in diamond yet, but if it kisses that trend line, yeah, I'll be there. EWY, this is an illustration, I think, of why I'm not foaming at the mouth about shorting semi stocks anymore. This poor thing's been beaten to pieces, and could it keep falling? Yes. Thank you for the rhetorical question. Absolutely could, and sometimes these things do. Sometimes it's shocking how high things get. It can be shocking how low things get too. But the profits I've seen, there's only so many times you can have double-digit drops every single day, and at some point you're going to find some buyers, and I'm satisfied. So, like I say, I've lightened up considerably in the realm of semiconductor memory, taking profits where I think it's appropriate. FXI, now this one, I'm so frustrated with this. This has been a real stinker for me. This is China, and it just keeps going higher. And as I've said before, I suppose the narrative here is that China's going to eat America's lunch with respect to AI, because it's almost as good, maybe even better, and much, much, much cheaper. So that's kind of the idea. And maybe I'm a fiscal masochist or something, but I keep tilting at this windmill. And so I'm giving it another go. And I've shorted this in size earlier today with a stop at 36, which is the gap right there, the bottom of that bar. This has been a flop. But I'm not giving up on this. I guess if I get stopped out again, well, knowing me, I'll just short it again. But it's the deeper we get into this pattern, I think the more pernicious or the more recalcitrant it's going to be about letting prices go higher, because there's a lot of overhead supply there, and the sellers are just going to be found. So we'll see. It hasn't broken yet. It just keeps. The only thing I have done to make it less aggressive is that I have, instead of having puts on it, I just a very simple short, because the puts stink. I don't know why. Because you'll go look and the open interest will be like 50,000 contracts, and the bid ask will be like 1.61 by 450. Like, what? So they're not all that bad, but a lot of them are. So never mind. I'm just going to simple, just a short position on FXI. IWM is kind of in the middle of the road. It's not as strong as the diamonds. It's not as weak as the cubes. It's just kind of hanging. And it has been more or less in the same price level for months, at least a couple of months. So it's boring. I'm not touching it. It broke its trend line a while ago, but boy, is it dull. So it's just kind of hanging out in that zone, and there's no particularly discernible pattern. So it's not something I'm really messing with. I did come into the day short XLK, and I got out of that. I got out of XLK, I got out of the cubes. And here we can see the right triangle, which was pierced. We did get below, so we basically got to levels not seen since early May. So the right triangle is complete. On the other hand, it's got kind of a nice little hammer formation there. It might have the makings of a rally. It's kind of at the mercy of earnings today and tomorrow and Thursday. Because as I said on Wednesday and Thursday, you got 4 of the Mag 7 coming out. And even today, the likes of Seagate will get people's attention. So, no position there. Longer term, I mean, it's okay, we're done for the year. No, not at all. I think there's plenty of lower prices to come. But just for the moment, we've had a nice little tumble over the past 6 or 7 trading days. And so that's been fine. Over with the cubes, this one has been weaker than the XLK. This gap held nicely. And this was the gap that was formed last week between Wednesday and Thursday. And so that has not been pierced. And even with our taco event yesterday, had you not known about that, if you just sort of woke up today from Friday and looked, you would have no idea about the latest capitulation with this war, this on again, off again war. Because, what do you have? kind of a strong opening and a bearish engulfing pattern, and down it goes. So it looks bad. So anyway, we have broken below that support. And let me correct myself. I actually I did re-enter. I covered earlier on the cubes, but I do have a short position on that ETF now with a fairly tight stop. And across the board, you might have just heard the bring. I just got stopped out of GLW because either I've covered some items or I really tightened up the stops on them because the fall has been pretty nice. But I don't want to kind of stick around and just see what happens next in some of these cases. But here again, we've got kind of a little hammer right there. So from a candlestick perspective, if we rally for whatever reason, I think this gap is a very strong level of resistance. I would really not want to see us that high again. It'd be nice to just stay below this broken pattern. But I like to look at, kind of worst case scenarios. SMH has been quite the journey. I've been messing around with this for many, many weeks. Many weeks ago, I had $600 puts, January puts, and I forgot where I got them exactly, but they did not do well. The market kept going up and up and up and up, and I finally just threw my hands up because they were so out of the money. I just didn't want to see them anymore. I also don't want to see how much they're worth now because I guarantee that if I just crossed my arms and did nothing, the profit from those would have dwarfed whatever I made on the subsequent SMH options I was trading. But it still worked out all right. We have, as of today, completed a very nice top on this. And listen, all this talk about bounce, 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 maybe not. It is within the realm of possibility that today's high is just a feeble attempt to get back into the pattern and it'll fail. It is absolutely possible that we fall tomorrow and there's no looking back, at which case I will scream once more into my pillow about anything that I covered. But yeah, it's a hammer. That's darling. Candlesticks, they're one day. They are not that potent. It's just another little tidbit of the toolkit to look at. They're a little bit helpful short term, but I must emphasize that it's not like, well, even Tim the perma bear is out. There's no sellers left. No, we could just go plunging from here. I'm simply moving my bets away from tech to some degree into non-tech areas. So let's keep an eye on this level. And I'm going to do this the honor of changing the color on this. Let's just make this something different because it's no longer support. We've cut below there. So we'll see what happens next with that. But that's been a nice completed pattern. As you can see, a beautiful top like so. Just before we move off this chart, I also want to emphasize that this was a pretty nice top too. And it didn't mean squat. As you can see, we pushed back and went roaring higher. My supposition is that this was the last final dramatic phase of the AI bubble, but pattern or no pattern, you can have violations of what appear to be really good setups. And so if this goes zipping back into this tomorrow and keeps tromping higher, we could be back in this situation right here. It could be a complete fake out. So that's another reason I'm really just trimming risk there. But, it's been a nice ride for the past few weeks. Some of these individual items that I either continue to be short or was short and took profits on are things like AMD, which even now, and I say even because we have been rallying pretty sharply for most of the trading day. AMD is down over 6%. We have AXTI, and just look at this thing. It's just been slipping and sliding for literally months at this point. It was not that long ago. This thing was a superstar. It look at this. This is amazing. Up, it was like a penny stock, and it gets up to the triple digits. Thousands and thousands of percent. So the unwinding is taking place here, but this is the exact sort of thing where it's like, okay, thank you. For now, I think that's enough. But AXTI down today again, which has been very persistent doing for months, which you don't often see. The ting we heard earlier was me being stopped out of this one. Corning GLW, which I believe reported either last night or this morning. And so in this instance, we've got a gap there. And if I were being more patient, I'd probably just have set my stop to that, just about that gap. But I really want to play things very, very conservative, relatively speaking. And so no longer in that, I'll have to update my portfolio after the show. But the profit on that, we've had a really nice fall on that. And just sometimes you got to say that's enough is enough. Micron, MU, very pretty. We've got a beautiful head and shoulder set up here. We have pierced it a little bit, so it's completed, but sort of mentally I have an asterisk there because it's probably going to close within the pattern. What we would prefer to see is a close beneath the pattern. So continuing to monitor this. I'm still short this. It's a very pretty pattern, but we can't really breathe too easy until it closes under that completed pattern. VSH, this is another example of some very dramatic movement, kind of in the vein of AXTI. And this peaked not as long ago, but it was up nearly at 70, and it's lost, over half its value after this petite little top right here. Nice slip lower. And this is the kind of up the elevator, down the escalator. Well, actually, it's just the opposite. Up the escalator, down the elevator. I must say the pace of this unwinding has not been too rapid, but the difference you can see is that the day-to-day drop tends to be a little more dramatic. So what I'm saying here, look at these green bars. They're all sort of modest, but they accrue big profits along the way. But on the way down, it's peppered with these large red bars. So the fear is more dominant than greed over here. And so that's the more rapid unwinding that we're seeing take place. AAOI, as I've mentioned, I'd never even heard of this until a couple of weeks back, but I look at a lot of charts, and I stumbled upon this one, so I shorted this one as well. And this has been a nice drop too. Sienna, I've mentioned this a bunch of times. Once again, we have a whole series of diminishments here. So this is the peak, and then down, range bound for a while, down again, range bound for a short while, and then today, even lower still. I have so many positions. I can't say, if I'm still in these or not in some cases. Like this one, I just, I get up at 5:30 and move as quickly as I can before the morning program to update things. But it's a bit of a blur at this point. That's what stops are for, because I can't keep all this stuff in my head. I'd rather be sort of on autopilot. One area, one sector that's been especially weak and especially profitable on the short side, although it definitely left lots of money on the table, is storage. And I've talked about storage a lot because this was a white hot sector for a while, but let's see what's doing now. Western Digital, WDC, big fall on this, but here again, we're seeing tons of these hammers. And what I mean by hammers, a little bitty body there and this long shadow beneath it. That sometimes is a important bottom marker. But here's the peak up at June 13, and we've stumbled on this from 800 to almost half that level. STX, this was the one I was bemoaning, and I believe they report after the close today. I had I'd gone into a long put position and sold it yesterday for a good profit, but it got a lot gooder today as it fell triple digits earlier on. So I have a small short position just to kind of be in the game still, but nowhere near as risky or as potentially profitable as the puts. This is a really interesting one. SNDK. This was the hottest stock on the planet just last month. This had gone up just sensationally from, just last May. It was, $20 or something, and it got up into the thousands of dollars. But it's been very rapidly unwinding. This was, as we look backwards, this was kind of an interesting key, this island reversal gap right here. And we peaked at around 2,400-ish. And we could be in the triple digits on this before long at this rate, but we've lost over half of the price of this in a quite short amount of time. So yeah, you get the idea. A lot of big drops going, but the risk is going up for anybody just hanging on to those shorts because it's getting very stretched to the downside. But it's been a really fun run, got to say. The pattern on this probably is more like that. So, I'll be watching with great interest as far as STX this afternoon. Changing gears a bit, looking at some commodity stuff. Precious metals continue to be weak-ish. I'll just say it again, long term, I'm very bullish on them, but it could be weeks, maybe even months before there's a really meaningful bottom. The topping patterns on this are large and well-formed. So miners and gold and silver, I'm staying away from. Bitcoin, it's still going okay. I am still short this, less than I was. This was another area where I lightened up this morning. It's been surprisingly robust. It's nice that it's down almost 2% on IBIT, but that's not that impressive for something this typically volatile. But I'm giving it some time. But as I say, I have lightened up on that to some degree. Crude oil has had 3 big red bars in a row. And we are reaching the bottom of this right triangle. And maybe you're going to find some support here. This, of course, is totally at the mercy of what happens with Iran. I continue to take no energy positions in either direction because all of trading is risky, but this is really infused with a level of risk and surprise that just doesn't appeal to me. Like what's the next headline? So, but as I've said before, my dumb guess is that in a month it'll be a lot higher than it is right now, but I'm not putting my money where my mouth is on that. Here's XLE. Another good example of candlestick, nice little shooting star there, and another one the day after, and then down we go. But it's messy. XOP, XLE, all that stuff's quite messy. Another item, speaking of energy, which is reporting tonight, is B, which is Bloom Energy. This is another one I was short, and I can tell you I am out of this one. That one I can remember. I covered this one earlier today for a couple of reasons. One, this chart has not had a fantastic history of follow-through. We can look at prior instances of topping patterns. This didn't amount to squat. This didn't amount to squat. This one, yeah, we got some squat. But it's fallen a lot. There are earnings tonight, and it was very profitable. I think I made a 28% profit on the position in a pretty short amount of time. So it's like, thank you, B. See you later. So if it would rally back to that pattern, great, but no position. But I'll be mildly interested to see what it does afterward. It's just really battered to the downside. SpaceX, God bless it, finally a nice green bar. This is the best green bar, just eyeballing that we've seen since just maybe the second day of the IPO. We have pushed above this downtrend. Neat, that's good. So that's the beatings have ceased for now. On an intraday basis, we did have a new low on this, but just a reminder, in a week from today, after the close, their first earnings report. But yeah, the poor fella, he needed some buyers. So that's punched through that descending trend line. Maybe that's enough selling for now. Just to close things up, the ES. This is the key. We've all had our fun with the NQ. We've all had our fun with all the tech stocks. That was a great grand tumble. This has not broken yet. It may not break. It's going to take some surprising earnings to give it enough force to punch through that. But this level right here has served as support for some weeks now. And it's going to take a failure of that level to allow us the opportunity to work lower within this broader range. But I am kind of betting that way. As I said earlier, I've got an increasing number of SPY January puts. So, hey, nailed it to the second. Bang, 1240 right now. So that's it for me. And hope you're doing all right. Hope the charts are helping. And I will, of course, see you here tomorrow morning and afternoon. So good luck after the close today. Some of you are definitely on the edge of your seats, I'm sure. So I'll see you later. Bye-bye.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We're back. You're watching Tasty Live. This is the last call. I'm your host, Chris Vecchio. Today, we're doing things a little bit different. We have a special guest co-host. You may have seen him on Bloomberg or CNBC all those years. He's now over at Apostrophe Capital Research. Corey Johnson, welcome to Tasty Live. Thanks for coming on.
We're going with epistrophe, and that's fine. You say tomato, I say tomato. But yeah, Apostrophe Capital Research, where I write research about technology companies, do a lot of in-depth research, meeting with a lot of companies and trying to find out what's actually happening. And of course, I'm a big believer that the things that companies do are what ultimately propel the stocks.
Well, we're looking at this market today, getting ready for these big four tech earnings over the next 2 days. And I'm looking at, most traded names here across the board for retail: Palantir and NVIDIA, SpaceX, Micron, SanDisk, AMD, Microsoft, the usual suspects, as it were. When you think about how retail traders are engaging in the market right now with what your research is showing, where's the crowd actually right? Or have they been crowding into a position that's going to be really wrong here?
I've been thinking about this a lot, and I haven't finished my research around this. Pure market related stuff is not really the place where I spend my time doing research, and yet it's something obviously I think about and it impacts my world quite a bit, not the least of which my investments quite a bit. I think research, it used to be that the retail audience was thought to be the dumb money, that fools rush in while the pros are getting out. And I think there's certainly cases of that. And I think we've seen certain companies whose fundamentals, the meme stocks to be sure, but we've also seen companies whose fundamentals just aren't great, but the belief is strong, usually companies that run by Elon Musk, one of them you just mentioned. And while we do see those things, I think retail investors are doing some good, hard work and trying to understand the companies they're investing in.
So one of the key lines from your recent research note was that AI is sold out, not slowing down. I'm looking at a name like SMH just as a catch-all for the semiconductor space, and it's down 20% from its year-to-date highs just a few weeks back right now. What's the strongest evidence that AI spending is still accelerating and that maybe investors are overreacting to potential margin compression?
So so that's not a company I'm covering, so I won't offer a specific, and I don't give investment advice anyway. But when I listen to these conference calls, and I listen to conference calls, I model at the companies. I'm my Excel machine over to my left side. I keep pointing it as if you could see it is smoking this time of year, when I've got so many models up and running, and really trying to understand not just the top line or even the balance sheet of the cash flow statement, but really understand the segments, understand what's being sold, how much companies are able to charge for it, what it costs them to make that as well. And what we see across the board is that any company that is supplying to data centers is saying things like, we heard it from Corning this morning, where there is so much noise around the sector about concerns about growth. And we can enumerate some of these things. Why don't we, since we've got a minute, which is what I love about doing this longer conversation. We've got NIMBY concerns. I don't want a data center in my backyard. I don't want data centers screwing up my power grid. We've got some politicians saying we want to figure this out, like New York State saying we want to figure this out before we build.
That's a big deal in my neck of the woods right now.
Yeah, where are you exactly?
Right near Indian Point. So there's all this conversation about restarting Indian Point to help supply.
Indian Point on Long Island. Yeah.
Up just north of Westchester on the Hudson River.
Oh, my bad. Okay, yeah. So sorry, I'm thinking of what was the nuclear power plant out in Long Island, shut down so many years ago, Shoreham or something. Anyway, in any case, is that right? So, concerns about ways to get power, and people politically upset with some of the ideas around data centers and data center build out. We also see some concern about whether Chinese models that may or may not be using NVIDIA chips and U.S. Component makers if GLM 5.2 is really successful, or Kimi 2.0, does that mean we're not going to have a big build out by OpenAI and that Oracle won't make their numbers? Right? We see all that in the stock market right now. But I will tell you that every single company I've spoken with in the last 2 weeks is saying we don't see it. All of our customers are spending as much as they can. All of our customers are raising estimates. We are raising estimates. We saw it with Corning this morning. We saw it with Comfort Systems, a company that I cover. Stock ticker is FIX.
Actually, yeah.
Well, we can go there next because it's maybe the best investment I've ever made. I don't give investment advice. I'm not telling them to buy it or sell it or anything else. I'm just telling you that I bought this stock back in 2020, and stock's up over 3,000% since then. And on the conference call, the CEO, Brian Long, who's terrific. It's an HVAC, right? An electrical company. They've got a bunch of guys who wear big belts with lots of tools on them, and they go around fixing heating and ventilation systems as well as doing electrical work. Now, 6 years ago, they were doing a lot of work helping companies during the pandemic update their ventilation systems and maybe upgrade their buildings when people weren't in those buildings. Now, over 50% of their business is building data centers. I'm sure someday they'll be back to building schools as some of their largest, or manufacturing their second largest sector. But they are so busy building data centers. And CEO Brian Lane, with his thick Boston accent, even though the company's based in Houston, said that things are not, I won't do the accent, but he says that things are not slowing down. The customers want as much capacity as to give them. They have their pick of projects, and they're trying to pick the projects they can complete the best and the fastest with the highest margins. It is a seller's market if you're selling components or services into data centers. And I think that the investors are, frankly, probably being handed some opportunities right now in the market when you see things. I mean, I just, the Corning conference call, again, I'm really struck by it. I'm long the stock. Again, it's not investment advice. I'm just want you to know what my bias is. Sure. My bias is I want to feel like I was right when I was buying the stock at $50, $60 a share. And, it's well up from then. But when I heard the call today, what I heard was, we just updated our guidance in May. We didn't feel like we should do it again. It didn't say we're backing off our numbers. It sounded to me like we probably could have raised them, but we didn't. Now, they didn't raise them, to be sure, and the market's beat up the stock down 15% on that for a very big company. But I hear companies saying, we've got the orders. We've got a shortage of supply. We're trying to build capacity right now. And that's got to be good news for these stocks ultimately.
So let's go back to comfort systems for a second, because it's mechanical, electrical, HVAC, you say data center build out. Why is a company like Comfort Systems, I have it up here on the screen here, ticker FIX, which is quite frankly brilliant. Why is looking at a company like Comfort Systems a better signal than maybe a press release from a hyperscaler like a Meta?
You know, they don't have any incentive to hype AI. I mean, they've certainly got the incentive to hype their stock. I guess any company does. I've known this company for over 20 years. I worked at a hedge fund called Canal Capital, and we had a significant position in this company way back then. So I've been following this company for a very long time. I know what they do. I know the management. I also know that this is one of the only times you can find a roll-up that's actually a success, a company that acquires other companies as a way of growing their business consistently and doesn't screw it up. I think the only one I've ever seen like this is probably Cisco. Everybody else, if it's a roll-up, there's a problem waiting. It's just what companies do. They buy other companies hide their problems, and suddenly they've got a festering issue. Comfort Systems hasn't really had that. And so I know this business. And I was interested in the business just because it looked like a good, formerly cheap stock. And it certainly doesn't look cheap right now. But it was a company that does what they say they're going to do. They get their RPOs are typically 9 to 18 months, not 24 months to 36 months to 5 years. And so they get their business done and they do it well. They throw off free cash flow in the process, sometimes a lot more free cash flow than cash from operations. All companies want to be conservative on some level. All companies have to be optimists in order to be in business. But I think what we've seen from this company is that their conservatism in financial projections, which is really important when it comes to contracting, has been borne out by the way they've run the business for decades. So, which is to say, in a long way, I trust them. And that's a very dangerous statement to make in the markets. But that's where I am when I try to analyze what's going on with Comfort Systems. Watching them for many years, understanding their business, understanding that they understand their business, and they've built up a level of trust with me over decades, so that over the last 6 years of owning the stock, I think they're going to do what they say they're going to do.
So we have earnings after the bell here today. Clack, STX, these are chip names, of course. Your note points to Microsoft, Meta, Amazon, and Alphabet as the key hyperscaler tests, which I think we're all in agreement on here. Which one has the cleanest story right now? Because every time we get one of these announcements that free cash flow is going negative or it's going to be negative, the stocks are getting pummeled. It doesn't really matter what the earnings are. Google had $9.11 in EPS versus $2.91 expected and still fell 7% the next day. Yeah,
I love it when tech investors are suddenly interested in free cash flow. I don't think most tech investors can figure out where free cash flow is.
That was never in the CFA Institute study materials.
It's not in the income statement. It's in the cash flow statement, and it's not in the cash flow statement. It's a number you got to come up with, and I've always been of the belief that free cash flow is calculated incorrectly because you should figure in acquisitions for companies that regularly do the acquisitions. At least that's how I do it when I do my models. But at least for serial acquirers like Comfort Systems. I think that, look, the purest play you mentioned is a small one, is KLAC, now called KLA, stock ticker KLAC, KLA Temcor it was once called. It is a smaller builder of the systems of semiconductor equipment, semiconductor tests in particular. Now, if you think about the order of events, right, if we're going to use AI to in the case of the Johnson household, kids pretending to do their homework or even final exams. Can't believe I've got kids home for the summer, including one in summer school. In any case, whether if you're using the AI, then you're using the software written on top of the AI, which is written on top of the data, which is sitting in a data center somewhere, which somewhere in that data center is operating a semiconductor, or has got networking equipment connecting to a semiconductor, and probably some heating and cooling as well. And then that semiconductor has to be manufactured somewhere. And in order to manufacture it somewhere, you need a silicon wafer in which to do so. So if you think back to the chain of what has to happen first, there has to be a notion of demand at the end, but all the way at the bottom of the chain, you get to semiconductor capital equipment. And if companies, obviously, we look at companies like Applied Materials is one of the great big companies there, domestically. KLA, now called KLA, I gotta get used to saying that. It's only been 10 years they've been calling themselves that. Is a company that is very early into that and very involved in testing semiconductor wafers as well as semiconductors as well. I'm looking to that as a very pure play to tell us what is demand like at the semiconductor level. Because when we're talking about things not just like GPUs, but to things, chips as dumb as memory. And much love for my friends at Micron and SK Hynix and Samsung. Micron, those chips are dumb compared to what chips from Intel and AMD and NVIDIA do. And so if we're talking about all layers of semiconductors, all types of semiconductors doing very, very well and being impacted by the data center, we'll see it clearly in the KLA results. Now, they could lose market share, but if they put up a nice print, I think it's going to show us yet again, like we saw all last week and all already this week, there is huge demand to build data centers, and it's not slowing down.
So we're going to the final 4 or 5 minutes of the trade here for today. The earnings after hours, Visa, KLA, CLAC, STX, really taking a side show for tomorrow and what's coming up on Thursday. So the market's giving us a handful of these attention-grabbing AI names. Yeah. And your research note is saying the infrastructure cycle is still accelerating. So if you're building out an AI watch list from here, right, for folks who are looking for these, not maybe the top line, but maybe the second derivative, what are you paying most attention to through this earnings season? Because I know everyone's saying Meta right now, but truly there's got to be more interesting, as you point out here, in the semi-caps.
I mean, I'm not a big cap guy. I mean, I work with these companies. They buy my analysis, and I'm grateful for that. Certainly, they've got more money to spend. But when it comes to investing, I really want to find a place where my research gives me. This is just me. I want to find a place where my research gives me an edge, where I know something the rest of the market hasn't figured out, or I've got a core belief that the rest of the market disagrees with. You can certainly find that in big caps once in a while. And maybe during this sort of summer sell-off that we're seeing, there are some opportunities out there with the big caps. But typically for me, a name like Meta or Amazon or Microsoft, the only one of those stocks I've ever owned is Meta, and that was back when it had a different ticker. So, and that again was I had this notion that whenever Mark Zuckerberg testified before Congress and the stock went down, it was probably a buying signal, and that proved to be the case for a long time. But it was a little too cheeky for me, and advertising based, whatever. There's reasons I don't own that stock. But I think that what I'm looking for, and indeed in writing these notes for Epistrophe, that the notion of what's happened to the big caps is also going to happen to the medium and small caps. And I'm looking for places where I think I've got an opportunity where the stock price is mispriced. And I like, we've got the Meta chart up there right now. I was telling my daughter this morning. I said, I like stock charts that are pointed in that direction. That's where there's an opportunity for me to make money, not when the stock charts are up and to the right. I'm not a momentum guy. I'm looking for some mispriced securities, and I don't know if Meta's mispriced here or not, but I think that these are the moments when you can make a call.
So let's wrap this up. The bull case here perhaps still needs a little bit of an invalidation point, right? If this is a hiccup and not a turnaround.
I don't think it does. I think the doubters are fools right here. I mean, there is just no evidence, and I've got very smart friends on the other side of this. Okay, my friend Ed Zitron's making a great display of himself on X and Twitter, and he's so much fun to read. I disagree with some fundamental notions, though. I believe that AI is useful. I believe we have not seen most of the use cases, just like we didn't see the use cases for our smartphones within the first, couple of years of the iPhone coming out. We couldn't have imagined worlds where there were multi-billion-dollar companies for mobile phones like Uber and Instagram, products that didn't even exist years into the creation of smartphones. I believe that we're going to see things in AI that are the same. I know from the companies that I talked to, I know I was talking to some people who are working with Anthropic just right before we went on the air here. There is a tremendous enthusiasm to spend a lot of money to change business using these tools. I think the pricing will get worked out here. Might be down from where we are, but I think that the ultimate spend levels will be up. I think that's bullish, and we're hearing it. You don't have to believe me. What do I know? I just go out and talk to people and listen to conference calls and do some math. And everything I look at that is hard evidence is showing me that AI and data center buildouts are going to be greater in the future than they are right now.
So give me one of those 4 names that are coming up Wednesday, Thursday here. We got 30 seconds left. Which is the one that concerns you the most? Which is the one that you think has the easiest path to
look, Amazon. So Amazon's been sprinkling money all over the ecosystem, just like NVIDIA has, but in ways that haven't been getting as much attention. Amazon is the leading provider of data center services with Amazon Web Services. I will be looking at Amazon numbers. We'll be doing a drill down podcast on Amazon numbers this week because I think it's a really important company to follow.
Excellent. Hey, we're done here with the market for today. S&P 500, it slouches off a little bit going into the close, folks. 15 points higher, not really much of a day at all. But the NASDAQ, it's still down nearly 1%. Somewhat of a recovery from being down nearly 2%. No longer 500 points off, just 270. Folks, he's been Corey Johnson. You heard that right. Epistrophe, Capital
Well done.
Research SC. Yes, got it the second time. You've probably seen him on Bloomberg and CNBC. Corey, thanks so much for joining us here. Great information for our traders.
Thanks for having me.
Folks, stick around. Now that we're done here on Last Call, Overtime is up next. See you on the other side of a break.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Stocks have just a weird day. KLA, CLAC, and STX here after hours with Visa. We're going to get to it right away. Joining me today on Overtime, your co-host with Ilya out. You know him, Gus Downing. Hey, Gus.
Good to see you. Happy to be here. A little later than I'm usually on air, but it's gonna be me for the next 2 weeks until Ilya is back from his adventures. So. Better get used to it. We'll have something good going. I know my beard pales in comparison to Ilya's, but I will try to do my best.
No, and listen, I'm gonna make it easy. I'm flying out next week. We're just gonna do it in person. Simple.
Beautiful.
We'll both be done. So I'll see you Monday, Tuesday, Wednesday in Chicago next week. Hey, by the time we get to Chicago next week, this may be a very different looking market. Before we get into the indexes and this rebound that the NASDAQ had today, we just had KLA, CLAC, come out after hours here. It looks like we're getting a little bit of movement. 194, we can go right to those charts. I haven't seen the official earnings release just yet, so it just seems to be a little bit of jostling right now. But aside from KLA, we're going to be looking at STX here after the bell. We're going to be taking a look at Visa as well after the bell, which probably not as important for the AI conversation right now. But Gus, big thing today. This is really all about tech still. S&P 500 is up 0.2%. The Dow Jones is up 1.1%. Even the Russell is up 12 basis points here. Your NASDAQ's off nearly a full 0.1%. All right, it's all semiconductor related. Kospi was down overnight. Semis do rebound off the lows, but they still finished 3.5% lower. Is this all window dressing heading into the big four tech earnings over the next few days? Just people clearing their books out before we hear from Meta, Microsoft, Amazon, Apple? How are you conceptualizing the price action at the start of this week, and how is it influencing your positioning in the second half?
I like your choice of verbiage there. I think window dressing might be apt. I think that we are certainly entering something of a holding pattern. There's large question marks about whether the memory trades are over. And it does feel like people are comfortable taking some capital off the table until the big four give us a better direction moving forward. You mentioned Seagate as well. Seagate doesn't get enough love. Seagate and Western Digital just as good as SanDisk and Micron. I don't know why nobody ever talks about them, but particularly interested in Seagate and how it responds, because this collapse isn't quite the word, but aggressive drawdown that we're seeing in the memory space is really remarkable.
It's very possible that Seagate earnings just came out here, given that little bump in the stock from about 748 to 784 here. Options were applying about a 10% move in either direction, so that does put your range for the day. We can just go to the 0 DTEs here. What are we looking at? 645 all the way up to 855. So getting a little bit of movement up and inside so far. I'm waiting for the official numbers here, and I have not seen them for STX or for our friends. Oh, and nope, that's CoStar Group. That's not the ticker I'm looking for. So we keep waiting, Gus. Are you worried at all tomorrow for this confluence of event risk, a Fed meeting, and then hyperscaler earnings after hours?
Slightly. The Fed meeting itself, I would say I'm much more interested in the attitude than the content, so to speak. I'm just more interested to get more from Warsh and kind of see if we continue to establish a precedent for how Fed meetings look under his leadership. But yeah, as it pertains to what we have going off after hours, it certainly does scare me a little bit. I don't know. It's just going to be so strange because both of those things are usually things where I would say, I'm going to sit on my hands until after this happens. But if I do that tomorrow, it's going to be the whole day. So I'll have to pick my shots carefully. But it is certainly a scary environment and could be whipsaw action if these go in different directions.
Speaking of whipsaw, here's your Seagate earnings, 571 versus 509 expected, so beat by 12%. Revenues came in above board, 3.629 billion versus 3.49, so that's a 4% beat there. That means EPS is up 120% year over year, and revenues are up 48% year over year. Stock is pinned, of course, because that's just the name of the game for these tech stock these days. Bloom Energy, likewise, has just come out. I know some folks around here were trading it. Did I get filled on the position? I did not get filled earlier. That's a real bummer. But anyway, we're now looking at a bit of a bounce, which should be delightful for Liz. 78 cents of earnings versus 41 cents expected. 1.065 billion of revs versus 827.02 million. So that's a beat of 90% on EPS, a beat of 29% on revs. EPS is up a cool 680% year over year, which is pretty nice. Revs are up 165% year over year. What were we looking at going into this report today for those 3 DTEs? Yeah, it was about a $40 move, so sitting out at 166 or change near the close, maybe up near 205. We're making progress. Gus, did you have any action in any of these names today? After hours, Bloom, Visa,
No.
STX, Clock?
No, nothing for me today. I might still have some adjacent exposure in the memory space. No, I've since liquidated my SanDisk. I got burned 4 times on SanDisk. I can't get the direction right on that thing. It's become a recurring joke on Risk and Reward that all you have to do is fade my memory trades and you'll be a very rich man. So where I have no exposure there. And yeah, the broader financial space, I'm really just kind of hesitant. It's been beloved by government recently, which is interesting. The Congress not hesitating to load up on some of these credit card providers, some of these banks. So definitely something that's on my radar is more of a long-term vehicle, but I had no inclination to get involved into these earnings.
You're making me think of something. When did Mike Johnson say that he's been talking to the credit card companies and everything is going to be all right? Or is that Kevin Hassett? I think that was Kevin Hassett. Yeah, that was Kevin Hassett. I want to get a date for this because you mentioned these credit cards and you just got the May 23rd. May 23rd. Where are you? May 23rd. Financials have had a pretty good run since May 23rd. They're up about 10%.
Yeah, that's about the timeline when I saw Congress start loading these things as well. It was late spring, early summer. We all of a sudden started to see lots of purchasing in. And I will add as well, it was a rotation out of tech for all of these Congress people and into the bank stocks. So I don't know if that's just fortunate foresight, but it seems like the right move.
I can't believe Congress owns so many memory stocks that it forced SMH down 20% from the high. That's nuts. But hey, we've seen weirder things in the market these days. All right, so NASDAQ here after hours is slotching a little bit more in the wake of these earnings, down 1.04%, 27,922. Gus, I got this bad feeling about tomorrow. And maybe it's because whenever Ilya's not here, I tend to be a little bit more bearish to keep myself in line. But I can envision a world where, the Fed, 30% chance of a hike tomorrow. Citadel's been circulating this research note that the Fed should hike tomorrow. It would be a first. The first time that the Fed's hiked when the market hasn't priced in north of a 55% chance in its history. So it would catch a lot of people off guard. But let's just paint a picture here, Gus. We get a Fed that tells us, got to do a lot more rate hikes, they're coming. So cost of money's going up. The hyperscalers come out, they guide higher on CapEx, telling us that they have to spend more money. And by the way, that money that they're spending costs more now. I could see tomorrow becoming a really ugly afternoon for the NASDAQ. So the one way that I'm just kind of hedging off my exposure here, just in case, I went down to the expected move tomorrow, 366 points. And I constructed this put butterfly down here, which is risking like $10 to make 490 when I put it on. Easily scalable, in my view. Definitely something that I think folks should have in the back of their mind, that type of convexivity in terms of downside protection. And an IVR of 77 right now in the NASDAQ, it's actually not a bad environment to do something like this, out of the money butterfly, if you will. So that's how I'm thinking of tomorrow. What's the worst case scenario where if the markets crap the bed and the rest of my book turns against me, what could I put on today that will at least insulate me somewhat at a very, very low cost? So this is what I decided on.
Yeah, I like it. I think that's an intuitive way to think about it, and particularly if you already have long or at least neutral bias happening elsewhere, some downside protection is well worth it. I should probably get involved in something similar. I certainly do have some long bias happening still. But yeah, I think I align with your view in that I think there's a better chance that things go poorly than that things go well. Just kind of the environment that we've been in. I think it's going to be hard. I would say I agree more that we're going to see hyperscalers report increased CapEx and we're going to see all of the issues that come with that into tomorrow afternoon. I'm not expecting a hike. I'm one of the 70% of people who would be caught off guard if we get a hike tomorrow, but I wouldn't rule it out of the equation either. We have no rule. We have no read on Warsh yet. I think it's a very real possibility. I've gotten the vibe that he seems like a more direct, I don't know if cutthroat is the word, but blunt person at the helm here, and so I don't think that he himself would hesitate to hike rates if they think that that's the right thing to do. And if Citadel's backing it, there's obviously legitimate reasons to believe that. So that would kind of be the nightmare scenario. I think it's more we get the nothing burger at the Fed meeting tomorrow, and then hyperscalers are going to say, we spent too much money, and everybody's going to react negatively to that in the afternoon. That seems to be a trend. It was cool to spend money like 3 months ago, but now it's not cool to spend money anymore. You got to stay with the times.
We spent too much money too quickly, right? Like we were begging for money, we didn't get the money, and now we got too much of it. So
yeah, it's
NASDAQ here.
Mm-hmm. Oh, I was just going to say that's one of the parallels I'll draw between right now and the dot-com bubble is the CapEx and trying to spend to make yourself ready for a reality that might come to fruition 20 years from now, but is not going to come to fruition by next quarter when you have to put these things on your balance sheet. So the elevated CapEx, I'm not surprised that the market is starting to react a little bit negatively, and I'm interested to see how companies react back to that fact.
I'm just curious to see if, because we know going into the Warsh term that you had a bunch of Fed officials who not necessarily in protest to Powell, but kind of just lay out the line for Warsh. We're going to be independent thinkers, and if the person appointing you wants lower interest rates, we're just not going to march to that drumbeat just because you're the new Fed chair. I'm curious because Warsh set up these task force, which to me it's like, why is the Fed hiring a task force on inflation when they're supposed to be the nation's task force on inflation? Like that's supposed to be
that is kind of the whole point, yes.
It's really like kind of the whole point. What if the rest of the FOMC rebels against Warsh and says, no, we need to raise rates? What does that do for Fed credibility? That is one of the outside conversation pieces that are going on around here because all the people that Warsh needs to get along with, hasn't he been verbally accosting them in the media the past few years saying that they're idiots who don't know how to do policy rate?
Oh, yes. Yes. It is. Yeah, it's why I allude to his blunt nature. He clearly doesn't mind cracking some skulls if he has to.
No, he doesn't. I don't know how you're looking at the market right now, but the way that I've just been like seeing things, trading things, it's basically what's working for me right now is the AI stuff versus the non-AI stuff. If it's non-AI, we'll call it like consumer staples, for example, here today. XLP, I have a smattering of exposure across the board in staples names. It's done fine. The short put spread's there. There's not a ton of vol, but these markets have moved up as capital has rotated away from tech. So hunky-dory. The tech stuff, though, is just getting slammed. It doesn't matter if I'm going to the expected move or the one standard deviation. It feels like it's getting tested almost immediately. 60, 70% probability of profit tested within a few days. Are you finding that same kind of perhaps grind frustration in how certain positions are working and others are just kind of stuck in this whirlpool?
Yes. Yes, absolutely. Yeah. And especially in terms of, things that I should say, the way that I'm choosing to manage it is I've just become much more aggressive with my exits. I'm not trying to squeeze the last 50% of profit out of things. I'm just taking things off as soon as they look good enough, because the more frustrating part to me has been the way that winners will have the bottom just fall out, in days or some cases even hours. I have an SMH, basically a FOMO position at this point. FOMO I wish I would have exited, but I have the 570, 575 short put vertical in SMH, and you look at this and you say, oh, well, this is $530 now. You must never have been close, and that's not the case at all. When I left this office on Thursday to go on vacation, this thing was looking great. I thought this was going to get home for sure. Now suddenly I'm caught holding the bag with 3 days left, and 575 feels very far out of the equation. So there's been many such cases like that for me, and I'm just learning from that as I go, and just being more careful with taking things off as soon as the exit looks attractive, not trying to drag things out too far. And in terms of, go ahead, you got it.
Mm-hmm. So I don't know if you caught that Helene Meisler interview I did today at noon Eastern, 11 Central here on the network. We were talking through the conditions for like panic capitulation versus just orderly bearish decline. Yesterday was the largest volume day in semiconductors ever. After we had that pretty big soft, and obviously there was a little bit of fall through to the downside today, but not during U.S. hours. We gapped open lower after what happened in Korea. And then U.S. markets by the end of the close, what did we open at here officially? We opened 531.65. We closed at 529.13. That's nothing for semis during the U.S. hour. Do you find yourself looking at bottom picking opportunities yet? I've heard from a lot of smart folks recently that are thinking this whole decline in semiconductors is basically the result of leveraged traders abroad who are just getting taken out to the woodshed right now and are being forced to de-risk.
Sure. I would say it's started to cross my mind. I haven't taken any of those shots yet, though. Particularly in the midst of this drawdown. And when you're talking about, pretty much all of these semi companies, and particularly, well, actually not so much the memory names, but when we get a run like what we saw in April through, the middle of June when we topped out and started this, the valuations always get a little bit inflated for my liking, and you can sustain those for a long time, as you and I have discussed before. I believe Google is the classic example of a company that managed to sustain a ridiculous forward PE ratio for years and years until their valuation just caught up. But
because when I started working, Zero Hedge would have an article almost weekly about how Amazon's 1,800 price to sales ratio or whatever was unsustainable.
Yeah. And
weekly.
Yes, and as has been proven, it is doable in some niche cases, but not every one of these semi companies can be Amazon. There is simply not enough dollars for it to happen. And so because of that, when the air starts to come out like this, I'm not trying to perfectly time the bottom. I'm willing to sacrifice, $50, $100 notional, whatever it may be, to find a slightly more confident entry. Because, I don't know, SanDisk would be a good example of a company that I have done this incorrectly with. But I bought SanDisk off the dip at something like 1,700, 1,725-ish. After we got those first couple of red candles, thinking, I think this is temporary. This run in memory is really real. The PE ratios aren't even that bad in some of these memory companies. I think we'll get a bounce. And then all of a sudden we just, because of how aggressively these things can move, the air comes out of it immediately. That's one of those ones that, similar to what you were talking about, where it's like a 60% probability of profit in 2 days later. I'm not, I'm in the money and getting tested. So I'm trying to proceed with an abundance of caution, wait for an engulfing green or something that gives me some shred of confidence that we might be at the bottom, rather than trying to perfectly time this and steal those extra $100 back or whatever it may be. And as it pertains to the broader market in general, I really, if we take a look at SPX or NASDAQ or whatever, it's, this feels very, very, very similar to what we experienced October of last year through March of this year, where we just get a holding pattern. It does, and we get this big run up. It's actually the exact same thing, even date wise. April lows, giant run up to the highs, and then stagnation. That's what it feels like. And in October through March, it was 7,000 that we were testing. This time, SPX, it's something more like 7,600 that we're testing. But it just feels like we're entering a similar one of these, you got to show me, what have you done for me lately kind of phases in the broader market. So I'm attacking everything with a neutral angle, and it goes back to my previous point about being aggressive with my exits, not being afraid to get out of things for a profit, because if we are on a channel, I know we can only be directional for so long. So I'll take the wins where they come.
That's an interesting price allegory, by the way. So you just said it reminded you of October through December of last year, or March. So I just took the price copy tool over on TradingView and just dragged it over to where we are right now. It's that yellow line. Feels pretty similar so far.
Yes, absolutely.
Good call out.
Yeah, I have iron condors on in SPX right now for the next month. Just sort of expecting us to continue to stay range bound here, and I think I mean it's inevitable that a breakout in one direction or the other will come sometime. But it just feels like one of these times where it feels so scary and so turbulent, like all these things are happening, but really we never go anywhere. And I think there could be months more of this left in store.
It's interesting that you point that out while we're here, and I have this up. We can just go to Core 1M, just flash it. It's only 7.87, so, the market's moving. A lot of things are moving idiosyncratically beneath the surface here. Speaking of which, the thing that paints the tail on that most explicitly is RSP here today. No one trades the equal-weighted S&P 500 seriously. I mean, people are trading ES, they're trading SPY, they're trading SPX. No one is trading RSP options the way they're trading SPY SPX options, right? This to me is one of the more encouraging charts out there, right? If money was leaving the stock market, all stocks would be down. It's rotating out of tech. The big mega cap tech names, which when you look at the market cap weighted indexes, they make up most of it. But when you strip that back and you just go to equal weighted, new all-time highs.
Yeah,
Gus.
Yeah, precisely. It's all exactly like you said. I mean, it's all just cyclical. We're seeing outflows of those that are heavily weighted and inflows into a lot of these smaller, more adjacent fringe names, and ultimately nothing's really changing when it all shakes out.
So Visa earnings likewise are out after hours here. This is one of the positions that we were filled on today, and we were able to get a trade in. 332 in EPS versus 323 expected. We're looking at 11.633 billion versus 11.4 billion. Expected, so it's a beat by 3% on EPS, 2% on the revenues there. That's up 11% year over year on EPS and 14% year over year on the revenues. Good news, though, because this is a non-AI name. And so this thesis that myself, Jermal, Mike, Liz were kicking around today was if it's an AI name, chances are it can move outside the expected move. What we've seen here so far over the past week, if it's not an AI name, it could be an up move, it could be a down move, but it's been staying within the expected move. And so, Gus, we did the 377.5, 380, 352.5, 350 short iron condor here. The stock closed at 366.99, is trading at 361.25. So at 3 days to expiration, I mean, if this gets pinned here going into tomorrow, this is fine. This is going to work out great. We can flip this off, take this profit, move on to the next earnings trade.
Yeah, that's a great way to attack it, and I think that's an astute observation as well. I had never really verbalized that, but that absolutely is what we've been seeing. It feels like only the tech names, and I mean, to an extent, only the fun tech names, if you will, the memory, the AI
the fun
names,
ones.
Have the propensity to get outside their expected move right now, whereas everything else has been, up inside, down inside, just fairly routine. And I suppose that comes with the nature of the products, right? There's just the AI landscape is just ever changing right now. There's much more surface area for surprises in that space, whereas in the broader market, and particularly as it pertains to financials, it's probably a little bit easier to nail down those estimates.
More and more earnings are coming out. Enphase just came out as well. 46 cents on the nose, right in line with expectations, ENPH. Revenues just beat slightly by 1%, 291.85 versus 290. EPS is down 33% year over year. Revs are down 20%. EPS is down 2% quarter over quarter, while revs are up 3%. No surprise there. This is the company that does my solar panels. They were holding a gun to my head last year, saying, like, if you want those federal tax rebates, you better get the system turned online by December 31st. And granted, we did, and granted, we got a ton of tax rebates. I think we've spent, after last month's bill with I think maybe we're at like $2.90 for electricity this year so far.
Really good.
It's been fantastic. They make great products, but the problem is that all the subsidies to support the business have gone away. And so the demand has just kind of fallen off right now for them. Not that there's an options trade in there, but hey, I think that we had Liz here this morning saying she was fading this. She was also fading things that were happening in Bloom Energy. They closed at 166, back to 188. So a nice little, there are some nice little bounces that are occurring in this after hours here. We were down 1% in the NASDAQ. We're now down by 0.8%. Your S&P is up at 74.68. So if you missed it here, Glenn, just a quick recap. STX beats on their EPS 571 versus 509 expected. Enphase matches. Ford, which I rarely if ever talk about Ford.
First stock
Ford
I ever
also
bought. Ford. Go on.
Mine, Baxter International.
Oh, really?
Was mine.
I'm long some Baxter International right now, actually. That's first time I've ever traded it, but I do have it in the portfolio.
I told my mom I was a very cool kid, so I wanted a Palm Pilot with like the little stylus. And so she's like, yeah, I'm just not buying you a Palm Pilot. You're like 10. But how about this? I want to teach you something about trading and investing and making money. So go through the newspaper, find one of these tickers, and we'll do some research on it. And if I like it, we'll put some money in it. Whatever money the stock makes over the next few months, you get the difference. And you can put that towards your Palm Pilot. It's like, okay, sweet. Sure enough, Baxter International got me a Palm Pilot.
Nice. That's a great story.
So,
yeah, no, I was well after the Palm Pilot, but I know that those were all the rage there for a little while. I actually learned what those were from Chatters on this show, on with Errol one time. I was not aware of the existence.
Do you know what floppy disks are?
Yes, I do. I do, if not only because it's still the save icon on everything.
Please never update that, by the way. All right. So Ford here beats EPS up 42 cents, 35 cents expected. Shares 14.88 up to 16.18, or 14.95, I should say, up to 16.18. Nice. What else did heck came out? Visa, they beat 332 versus 323 expected, but shares have come in a little bit, 361. If you were in on that play that we were talking about earlier with Mike and Jermal and Liz, it looks like this might work out just swimmingly here for today's numbers. Other than that, you did have KLA. They beat at 105 versus 1. That's Clack. They unfortunately are still down here after hours. 5% beat on EPS, not doing much of anything. But the net here, Mr. Gus, that is an S&P 500 that's trading higher. That's a NASDAQ here that's bouncing after hours with volatility just kind of meandering. Let's close the show on that note here, Gus. You get the final word. What do you take of the market sell-off and these gyrations when VIX futures, VXQ, is sitting at 19? When we go to VIX, it's 1821. Is a market complacent here, or is it appropriately measuring the risk because VIX is for the S&P and not the NASDAQ?
I think it's appropriate. I mean, yes, VIX is for the S&P and not the NASDAQ, but just in general, we can't go up forever, right? We get this crazy run from April through the middle of June. We establish new highs. We're still relatively close to those as it pertains to the broader market. So I don't think it's panic time yet. It would scare me if I saw a VIX over 20 right now. I don't feel like that would be particularly justified. I think that this ultimately, to me, is just a consolidation holding pattern as it pertains to the tech name specifically. I think it's a breathing period before another run. And I think we're pretty appropriately pricing in volatility right now.
Gus, you and I are going to convene several times over the next 2 weeks. Ilya's out on vacation. He's actually on my side of the country now. Maybe I'll go bother him.
You're running from him. Coming here.
I guess, honestly, with my son teething, the fact that I get to leave the house and go to a hotel and sleep is crazy.
This is it's just you and me talking voice. That's what we're doing.
Don't let anyone hear out there. Overtime's out of time for today. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Gus Downing, I've been Chris Vecchio. Like, subscribe, join the conversation. Send your questions into research@tastylive.com. Until then, good luck trading. We'll see you tomorrow morning, 8:30 Eastern, 7:30 Central time for the first trades of the day. Have a good night.
Good morning, Tasty Nation. Welcome to the show. It is Tuesday, July 28th, and we've got